Oh, okay. I didn't add something there. All right. So now that I added that, it should be good. Oh, okay. I didn't add something there. All right. So we got audio now. Thank you, Corey. Thanks, Corey. All right. We got less than a minute to go. Less than a minute to go.
They don't. You think it's a continued risk then, this litigation? We're talking about a different, right? Not what they had settled on. Right. Well, they haven't. There's still no settlement agreement. They're fine. Correct. They need 75%. Now, mesothelioma would be included. Yes. Again, these are not ovarian. Right. The last one was also mesothelioma. But I will say, David, you cannot dismiss the existential nature of these big lawsuits because we know not to dismiss asbestos as a company.
Okay, we're open S&P. A little dip there. S&P. Okay, you can see the last crossover was over here at 130. Fang stocks are turning.
Where do you want to start this morning? I'll open the board to you. Sure. Well, I think that we've got to deal with the notion that the market is solidly everything. Then you come in at 334, the futures are down big, almost regardless of euro. And you say,
All right, keep an eye on S&P cash for a few minutes.
what's the metric that people are looking at? And I keep thinking that what people are looking at is that the Fed made up its mind that it's going to be higher for longer. Yeah. Just when the data's weakening.
Okay, right out of the gate, we're fading a bit. S&P futures are still pushing higher.
PMI, for instance, when you drill down yesterday, the PMI, it was so weak. And you have to say, all right.
Okay, watching the S&P. Okay, we know S&P is pulling back. Core Scientific got a big crossover. Go out to like the 15-minute. Let's see what that looks like. Starting to see a fade.
Was a sign that the data center is getting weak, and that has been the most important part of our economy. I don't think it is at all. No, Jensen's talking about $6 billion data centers. Yeah. And by the way, let's face it, the countries, the nation states, the titans, whatever you want to call them, that need these things, they can't stop. No, they're not because it's an arms race. They cannot stop. I wouldn't necessarily infer from that Dell report that there's some sort of a slowdown. No, and by the way, I think that Dell had some business with Musk. Well, I talked about that, right? It's funny. You broke the Paramount. Everyone said it's favor. I said nothing because it's kind of to me it's favorite college when I see it. But sure enough, no one talked about the bigger story you broke, which is that Musk may have been the recipient of all these Dell, of all what Dell had, and that they were very aggressive on it. Potentially aggressive on price for a very important customer. Right, and people understand, like in the same way that you're a drug maker and you have to use McKesson.
All right, looking at Dell consolidating.
What happens is that they're the middleman. A lot of people feel they make too much money. Well, Dell was the middleman and chose to eat. It looks like he chose to eat a lot of it. Now, Michael Dell is a terrific guy, and if he thinks that it's a great idea to take little margin to get Musk because of the back end, that's genius.
Okay, watch Dell. Dell might bounce here. Dell's on the move.
Stock is such a buy here. I want to buy it for my trust. But I can't because I talk about it. But that's what's going on. I think there's a false sense that everything is falling apart.
Dell day 3 is basing.
Why aren't we seeing more of a rally? Or are we seeing it in the smaller companies
size, smaller, as in not the giant Mag 7 or
Actually,
whatever
no,
you
we're
want to
still
call.
seeing the baggies. Yesterday we saw Apple's having a move.
Yeah,
That is
well, Apple
real
is now in
generous.
positive territory for the year. It is one of the few names, at least among the
Dell.
mega caps, that is up ever so little, 19 cents.
Okay, so let's take a look at what's actually moving. Nvidia at all-time highs. Thank you, Frano. Apple. What's AMD doing? AMD off a couple of pennies. 25 cents, 30 cents on AMD. First 15 minutes, I'm just taking profits off and reassessing the markets at the moment. See what's moving. SPY still pulling back.
30+% of the market, which is 7 companies.
Right, but I know, but when rates come down, we should be paying more for these. They're not expensive.
New York FANG stock still pulling back.
Enterprise software is emblematic of what happened with GitLab last night. So GitLab does it.
Core Scientific on the most actives.
You got to be in all those. And when you look at GitLab, you say to yourself, no, wait a second. This company reported a very good number, and the stock is down because it's enterprise software. And that Salesforce was so jarring. Now, there's a really good company, ServiceNow. Now, we've had Bill McDermott on. What are you laughing about? We've had Bill McDermott.
Yes, we've had Bill McDermott on many times.
And the stock's down 7% for the year. Even though
Okay, most stocks pulling back a bit at the moment. Bitcoin did make a new day 2 move. Bitcoin.
You came out of school a few years ago and you wanted to be rich. You went into enterprise software. Well, now we know it's private credit. But enterprise software was
Bitcoin day 2 bullish action.
enterprise software was king for like 7 years.
Okay, let's take a look at Bitcoin real quick. Oh, that voice, Kramer. Gosh. Okay, I have to switch channels. Kramer's voice is getting to me. Okay.
Hey there, Oliver. Yes. Taking a look
This guy's about the same, Oliver. Okay. Bitcoin. Bitcoin. You can see intraday, we've got these buy and sell signals. The 1 hour chart moving higher. Okay, let's look at the daily. Daily. All right, so 2 days in a row. A nice little bounce at the moving average. Watching momentum shift. Okay, S&P is starting to bounce. Let me get Woody up and running so I have an audio input. Okay, all of the FANG stocks watching a bid in the FANGs. Snowflake on the move. Snowflake. Snowflake on the move. Tesla bounce. Nvidia headed towards that $1,200 target, just dipped a little bit. So Bitcoin looking pretty good. It's on a buy signal. So let's take a look. Last night I was looking at MicroStrategy as an add to the watch list. MicroStrategy. Keep an eye on MicroStrategy and Carnival Cruise Lines. Carnival following through. CCL. So Carnival, let's see what Carnival looks like. CC. Oh shoot, did I not get filled? Damn it, Janet, I didn't get filled. Carnival. Okay. Oh, I said I was going to wait. That's what it was. Okay, Carnival. Let me go out to July. It's on a buy signal, watching Carnival. Crossover was over here to start the day. We gapped up yesterday, following through. All right, wait for a little dip first, it looks like. Go to the 1 minute. Carnival. Okay, so I'll wait on this one. Carnival looks good though. Yeah, I was saying yesterday that I'd probably take it, but it was late in the day, so I didn't take it. And I added it to the watch list, Carnival Cruise Lines. All right, so Cayman is looking at GameStop. GameStop, a lot of ballyhoo about Roaring Kitty being taken off of E-Trade. I don't think they can do that legally. I mean, I guess they could, but legally, all he did was post his position. How's that different from Citron or any of the big hedge funds that short the crap out of stocks and they tell you that they're short? How's that any different? It's not. So that's pretty wild. Watching Carnival here on the move. Carnival.
Yeah, we have to see if he commented on any of these reports on X.
You know, he's got it.
He tends to, yeah, we know he tends to, keep us updated on a lot of the reports that are out there. I think that Brock obviously is a priority for him, but yeah, the autonomous vehicle.
Carnival looking for continuation. CCL. Carnival. It's continuing. Carnival Cruise Lines.
So you never know with Elon Musk, and
Everyone on the media seem to be obsessed with every move that Elon makes.
But that's like a lifetime in X years. So I would expect too
about
that
15 headlines by then.
if he doesn't respond to
Carnival Cruise Lines. This is a 30-minute chart. You can see the volume. Look at the volume on Carnival.
Elon, cold, both lovers and haters. Okay. All right, let's talk Qualcomm. Let's talk Broadcom real quick. Couple analyst notes out. Yesterday we talked a little bit about how Qualcomm's trying to stay in the mix for the mobile AI implications. What's this analyst saying from Gene Callum?
Well, Qualcomm, of course, has been a beneficiary of AI. It's up more than 40%.
Dell looks like it's trying to turn the corner. Let's see what Dell looks like. Dell. Okay, no signal there on the 30-minute. Let's look at the 5-minute. 5-minute. Okay, it's about to cross over on the 5-minute. Volume looks pretty good on Dell. 5 minutes about to cross. Dell scalpers. Dell looking good. By the way, you can also use this crossover for credit spreads. Put credit spread in this case. If Dell, I got a feeling Dell's going to keep basing. Might trap a few people, but yeah, watching Dell.
Qualcomm's been a huge winner here. Definitely under-discussed, underappreciated. I don't know. I mean, I'm a little bit of a skeptic on this one, but okay. I just
Dell looking for continuation.
has been the data center AI.
All right, looks like shorts covering on Dell.
That there's going to be more consumer product coming, but when I think Qualcomm, I do think about the ultimate user of the mobile devices and the consumer product. We just haven't seen a lot of that. So it seems like a big
Okay, 0-day setup, all down volume leading, 0-day.
Qualcomm is saying that these chips are gonna make laptops useless, basically. I thought that was kind of interesting commentary too.
Yeah, at the Computex conference, they were talking about obviously their Snapdragon chips use ARM designs. They were talking about that ARM-based processors will take more than 50% of the market for Windows-based PCs within the next 5 years. I do think it's important to note, though, this analyst at TD Cowen was
A 0-day setup is bearish at the moment, down volume.
given the AI as a catalyst kind of demand factor, and it's interesting because there's research from IDC that came out and said that they expect
Jolts numbers coming out.
essentially flat in 2023.
All right, Dell.
AMD creating these, they're launching these AI capable PC components, and then also companies like Dell and Lenovo and Acer and HP coming out with
Dell looking for a follow through, and Dell.
really ramping those up.
Yeah.
Despite all of that, sales are expected to be flat.
Yeah, actually, I misspoke. Sorry. What you were
1
saying
minute's
was,
already on a buy signal.
The AI software is going to allow the computer to run so efficiently that you're like not going to need to charge your computer. That you're just going to be able to like carry them like mobile, basically. So okay, all right. Well, that all sounds cool. That all sounds great. Let's see it. Let's see it. Like there's a lot of big expectations kind of getting built in here. A lot of these companies that are on a trailing basis still looking like very average.
Dell going.
If not subpar.
Dell.
I mean, Qualcomm, went through basically all of 2023 with negative revenue growth, contraction in the last 2 quarters.
VIX rolling over. Batman, thank you.
So this is all a game of like this fulcrum, this giant shift, this giant pivot. And I mean, okay, I guess we just trust.
Yeah, I did last night.
If they waited to get bullish until
Happy birthday, Money Magic.
you would say these analysts are being reactive, not proactive.
Fair enough. Well, the other thing too Qualcomm has going for it is it's just way, way cheaper still. So that I can definitely get. That I can sympathize with because it's half of what you're paying for AMD or Nvidia.
Okay, so Dell continues. Dell is pushing higher. There goes Dell. Friday, 136 calls.
Another value play, at least according to Bernstein, pointing out that Broadcom shares trade about 28 times forward earnings, so cheap compared to some of the others that you mentioned as well. Broadcom's up about 18% year to date, up about 64% over the past year, and this Bernstein analyst thinks that it will continue to run higher as well, calling Broadcom one of
All right, I'm looking at buying the Friday 136 calls on Dell on the next dip. Okay, next dip. Happy birthday to you, Mr. Money Magic, and thanks for everything that you do.
This is another one. 83% of analysts have a buy rating on share, so this analyst certainly not in the minority.
Dell looking for continuation. Dell.
In terms of that price target, the highest I saw on the street, 1850. The median, 15.
Okay, let's go see what is working.
By the way, for all the talk about all the great stuff happening, Microsoft and Alphabet laid people off.
Okay, so for right now, you've got an inside day on the New York FANG index. New York FANG. Okay, here's a New York FANG index. You got an inside day. Okay, we need to see this bullish by the end of the day. We got jolts coming out. 10 o'clock, we got durable goods, factory orders, and jolts. Redbook. Redbook was at 855. We got a little push out of that. Okay, in 12 minutes.
data points in terms of headlines out of some of these companies that are
Jolts.
The strongest company, so if they're making layoffs. All right.
In 10 minutes.
growing very fast too.
Durable goods.
They need to divert resources and do stuff maybe arguably like mixed reality and headsets and whatever. All right. Thanks, Caroline. Appreciate it very much. Let's talk some more earnings ahead of us. Shifting over to cloud, HPE, CrowdStrike, going to do some trading. Head of the reports, CrowdStrike has an opportunity to salvage what has been a rough earnings over cloud and cybersecurity.
Okay, New York FANG, we're looking for that to turn. Okay, back to Dell. Taking a little break. All right, so this little dip, I'm watching how this dip trades. Looking for it to get bought in this area. Dell. All right, Tesla. Let's see what Tesla's doing. Tesla. Tesla's still consolidating on the daily. You can see on the right. All right, SPY. Keep an eye on SPY. SPY's still grinding higher. We got jolts in 10 minutes. All right, Bitcoin. It's still early. I generally don't take new trades in the first 30 minutes, just assessing the markets at the moment. Futures just grinding higher. Cores continues to fade. Core Scientific. NVIDIA. NVIDIA trying to hold this level. NVIDIA. Apple had a nice day yesterday. Looking for Apple to do something. Apple starting to turn. So is NVIDIA, and Netflix looks like it could do something. Microsoft, Tesla at the highs of the morning range. Still in a range-bound condition. Tesla. Bitcoin starting to go. Bitcoin. Watch Bitcoin here. Bitcoin rising.
Schwab Network available anytime, anywhere, on any device for free. Schwab Network. All right, we're doing some earnings this week in tech, and after
Our Bitcoin's on the move. Okay, there goes Bitcoin. Netflix. All right, the FANG stocks, not a whole lot going on at the moment. Carnival grinding higher. Carnival.
Yeah, I think they do. I mean, I think this is a good story. You've got a lot of growth. They're obviously somewhat using the AI machine learning narrative, but this seems to be more of a real
Carnival Cruise Lines pushing higher. Day 2. Added to the watch list last night. Actually, was looking at it yesterday at the close. Only had about 30 minutes left to go. Carnival. Also, there goes Chewy. Chewy on the move. Chewy going. Russell's a junkie.
What about cash flow? Markets certainly at least prioritize that to a good degree, more so over the past year.
Yeah, I mean, I think one of the advantages that CrowdStrike has is that
There goes Chewy. Chewy on the move. Chewy popping. Chewy. There goes Chewy. Let's check out Chewy. Chewy. There goes Chewy on the move. Volume. Chewy. RVol. All right, let's see what Chewy's RVol is here. Chewy. RVol is 13 times. RVol 13 times. Normal. Chewy is in play.
If anybody can do it, it seems like it should be them. If anybody can justify a sort of nosebleed valuation, 2.19 times sales is wild.
CCL looks good. Watch Chewy too. Chewy has extreme volume there. All right, so we have a Kumo breakout.
you want to be somewhat cautious here. Your position sizing should be appropriate for the volatility and some of the unknowns within the space.
Teamwork in the room is awesome.
There are a few names that
Love it, love it, love it. Look at Frano.
alongside the growth. So you've got
Nice job there, Frano. Nice job.
growth in a company that can actually turn a profit, unlike a lot of the high growth names.
Chewy 14 times Arbol. All right, so there got to be some shorts covering there too on Chewy. Chewy with some good numbers coming out last week with earnings. Corey mentioning it.
Yeah, I mean that's the problem. I think a lot of people look at is the movement in the stock up nearly 22% so far this year. Options market pricing at about a plus or minus.
Okay, so we got the 10-year falling.
That's about 11%. So implied volatility levels really elevated going into this. So I look at
10-year, whenever you get the 10-year,
days here, maybe
the VIX is a little bit higher. The 10-year dropping, the dollar's at 104.22, trying to bounce. Bear flags on the dollar. MACD is facing lower. We got crude oil at 72. Crude oil is at 72.
just 3 days, taking advantage of the higher implied volatility. Sell the 330 strike call, buy the 330 buy strike call. So short $5 wide call vertical to the upside, and then that's going to help finance the purchase of a put calendar. So I'm going to go out to the June 14th cycle in 10 days if expired. Buy the
Okay, so crude oil, we were looking for a drop below the recent lows. And weekend video told you that if we continue to see this weakness in crude, it would help out the markets. Let's see, crude oil. Let's look at USO. USO. Look at a gap down. USO gapping down. Crude oil gapping down. USO. So we figured that if that happened, we'd lose these lows. We lost the 200-day. USO, crude, lost the 200-day support. Bullish consumers.
If it slides, this takes advantage of that, and you're selling on the calendar the near term.
Yeah,
Put on high
a lot of those moving lower.
buying a lower implied volatility in the June 14th on the put calendar, but then also taking advantage of the high implied volatility in the June 7th on the call side where you sold that call vertical. So you can see here from the risk profile, it takes advantage of a move down.
Still early. Still early.
If it stays near the 310 mark, the 300 strike, you're going to be fine.
Okay, watch Core Z. Core Z getting bought.
I think that makes sense because you don't
Catching a bid. Core Z.
our expectations for companies like already this elevated kind of, you don't want to aim for the moon when you're already
Core Z's catching a bid.
You just don't want the stock to explode above the
Okay, I'll probably start a position in Core Z to track it. Core Z.
very, very, challenging. So, all right. What about HPE, Adam? It's kind of been a little bit of an unsung.
With Mondo. He has it. He has $3 entry.
Still just one that doesn't really get caught in the limelight much. Does any of that change?
Yeah, this is kind of one of those where, high tide raise all ships. But at other end of the spectrum, right, you got PE of roughly 11 times. So cheap relative when you look at this on a PE basis.
All right, watching Core Z.
Cheap for a reason. I think this is a little bit of a stale story.
Core Scientific. Here is Chewy.
This is one of those examples of a company that just
Core Z. CORZ.
use that as a narrative to
Excuse me. You can't just walk through my office, Miss Pussycat. You can't just walk through here and knock my stuff over. Okay?
and that's really just kind of riding the coattails of the rest of tech.
Who do you think you are?
When I look at this is a
Cat's coming in here.
shift away from servers and trying to move to the cloud, trying to use machine
Okay,
learning,
Core Z watching for a follow through.
some advantage in a very, very competitive.
Let's go out. Let's go out to like the 30-minute and see what that looks like. 30-minute. Got a crossover.
declining revenue company, and I don't see that changing anytime soon. There's just nothing from management that's revenue.
Okay, so I don't want to get too sidetracked. Let's see what's actually moving today. Got the office windows open, so you'll hear some jets flying by. Sounds like the flight path is over the golf course again. All right, so today we've got, you can see Old Dominion Freight, ODFL, Carnival on a big move, Carnival, Norwegian, Royal Caribbean, all these look good. All these look good. All right, so let's look at Carnival. Okay, Carnival on the move, Carnival. Royal Caribbean, I think acceleration is still in this one, Royal Caribbean.
Monthly cycle. So just about 17 days till expiration on this one. You got a little bit of time. For every 100 shares stock you buy, you sell one of the 19 strike calls. That's out of the money to the upside. You're paying roughly about a $17 debit for that. So you're buying the shares at a discount of over 4% from the current share price. You get to collect that yield from the dividend because you own the shares. Then also you're collecting yield from that out of the money call.
Yeah, waiting for a good pullback on Dell. All right, good, cool. All right. Rivian showed some activity yesterday. Rivian. All right, so the dollar is dropping hard on what's that? Jolts number, dollar dropping. Dollars dropping on the Jolts number. SPY popping. Futures. Initially, the jobs opening number is seeing a response, and the 10-year dropping. VIX dropping off as well. Okay, April job openings, 8 million, estimated 8.35. Fewer jobs open. Apple bounce, Apple with the bounce. Okay, Tesla with a bounce. Fang stocks, watch those fangs. Chewy, Cocoa Pop. Meta going. Frano. For those of you Meta going. Okay, watch Meta. Meta's on the move here. Okay, a lot of stocks popping on that jobs number. Okay, that's probably just shorts covering on Meta. Look for a follow through. Apple, AMC starting to turn. Here goes Royal Caribbean. Royal Caribbean looks really strong. If you like Carnival, I've been on all of these cruise lines. I like Royal Caribbean the best. They have the best outfit, strongest balance sheet, newest, best ships. Why are you clawing me? You got food right there. Just like a woman, she needs attention. Huh? You need attention? I'm trying to trade here. Go away. All right, S&P, nice move on the S&P. Yesterday, Jason mentioned 532 calls. Oh, you got me pretty good there.
Pretty much a reflection of what we've been hearing about and seeing as far as data suggesting that the economy has been
Okay, there goes AMC. AMC on the move. There goes AMC. I see Cayman's on it already. Cayman's on it. Okay, Carnival. Carnival's working. That dip. Did you? If anybody got a chance to buy that dip, Caribbean, Royal Caribbean, Carnival, Norwegian Cruise Lines, all moving high. What do you want? I'm trading. You can't trade. You're a cat. You can't trade. Okay, Royal Caribbean. Okay, what's the Core Scientific? A lot of stocks are moving. Core Scientific, a little dip there. All right, Carnival. Keep an eye on Carnival. Carnival on the move. Okay, so if you caught the update last night, I told you I'd like to add this to the watch list. Late yesterday evening at 3:30. I was going to take a trade, but I said, you know what? Let me wait. Let me wait until today. So you have to buy the dips back to VWAP. Get bouncing. Catch a bid. That looks good. SPY the 532s for 621. All right, so now we're starting to drift a bit back into price action. 10-year to dollar starting to bounce.
Just below 9 for essentially like October up until last reading in this revision. Off extremely elevated levels of around 10 as far as I remember. No, just definitely a normal back in like
What? I gave you food. There's food right there. Look. Right here. Hmm?
right, and that's a good thing in many ways. The market, in theory, should cheer that on. I mean, tough to sustain those breakneck pieces that we were seeing as far as some of the data and
Carnival.
continuing to top expectations. So, yeah, as I look again at some of the other numbers that just came out, we actually just had factory orders as well, which came in at 0.7 on a month-over-month basis. Orders ex transportation for the month of April at 0.7 also. Now, that was a little bit above expectations. We were looking for 0.4 there. But again, as I look at the numbers from last month, they got revised a little bit lower. Factory orders down 0.7 and the ex-trans to 0.4. So, again, balance, I have to say. Normalization, I think, again, being a good thing for the market. And here's the other thing I have to point to is, actually, now that we turn a little bit south here, we've come off the market really digesting this number still, 52.82 for the S&Ps. However, I mean, this is just the first piece of a lot of data this week as far as jobs reports. So I would agree with you.
SPY looks like a little fade so far. SPY watching closely. It's off $1.50, 0.3%. Well, the dip buyers continue. That started yesterday at around late evening. Carnival's still going. Carnival's up 10% if you bought the dip.
Yeah, for sure. It's an interesting setup to the employment data this week because those
17 call looks like it's bid on Carnival. Lots of open interest at 17. Carnival.
They also kind of lost that little extra bid because I think your point, the factory orders too are very balanced. We got the drop off in the durable goods, but that factory order print was not terrible, and especially after manufacturing was weak yesterday, factory orders being stable offers a bit of a counterpoint to what we saw for PMIs and ISM yesterday. It wasn't a bad factory orders number. Yeah, and I think it's going to direct the attention of the ISM tomorrow, right? We kind of continue to have this forward focus here in a data-dependent environment. Also kind of just looking at bonds. I wonder if we're starting to shift a little bit now into that kind of if stocks sell off, do bonds become that safe haven type tendency? You get bonds bid yields coming off in the environment we're seeing.
Seeing the highest open interest at 16 and 17 on Carnival.
You know me, I'm a very kind of boots on the ground kind of guy, very anecdotal kind of guy, and I'm looking.
Looks like they're running this one. Carnival on the move. Carnival, big buyer there.
I didn't think it worked. I thought he was a contractor. My cousin is laid off. Doesn't have any work. That's when you need to get concerned. That is we're far from that at this point. Now that can happen fast. I feel like, and that shift occurs quite rapidly. But yeah, the economy seems to be chugging along right now. Like I said, I mean, it costs $200 just to get a guy come out and give you an estimate. Right. So it can't be that bad. All right. Fair enough. So market not responding too much, but we'll call this the appetizer to the jog theater, right? To the feast later this week. Yeah, exactly. What's that French term?
Yeah, J Powell still needs to contend with the money supply. It's still very inflated. Lots of money sloshing around. Chewy, little dip there. Looking for the dips to get bought. Chewy, Rivian is flat. Bitcoin still going. Bitcoin. Watch Biddy.
Yeah, they do, and to your point, it's very competitive among the dollar names. Also, Walmart really stepping in and filling that role as we think consumers kind of focused on private label brands, trying to really fight the inflation that they're seeing out there on groceries.
Bitcoin, a nice bullish day. Day two bullish. Bitcoin. Talking heads are not paying attention to Bitcoin. It's a day two bullish. MicroStrategy, Coinbase, Mara, CRZ, etc. Okay, Carnival still going. Carnival looking good. AMC turning, AMD dipping again today. Carnival.
They've already got low margins. They've got Walmart, which has been a very competitive player. And frankly, what we've seen, if you look at Dollar Tree, those are mainly suburb stores, kind of middle income consumers. If you look at Family Dollar, that's more urban areas, more groceries, more cleaning products. All of them have really been trying to kind of turn
Dell high or low?
Or Dollar Tree. Dollar General been adding more stores. Dollar Tree has been cutting down on their Family Dollar locations, trying to really revamp some of the other locations as well. So there's
okay, Dell might get going. Watch the volume here on Dell. Okay, let's see. Dell. All right, so we're going to shift gears from Carnival to Dell real quick. All right, so Dell looking for that crossover to the upside. 30-minute. Okay, we got a buy signal on the 5-minute. Finally got that buy signal on the 5-minute. Looking for a follow through for Dell. Volume looks good on Dell. All right, the dollar and the 10-year both bouncing. S&P 0-day is still squeezing. Down volume still leading, so I'm not doing anything with SPY at the moment. Down volume is leading. Carnival looking really good. Big trades on Carnival showing up.
Some of that is going to go to Walmart as well. But to your point, location-wise, that's a really important part of the story for these dollar stores. And we know that they just acquired the leases for a lot of those 99-cent stores that went bankrupt. That should give them an easier ability to kind of expand, especially in the Arizona, California, Nevada, Texas, and also for Dollar Tree themselves. They have a lot of locations located relatively close to those 99-cent stores that already existed. So automatically,
is that you, Frano? 1.8 million. Nice job.
Higher gas spending, student debt repayments, all of those things kind of continue.
Okay, watching Dell here. Dell's on the move, starting to push. All right, SPY, we need a bounce. We need the indices to come with us. Tesla, no follow through yet. Tesla. Netflix, no follow through. Google, no follow through. Meta, no follow through. NVIDIA fading. AMD, no follow through. All right, so we don't have much in the way of FANG stocks participating, but other stocks are working. So we could see more of that rotation that we were looking at on Thursday, Friday. Okay, we did see some rotation. Taiwan semi fading. All right, chips are off a little bit today. Chips are off. Let's see. We got about 75% red, 25% green. Sectors. We got transports leading. Transports leading. So let's look at Old Dominion Freight, ODFL. All right, still hanging out there. Old Dominion Freight looks like a reversal. SAIA. They're fading. What about airlines? Delta in the transports? Delta. Airlines looking for the reversal. Let's look at American. AAL. Okay, JetBlue. I don't see much on JetBlue anymore. I don't hear much conversation about JetBlue. Still in the $5 range. Save, Southwest. Excuse me, Spirit. Southwest is LUV, right? You can tell I don't trade airlines very much. LUV, SAVE. And the big winner of late has been Ryanair. Ryanair. Okay. Ryanair. Ryanair, Irish Airlines. Okay, Dell. Watch Dell here. Dell gonna go. Dell's gonna blow here. Carnival. Will approach the traditional June's 2 weeks out here. If not, to the upside, if it rips pre-show being higher here, I might close out as well for, maybe a small loss if it gets above maybe 145 to 150 range is where that loss may kick and may not. And to the downside, probably continue to re-hedge with next week's paying just a little over 50 cents. If I can sell a 130 call next week for somewhere around 50 cents, and I got the trade for free. So I kind of like it on all fronts here, especially on that term structure value differential. Almost basically a 2-to-1 differential. This week's trading at double the IV of the ones I'm using to hedge in 2 weeks.
Okay. All right, so buying the 130 for June 21st, selling the June 7th 130. So you'd kind of like this to do a little bit of a dip and then a comeback, like this kind of a path here that would be ideal in a way. Kind of hit your sweet spot. Ideally, is there any scenario where you take the whole trade off before the before the expiration?
Oh yeah, absolutely. If say tomorrow post earnings, the stock opens anywhere basically, around the low 120 mark. This spread should widen out very nicely here. And if it gets near 130, this will be a very nice turn.
Okay, so Dell on the move, Carnival looking good. Who was that large print from? Was that from Stephanie? The 1.8 mil prints? That sounds like her kind of post. Bullish above 16, bearish below.
Take it off and be happy, and maybe a doubler or tripler given how cheap we got into the trade initially.
All right.
So do you look at this purely from the chart standpoint, Tim, or you think Dollar Tree just kind of maxed out on the chart, or what?
Yeah, I think mostly on these sort of trades is more technical, especially on short-term trades. But longer term, I kind of like Dollar Tree just on the valuation is trading actually below the median over the past decade, which when you look at most other stocks now, even with interest rates much higher, they're trading near their highest
valuation multiples here. So Dollar Tree certainly has been kind of given up for the dead here, just because everyone thinks Walmart will be the absolute killer of everything. But you alluded to the fact that a lot of these smaller towns, all they have is the Dollar Tree. So I think they'll be around for a foreseeable future. They had a competitor kind of go under here. So I kind of like the stock even on a long-term investment basis as well as playing it for just an earnings growth story.
Cool. Thanks for the trade. Tim.
You bet. Anytime. Take care.
Interesting approach, Joe. Okay, for Dollar Tree. Selling the near-term call, buying a long-term one ahead of tomorrow's earnings. Let's get back in tech when we return. We're going to talk with the CEO of Elastic. Stock has had a really good 52 weeks, about 42%, about 40% rather. California-based data analytics and tech business that's harnessing AI technology. Coming up next.
All right, looking for Dell to continue climbing. All right, Ryanair. Okay, so let's see. Carnival. Carnival's still going. Dell.
Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
No problem. So, what are those for?
This lets me adjust the bass, add more guitar, maybe some drums.
So many choices.
Yeah, like Schwab.
Okay.
Invest on my own and trade on Thinkorswim.
No, Carl is the only front man you need.
Oh, I gotta take this, Carl. Schwab.
Have a choice in how you invest with Schwab. Missed out on today's market headlines? Get caught up and catch the rest at schwabnetwork.com. Available anytime, anywhere, on any device for free.
Carnival looking for a follow through. Dell. Okay, Dell pulling back a little bit. Carnival. A little profit taking at the highs.
Thanks for being here on the show with us this morning. Welcome to the Schwab Network.
Thank you very much. It's great to be here.
Tell us about your business and how you guys are dealing with avant-garde of the AI and LLMs. It seems like you're kind of right in the middle of it.
Yeah, so, we describe ourselves as a search AI company. We bring the precision of search and the intelligence of AI to help businesses, companies, big and small.
Okay, so markets are just sitting here.
As well as government organizations all around the world to get insights out of their
Okay, Bitcoin. All right, so it's a little after 10 o'clock, almost an hour into the trading day. Bitcoin still on a buy signal. Looks pretty good. Let's see what MicroStrategy looks like. Coinbase. Coinbase. Marathon. And Core Scientific. Not only Bitcoin, but other industries. AI. Looks good.
Your growth too has been very consistent, basically 20% 20%, give or take, a couple percent for about the past year. And it seems like analysts believe you're going to be hitting that going forward. So when you talk about applying the new technology into your search tools and the products that you provide with big companies, a lot of big banks, the big retailers, is that coming from in-house development? How are you putting that on top of your offerings? Is it a layer that you're building, or can you just source it from what's available publicly through these language models?
So our core strength is our search AI platform. And what it does is it takes all of
Okay, sector-wise, we're still at 25% green, 75% red, starting to look more like 70% red. Transports, airlines, real estate, biotechs, consumer staples, software, pharmaceuticals, and biotechs, healthcare, the major sector, healthcare, components of healthcare, biotechs, pharmaceuticals, etc., medical devices. That's looking good.
there are so many out there now. This entire space is just growing, and you're seeing models even open up in open source. But fundamentally, the way
Dell.
customers use us is to provide that private context without shipping all your private proprietary data.
I wouldn't be surprised to see Dell base a bit longer. I don't think it's going to take off to the upside and leave anybody. What's CRM doing? CRM? Okay, that gap down last week. On Friday, it looked like a buy. Mondo mentioned that one. I believe it was CRM, right? Oh, no, it was MongoDB. MDB. Let's see how that's doing. MDB. CRM was another one, though. MongoDB is still basing down here. So give it 4 or 5 more trading days, probably by next week. Monday, Tuesday, next week, this one should be ready to go. Reason I want to buy it right here is because it looks like it's basing. I don't think you're going to get quick reversal. That doesn't usually happen. What happens, people will buy calls down here. If you don't get a good entry, like on a dip, like we saw on Friday, Mondo mentioned it. If you don't get a good entry, your risk of getting stuck here and theta just kill your position is very high. You want to see the base form first and then break out or break down, okay? So it's still early. Look for about 7 trading days. That's why Lee Star's 7-8 day trade strategy works so well.
We connect the dots in real time. So when a question gets asked, we're able to, in real time, tell the large language model, only answer this question based on these few documents. Because of that, the large language model does not hallucinate. It knows exactly how to construct the answer. It's able to give very precise answers. And it does not need to have access to all of your proprietary information, which is what all of these businesses care about. So this model is the only way businesses truly expect to be able to do things going forward. And that's what's so exciting about the space that we're in.
So do you have to hire new people that know how to do this within house, or these programmers that you are adapting to this? Because if we are to believe that this technology is completely novel in the last 18 months or a year, how do you build a workforce around that? Have you needed to go out and find kind of new ways to think about it, or is it able to just kind of adapt and tweak within the workers and the expertise you already have?
That's a great question. And look, large language models, foundation models, as they're often referred to, this is body of work that's been going on in academia and in a lot of companies for a very long time. Now, ChatGPT really came onto the stage about a year and a half ago, and this was the first real attempt by any company to get this out, democratize the space. And since then, this is, it's become part of our daily conversations. But the reality is that there's been a group of people who have been working on these machine learning techniques for some time now. Within Elastic, much like
So Intel CEO taking a swipe at Jensen this morning, which was kind of hilarious when you think about it. He was talking about Moore's law being alive and well. I mean, who's he kidding? Moore's law, really? Looking at Moore's law, if you use Moore's law, Moore used to work at Intel, I believe, right? Correct me if I'm wrong. But this morning, CNBC posted this chart, and you see 2024 all the way to the right. I don't know if you can make that out, but Moore's law would have probably about computing power at about, looks like maybe what? That's about 1,000 teraflops, I guess, something like that. Whereas Blackwell is at 20,000 teraflops up there at the highs. So even if I'm not, close to correct as far as what Moore's law has in the development of chips processing power by 2024, Blackwell is way beyond that anyway. So I thought it was kind of funny that Intel's CEO would have anything to say about NVIDIA's prowess. All right, so watching the SPY here, watching SPY. Still grinding higher, SPY. Okay, S&P, watch the 0-day setup. Carnival's still going. S&P looks good. Cash, need that above 5280. 5300, is that possible? Jason with a post yesterday talking about the SPY 532 calls for June. 532 calls for June. There was a big trade there yesterday. PayPal too. He saw a big trade on PayPal. Let's take a look at PayPal. I forgot to look at that one. David, PayPal. All right, PayPal, interesting trade there. PayPal, June 2026, 6250 calls. Accumulation yesterday. Let me take a look at that. PayPal, PYPL. For June 2026. 6250s, is that what he said? I don't see it. I see June 2025. Oh, that's 2025. June 2026. Wow, they have leaps all the way out in 2026. Yeah, there's 3,000 of those. So that's interesting. PayPal looks like a bounce here.
I was born on the south side of Chicago. It's been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're going to always make sure that you have all of the financial tools and support to secure your financial future. That means a lot for my community and for every community.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Higgins. Catch me on Fast Market. Weekdays at noon on the Schwab Network. Ethan, how's my favorite client?
Great. I started using Schwab investing feeds, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks.
PayPal, watching that one.
That easy. It is with Schwab.
Meta, looking for a bounce in Meta. Okay, Google starting to bounce. Meta, Google bouncing. Back to VWAP. Google and Meta back to VWAP. Apple turning. Snowflake up $1.76. NVIDIA off $3 now after making a new high. All right, S&P is still sitting here. Dell with the dip, back to VWAP. Carnival, transports doing well. Look at that VWAP. VWAP up and to the right. It's been on a buy signal since yesterday. Carnival. Carnival. Look at the volume on Carnival. This is a 30-minute chart, Carnival. Look at the daily over there on the right. Let's look at the 60-minute. 60-minute looks good. So if we shift to our 20 EMA on the 60-minute chart, okay, you can see Carnival's on the move. Royal Caribbean above its 20 EMA on the 60-minute. And Norwegian. Norwegian's got a little bit better entry, not as far extended. All right, it's at the 50-day Norwegian Cruise Lines, CCL. Carnival. Actually, Carnival looks pretty good, right? Excuse me. Okay, I've had no coffee today. All right, I'm going to take a 5-minute break. I'm going to go make some coffee. I'll be right back. I'll put the pot on and I'll come right back.
Discussion, like we talked CrowdStrike, Palo Alto, all these different companies and stuff, of course, but Sentinel One kind of goes a little bit overlooked. So that's a good one to watch, especially with the upgrade here. So a big turn of momentum, KG. How do we kind of assess the long term versus short term?
Well, short term, you probably will be looking at a little bit of a range bound market when you're looking at Sentinel One. Now, one thing to kind of know when you're looking at the chart, a lot of things are kind of aligning to what we actually saw this time last year. The third one is going to be the consolidation pattern that we saw basically from June of last year to December of last year. Stock trading between $14 and less than $18, which was actually a fairly long consolidation before we saw some spike in volume and we went to the upside. Now, here's the problem that I have with this chart here, Oliver. We have this head and shoulders pattern that's kind of isolated or on its own, like island, if you will. We actually tried to break out to the upside here. The left shoulder really peaked out in December of last year. Stock made some new relative highs in February and then gap and failed down. Then it made its right shoulder around March of this year as well, and then it gapped down to the downside. That failure of that neckline in a gap formation is actually fairly bearish, and it really does make it hard for technicians to really get bullish around those levels just because of the erratic price action. Now, where do we go from here? If you're looking at like this A2 portion, I just moved that channel from what we saw last year over to where we are right now, and that's once again the expectation. Maybe we range out between $14 and say $18. The other thing, just kind of note, the RSI is actually significantly or severely oversold levels. That's a little concerning when the stock kind of gets out of its normal range for RSI. You kind of want to put your flags up that maybe the move to the downside is not over yet. And then we have that MACD, which is still in a bearish formation. So I would say range bound is probably the most likely scenario in this situation. And it's going to be very tough to be able to break the stock to the upside without a good fundamental catalyst in order to hold those prices.
I love that perspective. It's like full 180, right back to where it started in that range bound trade, that A region. So, we kind of did this venture into past $20. Didn't last, head and shoulders, broke down, full retreat back to where we were. So this kind of massive failed breakout, but important to note that the breakout was driven by earnings, and then the breakdown was also effectively driven by earnings. So very interesting that the analyst is coming to upgrade this right at the moment where it's fallen back into its old range. Sentinel One, okay, interesting player in the cyber trade. Let's talk generally positive stuff this morning. First Solar, American Express are other names. Let's go First Solar, generally, where it's been on this big run. and really stand out in its category. And also some of the other solar trades a couple weeks ago tried it out too.
I know solar, like the solar ETF was looking really interesting for a while there. It had like its best 10-day stretch in years just a few weeks ago. And I will say First Solar did close out, I believe, the month of May as one of the best performers in the S&P 500. So
Ooh, look at that thing.
look, right, and I know this name has been like the outlier in the solar space, but it has only continued to really drive that divergence. I mean, like they're not even close to some of their closest competitors, even though we've seen a comeback in these other solar names. So we are at this point now up almost 60% this year. We've pulled back from highs by just about 5%, but a really solid player in solar. I think one that has continued to really benefit from the various like changes we see with government funding. For example, Morgan Stanley did mention this today, highlighting these recent policy changes that will incentivize developers to procure more domestic supplies of their clean energy equipment. And they've said that First Solar is one of the biggest beneficiaries of these policy changes. So to account for the potential average selling price uplift and associated earnings accretion, they did update their model to reflect around $35.14 a share in earnings by 2027. This name also has not a single bear in it either. I mean, there's 6 hold and 28 buys, although average price target is 255. So that does not imply any upside from where we're trading. I think it's like 6% downside from here, but at least as far as like overall conviction goes, it seems like everyone is in agreement. I mean, like the majority are buying here.
Yeah, the chart went straight up.
Right. So you hope that people will react as such.
Yes, they're kind of catching up here a little bit. So I don't know, man. It's pretty wild stuff. KG, is this like a real change of trajectory, or is this just like a one-off crazy move?
Well, I'm glad that we actually looked at this because actually I didn't even know that the stock actually made these advances, which is very impressive. But this one's actually going to be a very simple chart. We don't have any head and shoulders. I'm not talking about pennants or anything. It's just a consolidation or this move to the downside that we saw last year. We had a consolidation period for about 6 months, trading between $135 and $175, kind of bouncing off that 20-day SMA. And now that 20-day SMA is active as an area of support for the stock. We'll get back to that here in a second, Oliver. But this should be in the textbook somewhere because we actually saw positive bullish divergences within the RSI before we actually saw the breakout to the upside, which is exactly what we want to see. The pricing internal showed that there was positive bullish price action or bullish momentum. We also had that complemented by the volume as well. We saw this bearish divergence from February to mid-March of last year before we broke to the upside. We actually had the same situation occur with the MACD where we saw a bullish divergence where the 12 crossed over the 26 EMA back at the end of February, and then in March it crossed that zero line, making higher highs and being able to once again kind of confirm that breakout. Now, is this going to be sustainable from a chart standpoint? Maybe not, but if you're going to utilize that 20-day moving average as an area of critical support, that's the price that I would be looking at, which is sitting at around $229 right now. But once again, if you kind of look at a longer time frame chart, which I do not have, it still has some ways to go, as Jimmy was kind of talking about, but an impressive move to say the least. But this is one of those situations where it's very simple. Pull back, consolidate, push higher, maybe retest that 20-day and then continue to push higher from there.
All right, so the consolidation part seems really necessary at this point. So, you know, I don't know if you want to be a crazy person to just try and short after this huge run. I mean, that's like bashing your head against the wall a little bit, but maybe like selling some upside here makes more sense if you aren't necessarily buying into it, you know, just as options to think about if, you know, you're suspicious of the move. I guess I'm showing my eyes a little bit more suspicious of the move. But okay.
I think you're suspicious.
Right. Okay. American Express. This one is pretty amazing. Yesterday we had a guest on from the Gabelli Financial Services Fund that loves American Express. They had her in Berkshire because Berkshire owns American Express, and they own American Express separately. And I mean, like, you can't see why. I mean, like, the chart's just like a rock. Amazing.
It is amazing. And I think, like, if you look at, like, the demographic it serves, too, I mean, it serves, like, this typically more, like, I'd say, higher income, insulated from inflation type consumer that is
corporate,
travel, and
Uber forcing you to use your corporate card even though you didn't even select it.
I know. I can't even go dive too much into that. I have a lot of feelings about that. But Morgan Stanley raised its price target on to American Express. Wells Fargo raised its price target on American Express to 275 from 265 with an overweight rating. With an inflection, they said that in global acceptance and volume penetration weights well below the U.S., they believe that overall international will be their strongest segment in the next decade and beyond. So they also say the growth story at this point is underappreciated, and American Express is now their top pick. So, I mean, it's pretty optimistic as far as like international recovery goes. I think that if you're American Express, you were thinking about time because that has since been like the growth laggard of their earnings for several years now. But overall, 28 analysts, there are 16 buys, 8 holds, 200 form, and 2 sells. So this is a pretty mixed picture. I remember when there was a sell rating on this name initiated, and it was like, what are you thinking? I mean, this has been like the biggest benefit of the travel, the overall like credit landscape. But hey, I mean, we're still hanging on to a 27.5% rally this year. We pulled back about 2% from its recent highs.
Okay. Yeah, a little bit of a slowdown, but that's kind of what it's done. It goes up, it slows down. I mean, kind of what we were just talking about that you would want to see for First Solar to consolidate on the way up. American Express has had many moments, it seems, Kevin, on the chart where it's paused, refreshed, moved higher. Am I wrong?
I would say you're right there for a little bit here, but I would say the reversal is different, and you kind of were suspicious when it came to First Solar. However, I would have to say First Solar's chart looks a little bit more constructive, in my opinion, than it does for American Express. And here's the reason why. We had last year the 20-day moving below the 50-day moving average. You had that bearish formation, and we bottomed out. Pretty much did, for the most part, a double bottom out there in December or in November. And in November, we also had the cross of the 20-day above the 50-day moving average, which is bullish. And then that's when the stock was off to the races. We have a couple of consolidations in there. We have a couple of gaps to the upside. And now we are obviously trading at some relative highs. But one thing that I just kind of note, we are seeing a little bit of weakness right now in this consolidation. The one thing that I kind of want to call out, volume has dried up in this name, and we already did technically fail the 20-day SMA. You want to be able to recapture that. But if we do not, then we have some areas of support to just keep our eye out for. $215 going to be the first one. That was kind of that area of consolidation before we saw the last breakout. And then the next one is going to be that gap between $188 and $192. And here's the reason why I said this is actually showing some weakness here, Oliver. If we could actually full screen it, we have some divergences, significant divergences for this stock. The RSI has actually been in a divergence or a bearish divergence since pretty much the end or middle of February, to say the least. You actually had that happening with the MACD as well. And so if you're making relative lower highs on the MACD and relative lower highs on the RSI, at some point in time, those will correct. And they typically correct when you have a consolidation period, especially when you have light volume. I'm not saying that this stock is going to immediately give it up, but look out below if we do see the volume continuing to be fairly light and price action continues to consolidate. That's where we could see a pullback for this name. And then once again, kind of matching that up with valuation, it is a little bit rich right now. So nice move, but I would just be cautious around this name.
Okay. All right. MX seems like, to your point, a little bit of kind of slow down at least, right, in the momentum. So maybe a sign of things to come. Okay. Hasn't broken, but certainly slowed. Thanks, Kevin. Good perspective on the chart. Appreciate that. All right, when we come back, dollar earnings update for you. A retail disaster. Designer Brands getting hit pretty hard. We'll run you through the numbers ahead of our meetup discussion. The owner of DSW down big.
Accelerate your market knowledge and shift your perspective into full view. Real-time example trading, a full hour of trading insights. I'm Tom White. I'm Kevin Higgins. Catch me on Fast Market weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
I don't know if you guys caught that. F-16s flying by. They were pretty close. All right, Carnival. Continuation.
Earnings and revenue missed expectations this time around. Revenue, that number missed some of the expectations, but the company managed.
All right, Carnival at the highs. If you're day trading it or scalping it, you may want to look at some profit taking up here. Volume is tapering off as it makes new highs. Carnival. Watching the FANG stocks, Netflix turning. Netflix had some difficulty. It hit 650, got above it, and then reversed over the last few days. Trying to bounce. Snowflake is up $1.50. Tesla's flat again today. I might do another iron condor on that one. Tesla's not moving. Meta. Apple. Apple's getting close.
They now sit at $620.5 million, or at the end of the quarter, I should say. Now, looking ahead, the company did reaffirm its guidance for the full year in 2024.
Apple. Let's see, Apple. Flat VWAP could stay like this the rest of the day. Probably exit Apple for now. AMC bouncing at VWAP, watching AMC. What's GameStop doing? GameStop's down $1.30. Dell consolidating above a rising VWAP. Dell. Okay, inside day for now. Still basing. I would assume that my assumption is that Dell's going to sit here for another week. Chop people up. VRT getting crushed. VRT. All right. Yeah, that one's accelerating to the downside. I wouldn't be messing with that for now. All right, let's take a look at the rotation in the markets. Okay, first off, let's check out the market and see the strongest sectors, transports mentioned earlier. All right, so it's hard to get too bullish right now. You can see where the money is flowing. Some healthcare, some consumer staples, some real estate. Okay. Old Dominion Freight's number one. Transports, the top four are transport related / travel and leisure, Carnival, Norwegian Cruise Lines, Royal Caribbean. And then we got two storage names doing well. A lot of people are still moving out of the blue states up north. They're still moving down here pretty quickly. They did a development down the street from us. It's got to be 150 homes. It's going to be 300 more cars on the road now. Once those fill in, brand new development. They're all cookie cutter. They're ugly as hell. Small buildings, small residential. Looks like about, I don't know, 12 to 1,500 square feet. These little boxes, gable roof, cheap to put together. I've been watching as I drive by drop my son off to school, I keep watching what kind of appliances they're dropping off, and they're like really cheap appliances. I see them bringing into these houses, so they got to be cheap houses, but cheap to build. But I'm sure the prices are still pretty high. Looks like starter homes, huge development. Plus, they have apartments in that area. There's about, I guess, about 200 units of apartments. It's getting really busy down here. Everybody's moving out of blue states, moving out, getting away from the high taxes. Anyway, just watching those storage related names, extra space storage and public storage. Let's look at those. EXR, EXR. Yeah, that looks pretty good actually. PSA, public space storage. That's what I use, public space. They have public space storage around down the street from us, about 50 minutes away. All indoors, none of that outdoor stuff. All indoors with a vestibule, air conditioned vestibule, so you don't get mice and that sort of thing in your belongings when you're moving. Okay, so those two look good. PSA and EXR storage still doing well.
Because they're not doing the deficit spending. That's but pushing the aggregate demand for our economy, driving inflation. The biggest driver.
When you look at the odds for this year for us, is there any chance we go within the same window like this summer?
I wish I could say, let's cut rates. Let's do it, and then have the language. The next one's going to be an increase. But 25 basis points doesn't do it. It really doesn't. I don't think it does that.
Go curve timing last couple of days, tiny bit.
Yeah, bad news, good news, right?
Well, so far it's just bad news. Stock market that was fine. That was my point.
Yeah.
So we kind of lost that bit a little bit.
Yeah, and 2-year note needs that rate cut. Yeah, need that rate cut.
Big
Important. Yeah.
All right, appreciate that. All right, Matt here. Thanks for joining us. Gold Medal Leadings is up next.
Yeah, that's pretty funny. You should say that, Corey. When we moved down here,
Each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Accelerate your market knowledge and shift your perspective into full view. Real-time example.
yeah, well, that was during COVID. A lot of people were moving out. We had to reserve a $250 deposit.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
I'm Nicole Petalini, live from the New York Stock Exchange. Catch me on Schwab.
Yeah, that was a pretty scary time, COVID, because not only did you have the whole mask thing, people with vaccines afraid to talk to each other, but businesses were getting hit. We had the trucks that we ordered 3 pods, the big ones, because we had so much crap to take with us. Still got a lot of crap that we got to get rid of. My wife won't do it. She keeps carrying stuff around with her. Anyway, so we had 3 pods and 2 U-Hauls. So it was about 2,800 square feet of stuff that we had to move. But yeah, the trucks were all moving the state. They weren't returning. So we had to put down a $250 deposit just to reserve one if it did come back. And we finally got one about a week later. Rest is history. Moved to Myrtle Beach. Right now, SPY's just sitting here. All right, so stocks are just looking like rotation. Looking like rotation right now. Oh, you know what I wanted to do? I wanted to look at actual rotation. Let's take a look at that. RRG charts. If you have stock charts and you're a member, you can use this very handy tool. It's called relative rotation graphs. It's on the left side over here. Just set it to like whatever time period you're looking at. I happen to be looking for the last 3 months, and I'm looking at 60-minute. What I'm looking at is what are the sectors doing? Are they rotating? Last week, this was all green. All right, so coming into the week, right there, you can see top right corner. All of these sectors were leading. Tech was lagging. That was on May 31st at 11 o'clock. And as we proceeded into this week, we saw some of these sectors getting sold. Now, most sectors are dropping off and XLK's turning, with SPY moving lower. SPY's moving lower now. So change of direction for now. All right, so let's take a look at SPY. SPY is shifting. S&P. Probably going to get a bearish crossover. Probably already have it on the 1 minute chart. 1 minute's already. As you can see, we're just chopping around here. So Newsom wants to tax drivers 30 cents a mile. He wants to tax drivers now in California 30 cents a mile because the incentive or the mandate to go to EVs created a shortfall in gas taxes. Guy's a piece of work.
Good morning, Nicole. And Bath and Body Works pacing for one of its worst days now in almost 3 years. So pretty substantial move to the downside that's only accelerated. I will say they did overall beat on their expectations for their most recent print, but it seems like guidance was really what took center stage as we did see they reported a first quarter sales decline of around 0.9% year over year. But again, that figure did exceed forecast.
Yeah, I used to live in La Jolla, Farmer Jim. I don't recognize it anymore. I mean, the place is so developed. All right, so markets are just chopping around back and forth. Not going to do anything at the moment. Don't have any really good signals. Carnival, a little profit taking coming back. Carnival. S&P 0-day. We've got down volume leading. Dollar dropping a bit. So we got all kind of mixed signals here.
Disappointing guide. I mean, like we said, we're now seeing sales for the rest of this fiscal year declining between 2.5% to remain flat on a percentage basis versus the prior decline of around 3%. I mean, that's a narrower.
Chewy made a nice pop up to 23, dipped. Now it's moving back up. Chewy, very volatile. Chewy, very volatile action in Chewy. The FANG stocks chopping around. So anyway, looking at rotation, we can see that rotation out of value now and into tech, which is kind of interesting. Communications and tech, seeing some rotation in. All right, so communications, we want to look at Meta, Google for the bounce. Meta still consolidating. Google still consolidating, flat VWAP contracting. Let's see. Netflix is also in this group. Netflix also in the communications group. Charter Communications also in the group. Okay, trying to change directions. Charter Communications. Is Fox still an entity? Yeah, Fox is still going. Paramount got a little bid yesterday. Let's look at Berkshire Hathaway. Berkshire Hathaway yesterday was down 100%, and that just didn't make any sense. Now we got this wick to deal with. They gotta take care of these charts because you can't even see the chart now. So you have to look at BRKA, BRKB if you're trading BRKA, just to get a reasonable chart to make trade assumptions off of, because BRKA is broken right now until they remove that wick. Jensen signing a lady's bra. Look at a dude with the New York Yankee cap. He's like, ugh. That's funny.
So what Kevin Mon thinks, I think there'll still be 2 rate cuts this year, with the first rate cut taking place in November after the presidential election, followed by one more rate cut in December. However, who cares what Kevin Mon thinks? Let's turn to what the Fed thinks. Based upon both of their dot plot charts this year, they've suggested 3 rate cuts of 25 basis points each. And they could still get there if they cut for the first time at the end of July and then follow through with the November and December cut. Next week will be very important because
pretty funny.
a dot plot chart from the Federal Reserve, and that will give us more indication of what their plans are for interest rates, not only for this year, but for next year.
So when people are trying to
The guy with the New York Yankee cap was like, ew, what are you doing, Jensen? The lady's like, yeah, let's do it. Let's do it. The lady next to him is like, let's do it.
I think about this AI boom, and everyone's so focused on semiconductors and chips and NVIDIA, and rightly so. NVIDIA's up over 100% year to date. But how about some of those ancillary areas that help the opportunities?
That's so funny.
Hardware companies like Vertiv or Arista Networks. How about the data centers such as Digital Realty?
Excuse me.
The data centers are the nervous system that allow all these algorithms to work. They store all the data and they process all the data. That's where the puck is going, and investors may want to look to invest in those areas.
Yeah, I see them here. DLR, EQIX, VRT, ANET. And what about NVIDIA? I mean, if someone says, I want NVIDIA, when do you tell them to get in or out on that?
There's so much more growth.
Johnny Rockstar Jensen. That's funny.
Now we hear that they're going to bring out Rubin in 2026. They're new chip, but don't think they're not going to do anything next year because they're coming out with the ultra version of the Blackwell chip. Then we heard that their own data center, for instance, grew by over 400% last year. I think they're trying to take over the whole AI ecosystem, and I still think there's more growth ahead, even though they're trading at some pretty lofty valuations right now.
Yeah. Look, you're looking also at other sectors and utilities. I guess that's a historically defensive sector. I always thought of real estate and utilities as more of a defensive place. You have a thought there in the world of power, electric, and utilities. You have Southern Company.
Yeah.
Tell me about that.
So data centers are forecast to consume up to 10% of our country's entire electricity supply by 2030. So where are we going to find these amounts of energy? Well, look to the utility sector. A company like Southern, they pay a yield of about 3.6%. Their stock is up double digits year to date, and they also supply energy to over 9 million customers, including data centers. We're going to have to start looking at natural gas and nuclear to help supply all the power that these data centers are going to need, not just this year, but for the years to come.
All right. Well, that's the big picture. I mean, anything on for the Fed next week that you'll be watching for specifically?
Specifically, if they adjust their inflation target, remembering that they raised it to 2.6% at the last meeting, they're still forecasting GDP growth to stay around 2% all the way through 2026. And then do they move, Nicole, one of those potential rate cuts from this year into next year? So let's look for that updated dot plot chart.
Yeah, the dot plot chart. Thank you so much. Kevin Mon, thank you for being here at Henny and
All right, just watching the just watching the markets here, chopping around, not giving us much direction.
Trading 360, Schwab Network. We will be right back.
That's going to be forever etched into my into my brain. There, Cayman. Jensen signing braziers now. A little bit higher, I'd be signing her booby. Okay, watching the FANG stocks are starting to catch a bid. The FANG stocks starting to catch a bid. FANG stocks are starting to catch a bid now. Watch them. Could be just shorts covering first. Okay, so if we don't fall off, the shorts will cover. If we get any new money, we should see higher prices. Right now, Tesla's off $1. Google's flat. Snowflake +1.
Missed out on today's market headlines? Get caught up and catch the wrap at schwabnetwork.com. Available anytime, on any device, for free.
Welcome back to Trading 360 on the wholesale lead. It's time for the big three. Three stocks, three charts, three trades. I like to kind of take us to the charts. Here to take us to the trades. Tom O'Brien, CEO of TFNN. Great to see you both. Ben, you want to hear what your thoughts are, Tom, on the market this week? I mean, obviously, we've gotten in a lot of news. We're getting jobs and we're getting Fed news next week. Tell us your thoughts here.
Come on, Nicole, Ben. So the last Friday, we came down with volume. And when you come down with volume, this area always wants to get tested. So I think this is the beginning of a correction. Nothing heavy, but we'll see how this ends up testing the lows of last Friday. You can see this is a typical high volume low. You're down, snap back beyond belief. You try to get down again yesterday. Bottom line is that right now my take is you got more, sellers than buyers. So we'll see how this works out. But one of the things
Man. Jensen, you're a rock star, man.
kind of from this happening, meaning because you can get kind of bad markets, like if you start now going into July because it's less liquid, all of the above. So we'll see where it shakes out. I don't think nothing. I'm not looking for nothing heavy.
That's so funny.
For the next, 4 or 5 weeks here.
Yeah, and look, last Friday was a heavy volume day. It was the MSCI
Yes.
balance here at the New York Stock Exchange. I mean, obviously, every trader was in, and it was busy.
And then it came back, right? At the end of the day, we ended up closing higher than we even were a few days prior. There was a lot of volatility and volume on Friday, to your point. How about ExxonMobil? Just to name
All right, so just a little bit of short covering, no follow through, no Momo at the moment. Just sitting here watching the markets. I'm not going to jump in right now. We just had some really volatile action Friday. We ran up, and then yesterday we dipped early in the morning, and then we had a crossover and late in the evening at 1:30. We had a 1:30 crossover. That was a nice bullish trade. Even if you, I like this because the 1 minute 10 EMA, 100 EMA crossover issues a buy signal. Yes, you didn't get the low. You can get the low from other methods, other reversal methods, but this gives you a confirmation buy. Right now, you can see we get buy and sell signals too close to each other. That's telling me look for choppy price action. Go to 5-minute chart, zoom out a little bit. Okay, still on a buy, but we're starting to drift lower. So we could be making a lower high. We already made a lower high. Look for a lower low if we can't get a follow through.
Yeah, I'm noticing some short-term weaknesses Tom pointed to. The examples he's going to bring to us today look like they kind of go both ways, mostly trending higher on the longer term, but in this bit of a range right now in this example, and so we could see some further weakness here. Let's just take a look first and foremost at the more intraday time frame and some of the selling that we've seen. Most people open up this chart and they just see a bunch of red and green squiggly lines. When we look at it, we can see three really well-defined areas of consolidation where the market's just kind of gone a bit sideways, paused, and found value. In this instance, at lower and lower levels, you can see currently hanging out right around this 111. What is it, 111 and 112 area right now, testing the upper extreme of the range that we've been in. Taking a step back shows that the stock topped out around 123. If you remember, beginning of April, and has seen a series of lower highs coming into play since. So I can understand why Tom's got a little bit of bearish sentiment here. Taking a look at this pattern here, a step back, you'll see that, well, on this hourly candle, I went ahead and identified two things. One is, first and foremost, that we were seeing a bit of a bullish pattern, two areas of consolidation forming at higher and higher levels, 103, 121. And again, this is a leak lower. Really
Getting a lot of mileage out of that one, Cayman. Jensen.
bullish scenario here is that we're really just bouncing around a larger area forming around 117. So again, that leak lower, not what the bulls wanted to see, but not necessarily invalidating this longer term trend to the upside. And so I'm sure, a lot of our regular viewers are looking at this going, Ben, this is leaking lower, right? I mean, why are you still taking a bullish stance on this one? And here's why. When you can see, first and foremost,
Okay, my bad.
we're going all the way back to,
Let's get back to trading.
August of 2020, the move lower that we saw after the pandemic, and then that retest thereof. Areas of consolidation that formed at higher and higher levels with a well-defined trend up off those pandemic lows around $30. Recently just shy of 124. Currently balancing around 110, and this is what I started talking about is while you're within this range here, you can see some further price decay weakness.
Politics bad for trading and for business. So let's try to get away from all the bad things that are happening out there. Let's get back at the hedge funds that are shorting, trying to short GameStop. Let's get GameStop to get moving along with AMC and some other shorties. AMC is trying to go green right now. Yeah, you guys can blame me. I started talking about Newsom with the tax. Okay, so, but I have to agree. I have to say, La Jolla is a great little city. It's just when I went there, it was like it was just for surfing, and it was a smaller town, Black's Beach, and everything. And it just developed like crazy during the 80s. And since then, it's just turned into like, too overbuilt for me. Anyway, that's the case for a lot of locations. So watching AMC is starting to move a little bit. 5 pennies.
1895 is your next swing point higher. It has volume up there. Most of the time when you have to, volume, whether it's up or down, they like to go test it. Barrick is, fundamentally it's been having a hard time. Barrick bought Rango years ago. Rango was the best stock in the gold market. But I see a lot of value here. The CEO is a great CEO. They're in Western Africa, and Western Africa has the least amount.
All right.
The least amount to get the ore out of the ground. So I think it's been struggling.
We can blame everything on Cayman. Cayman's got thick skin. And Mondo.
To stakeholders, and there's been some positive comments on this. When the high was 1895, let's see if there's that technical.
Yeah, Nicole, as I look at this one, similar pattern, right? As last example is Exxon. We got a little bit short-term weakness, but a bit of a.
All right. So looking for a bounce. The markets are just chopping people up right now. So we need a good clear signal. Don't have a good clear signal yet. Yeah, those guys have thick skin. I have thick skin too. I got people saying shit all the time about me on social media. I don't care. I know that 90% of the time, 90% of the people are going to lose 90% of their money. So the whole 90-90-90 rule, all right, with traders, 90% of traders, 90% of the time are going to lose 90% of their accounts within, I think the number is 6 weeks, 6 months, something like that. If you don't have a strategy and you're just following people and you have no idea what you're doing, hopefully you're in the trading room and you're learning not to do that. But there are times to trade and there are times not to trade. Right now is a time not to trade. Just my perspective. Looking for a clear signal. Okay, the last clear signal we had was a buy on the S&P, and that was yesterday about 1 o'clock. Let's look at the 1 minute. 1 minute chart yesterday gave us a nice bullish signal. Early in the morning, you got a nice bearish signal. Okay. Right now, it's just chopping around. Look at this back and forth, back and forth. This right here should tell you whenever you see buy and sell signals within 30 minutes of each other, that tells you you're in consolidation mode, right? And you can see the doji that we're looking at on the right. So that makes me want to go take a look. We know what the rotation looked like. We're rotating out of value very quickly, which was bizarre because I thought that was going to last a few days. Let's look at S&P. All right, growth and value. Here's growth and value. Advanced decline percent first. Let's look at that first. You know what? Let's look at this first. Growth and value. Okay, so value had a nice bid on Friday. There's a lot of rotation in 11 out of 12 of the major spider sectors, 11 of 12. We had a little dip in growth stocks as rotation out, but now we're starting to see a little rotation back in. So we can see this line is rising right here. This line is rising. Okay, so growth caught a bid. Value is just sideways in a range. It's right at the mean. If you draw a horizontal between the lows and the highs, you can see that we're not going anywhere. So value looks like rotation again. There's value. Okay, so we're right in the middle, basically, in the upper half. Whereas you can see that growth consolidated recently in the month of April, broke out in May, came back and tested it. Now it looks like we're going to follow through. That said, we want more confirmation. Right now, it just looks like chop. Okay. So look at advanced decline percent. This is giving you a clear signal right now. More stocks are being sold than bought intraday. Okay. So I wouldn't make a whole lot out of this. We're still making higher lows, lower highs. So we're just consolidating around the mean, the zero line. Let's look at NIMO and NYSE from yesterday.
Looking for Hecla.
Okay, so this is looking to turn back up.
Stop at 529, and your next level up there is the 762. You know, and that's what does happen with the
All right, so we're looking for a nice E to turn back up.
today.
What's Carnival doing? Carnival.
Back to that bottom of those consolidations.
Thanks, Jennifer. Thanks. Core Scientific, seeing the July $7 call just out of the money. July $7 call with 1,600 contracts trading at 60 cents average. CORZ, July 7 call, 1,600, 60 cents average. No. Yes. Okay, we got 1,600 of the July 7 Core Scientific, CORZ. Seeing buyers. All right, S&P, no follow through. SPY. Okay, SPY. Not doing anything. Let's see if we can get Core Scientific to go. Procter & Gamble looks really strong. That's signal. Okay, let me go take a look at a different chart style. Procter & Gamble, just so I can make a decision. Yeah, Procter & Gamble sees probably the upper Bollinger Band. PG target would be upper B bands at upper B bands are 169.19, 169.19, and third standard deviation at 170.93. Procter & Gamble looks very bullish coming off the 50-day. With momentum and volume. Good call by Paticus. All right. Okay, I'd use a MACD is turning too. Procter & Gamble looks good. PG, when are their earnings? Just want to check, double check earnings dates. Procter & Gamble. Okay, it's dipping right now, so you have a better entry if you're buying on the dip going into lunch, looks like. PG. Earnings are July 19th. July 19 pre-market. All right, futures continue to drift lower. Okay, Marcus is chopping around. No particular place to go. Rivian's up a penny. Rivian trying to go. Okay, Procter & Gamble. Just looking at Procter & Gamble. They beat last time around. Procter & Gamble. Revenue growth 0.6%. Earnings growth 10%, 11%. Technicals look best though. Technicals look good off the 50-day. Day 4. Nice follow through on Procter & Gamble. Okay, you got a little dip intraday. Procter and Gamble better if you like. It's a bullish stock, a bullish setup. All right. So first off, so what I like to do if you're interested in buying Procter and Gamble, what I look at is all right. What is the short-term trend? Okay, we're starting to pull back a little bit intraday. PG. All right, here's PG on the 5-minute. Okay, we know what the daily looks like. Daily is a 4-day buy. We got a buy signal here on the 30th of May. 5-minute. Let's look at the 30-minute. All right, just the 30-minute giving us a buy right around Monday, 12 o'clock. And we're not too far off of that level. So buying this dip right here probably makes sense. Dipping at the moment. Okay, Procter and Gamble. I'm not in a big hurry to do anything. Reason being, the S&P is not giving any good signals. It's just sideways. We could see this is a lower high, another lower high, and we could be testing this level. Could also be making the case for an inverted head and shoulders, but it looks like we're going to drift a bit lower right now. VIX is moving a bit higher.
I mean, certainly, I think as an industry, we would prefer it to be a bipartisan issue. Right. I believe the latest stat I saw is there are about 92 million crypto holders in the United States, so it's higher than Doggo.
Okay, don't have good signal. Procter and Gamble pulling back a little bit more, so watch that. Carnival looking for a bounce back above VWAP. Bollinger Bands is starting to contract for Carnival. Okay, at the highs. This is a 60-minute chart. Carnival starting to consolidate at the highs. Carnival Cruise Lines. Nice volume this morning. Day 2. Carnival. SPY still fading. All right, VIX is climbing. VIX is at 1389, climbing off the low, 1346, 1345 low. The 10-year is down at 4.34%, so the 10-year is backed off quite a bit. U.S. 10-year. Okay, you can see this is definitely on a sell signal. U.S. 10-year, that's the 5-minute. Let's look at the 15-minute. Okay, not much going on here. The 10-year keeps moving lower. That's a tailwind for markets, equity markets. If we continue to see this dip in the 10-year, here's the 30-minute. 30-minute. Okay, it's been on a sell signal since May the 30th, Thursday. Continues lower. All right, so the 10-year yield. Okay, here's the 10-year yield. All right, so we're at the 200-day. So if we lose the 200-day and start to slide along the lower Bollinger Bands, that would be bullish for equities. 10-year yield, TNX. Ten-year yield. Okay, the 10-year yield sliding along the lower band. If that continues, if we continue to see that weakness, we're at a 5-day low right now. We're below the 200-day moving average. So if we start to slide a little bit lower, that'll be an equity tailwind. So look for dips to get bought. You can see how we have mixed signals. So you really don't want to do anything when you have mixed signals. You want a definite confirmation. We had rotation out of value, which was 11 out of 12 sectors were rising on Friday. Today, we see those sectors being sold and tech being bought again. I don't know if it's the tech being bought so much as it is maybe shorts covering. I don't know. But we did have a little rotation there. I don't see it on this chart, but okay, let's go through the sectors real quick. Let's go take a look at sectors and who is leading. Transports were leading, right? Real estate is leading now. Okay, so real estate's leading. Okay, yeah, real estate looks really good, actually. XLRE and IYR, XLRE, IYR real estate. Back above 200-day, 50-day. With real estate, with the 10-year yield dropping, and a lot of speculation that the Fed has committed to a June rate cut.
Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Okay, Carnival looks like it's going to dip a little bit more. Carnival had a nice morning. Looks like it's going, right now it's flat VWAP, so I wouldn't put much into it. Rivian had a nice little bounce and a run up yesterday evening. Watch for a follow through in Rivian. See if we can't get a bit more buying again. Higher low printing again. For the past few days, Rivian has been printing higher lows. Rivian. Okay, just grinding along. Notice the moving averages are starting to separate from each other after crossing through the 50-day moving average. That's pretty telltale. Now, it's not something I would put a lot of money on. It's something maybe I buy a few hundred shares of. If I had, $10,000 account, I probably would only buy 100 shares of this if I was interested. Okay, I'm still not interested yet. I want to see it move above the 100 period moving average, the magenta colored line at 12. Then we got a $4 move. That would be nice to see that for a swing. Okay, let's look at junk bonds. Junk bonds would be rising if we're bullish. Remember yesterday I told you that even though we were dipping early in the morning, we looked at junk bonds and they were actually higher. So that told us that there's still risk on. And we also saw biotechs with a bid. It was either Cayman or Leastar. Somebody told me, you know who it was? It was Grover. Grover mentioned biotechs were getting bought yesterday. So that's a risk on signal when biotechs, that's a risky asset. Also, Bitcoin. If Bitcoin is getting a bid, these are all bullish indicators for equities, not bearish. When Bitcoin turns like this, that's bullish equities. Okay, the reason being is that anyone who was afraid the markets are going to collapse or drop off or pull back dramatically wouldn't be trading Bitcoin. I'm not saying everybody, I'm just saying people with money. They wouldn't be putting risk on at the moment. Same goes for junk bonds. So anyone who would trade junk bonds right now would probably be neutral. It's right at supply. So realistically, we need to see junk bonds break out above 94.25 or so. I don't know. That's a mixed signal. And then let's take a look at biotechs. We'll come back to to sectors in a minute. Let's take a look at our signals. Excuse me. Okay, here's a Heiken Ashi chart on junk bonds. You can see that's higher. IVB is flat, trying to make a higher high now. Higher low, higher high. IWM is sideways. IWM is another risky asset class, small cap. So if the 10-year starts to drop more, look for a bounce in small caps. I like buying the dips. Not so fond of it right now because it's below the 50-day. So we need to see the 10-year continue lower. So if you followed any of that conversation for the last 10 minutes and you're confused, that's because we have a lot of mixed signals. Some are bullish, some are bearish, some are neutral, telling you you don't have the best risk reward right now. Unless you're focused on, narrowly focused on just transports, perhaps. All right, let's look at transports. They're talking First Solar. I'll come back to that in a minute. Let's look at transports. Transportation, airlines, trucking, shippers. The bulk carriers have been on a tear. Let's look at Zim. That might pull back, right? All right, so consolidating. Zim integrated. Baltic Dry Index. Okay, that's neutral for now. Baltic Dry. Let's take a look. Let's look at trucking and transportation. Old Dominion was higher earlier. All right, so these are higher. Trying to turn the corner. TFI International. What was the trucker that I mentioned? Yeah, Heiken Ashi. Ash cheek, Heiken Ash cheek. You're crazy. All right, so yeah, so transports. What was the name of that company? It was a trucker I hadn't heard of before, and it showed up in a scan. Let me go see what these scans look like. Stochastic Bull. Where is it?
Yeah. And look, on this same day that Morgan Stanley's saying overweight here, and thank you for that example trade, on the same day you have GLJ Research reiterating a sell on SunPower. And that's
There's another trucker, mother trucker, that I was looking at, trucking, long haul. No, it was a short haul trucker. Did I mention it last night? I think I did, right? Oh, you know, the other one is Birkenstock. Birkenstock I was looking at. I know I'm jumping around right now, but we have a lot of mixed signals. Birkenstock still consolidating. Okay. JB Hunt? No, it wasn't JB Hunt. This is one that I haven't seen before. What was it? It's not. HIW is a real estate company, right? Highwoods Properties. Yeah, that's not it. It's a short haul trucker. The chart looked good. At least it did yesterday. Let me see. Short haul trucking.
That means a lot for my community and for every community.
Download the Schwab Network app and join us to follow all the network is available anytime, anywhere, on any device for free. Schwab Network. Ethan, how's that
Let's see. Old Dominion, Arc Best. No, it wasn't those. Let's see. So these are short haul truckers. Heartland Express. That was it. Heartland Express. I don't see a symbol here. Heartland. Okay. Heartland. Heartland Express. HTLD. Heartland Express. All right. Oh, it's squeezing. Yesterday it looked pretty good though. Looked bullish for the past 3 days. Off the 50-day. Let me save this one. Heartland. Truckers. Okay, let's see what some of these others look good. Some of these others as well. Heartland. Ryder. Night Transportation. Have you heard? You heard of the? I'm sure you've heard of these, Stephen. Stephen, familiar with trucking and truckers? CCL going? Okay, cool. CCL. CCL. Let's get off of this for a minute. Let's go check out CCL. Okay, starting to move again. CCL. This is a 30-minute chart. Let's look at the 5-minute. Okay, starting to turn back up. See, Carnival Cruise Lines. These cruise lines look very strong today. Royal Caribbean, all of them dipped. It looked like profit taking first thing. And CLH. Okay, so some people are in CLH looking the popping the most, and CLH. All right, those are all good. All three. Always a confirmation. When the whole group is moving. Doing the same thing. Yeah. Yeah, they all look good. So if you're long Carnival right now, that looks good. The 10-year dropping a bit more, 4.34%. That was at 4.7% just a little while ago. All right, let's look at the U.S. 10-year. U.S. 10-year, you want this to be dropping, folks. If you're bearish, if you're bullish equities, you want this to stay in this bearish trend. U.S. 10-year, we want this lower. Okay, here's the hourly chart. Okay, you can see the highs that we put in over here. 4.63, I believe it was 4.7% recently, right? Yeah, over here. 4.7. 4.73, 4.74% over there on, what was that, Thursday? When was that? That was Thursday, the 25th of April. 25th of April, we had the high in the U.S. 10-year. Since then, we've been making lows. Note that the low right here is where we bounced back in May. On the 15th, we bounced right a little bit lower than where we are right now. We just tested it a few minutes ago. All right, the 10-year moving lower would be good for U.S. equities, which are currently, the index is still choppy. So there's no, oh, there goes Bitcoin. Nice. Bitcoin on the move. Corey, you're all over it today, man. Good job. Good job. There we go. Looks good. Bitcoin. Okay, watch MicroStrategy and Coinbase. Coinbase, these two should do well. COIN, Coinbase. Coinbase, nice base on Coinbase. Remember Coinbase, I wanted that above the 50-day. I was looking for it to get back above the 50-day. Coinbase is above the 50-day. Cool.
The economy is definitely slowing from last year's 3.1% Q4 growth number.
Is it slowing to below trend? The answer there is no. You don't have to go much beyond the auto sales numbers for the month of
Coin is above the 50-day. Coin's above the 50-day again today. All right, so out of the last 6 trading days, we spent, what is that, 4 days above? Yesterday was right at. 2 out of the last 6 trading days we've been, actually 3 out of the last 7 trading days we've been above the 50-day. So Coinbase probably going to do something here. People will start to wake up to the fact that Bitcoin is on the move. So try Coinbase. Those calls are a bit more expensive. So you need to do a vertical or a debit vertical, probably. Okay. Or you could do shares, or you could do CONL. CONL. Coinbase long. Granite shares. Okay, so that looks good. Wow, those are expensive too. Okay, so I'd rather just trade. What is MicroStrategy going for? MicroStrategy.
Well, I think we're looking at these things in aggregate. The reality is the consumers are gravitating toward less expensive cars and staying away from the ones that are at the higher end of the price spectrum because of this affordability challenge.
CONL, the options have a very large slippage, a very large spread between bid and ask. So I don't want to trade options on CONL. I'd trade shares. Okay, I'm buying some shares of CONL. Average 56.05 filled. Okay, I'll put a stop underneath today's low. Stop under low of the day. Bitcoin's on the move. Looks good.
part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network. Available anytime, anywhere, on any device for free.
The checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account. Plus, cash management solutions.
MLGO. You're looking at MLGO. MLGO. Wow. Yeah, that's crazy. Micro algo.
Also, because your Investor Checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in
Nice break. Downtrend break.
cash move to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Yeah, that's a crazy move there, Armando. MLGO. Wow. Look at the volume.
Every trade, always live. Expert earnings analysis.
What is that? Is that
Every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live, a Schwab Network. I'm Oliver Rennie.
817% MLGO starting to go. HOLO, what's that doing? Hologram. Okay, starting to move. Okay, HOLO. About to get a crossover on HOLO on the 60-minute.
Tune in 24 hours a day, 7 days a week at SchwabNetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere.
Hologram. Micro Cloud Hologram.
Good afternoon, traders, and welcome to Fast Market here on the Schwab Network. I'm Tom White. We've got a great lineup for you today, including discussions and option strategies.
HOLO. That one's on the move too. It's a penny stock, so with a penny stock, you want to trade smaller. Anything below $500, $5, I look at as a penny stock. All right, these are all catching a bid. All right, Bitcoin.
On the day to help me break this down. Let's bring in my co-host, Kevin Hayes. Kevin, a little bit of a head fake after that JOLTS number this morning where stocks were down about the levels where we are right now, as far as, just after the opening. Rally back to unchanged, a little bit positive, then sold off again. What's that signal?
I think the market is trying to figure out if this is a real tone change or if weak data means bonds higher, yields lower, and it's okay to buy stocks. Well, this 2 days in a row now, that's not working.
Right.
Right? They buy them on the weak data and the rally fails because this looks more characteristic of a rotation out of stocks and into bonds than it does, bonds are yields are going down, so stocks are more attractive. It doesn't appear that that's the case right now, and that's a little bit of dollar unchanged, slightly higher. Why? Well, if the Bank of Canada and the Eurozone is going to lower rates, our dollar should be higher. So here's what I was talking to Oliver this morning about. It's a bunch of individual stories. Crude oil has its own story, supply and demand story. The dollar has its own unique story with its relationship with other countries. Yields have another own individual story in terms of weakening U.S. data.
Let's see what we can get going here.
And then you've got earnings. And then you've got this chip conference where Intel just laid an egg, it appears, even though they came out with all their shiny stuff and the stock did nothing. I mean, there's no reaction.
And that was the same thing that happened to AMD yesterday. AMD was mostly down after announcing a bunch of new chips also.
AMD's always going to be compared to NVIDIA, though. And NVIDIA came out with such unbelievable news there that it made the divergence go further.
Yeah. A lot of different stories. I think that's key. Let's bring in our next guest. It's going to be Kevin Green, Senior Market Contributor here on the network. I want to get your take because we've got some weakening GDP data that's been coming out lately. PMIs were in the tank.
AMC, people don't seem to be interested in AMC at the moment with Bitcoin rising rapidly. Rapido.
Hey, maybe the economy is weakening and maybe that rate cut is going to come this summer because now September is up to about 65% chance of getting a rate cut. So
is that what's causing maybe this yields lower and stocks lower also?
Yeah, I mean, Kevin just kind of talks about it. The breaking down of correlations is really key in this market right now. And actually, I think it's more of the inflation trade is starting to fade right now. And you can see that across the board. If you're looking at the energy markets and crude oil kind of sliding to the downside here, even the metals today, if you're looking at silver, down about 3%. If you're looking at copper, retracing from those highs, down about 15% from those highs. And then also the grain, we actually had a pretty decent time to the upside, but now we are starting to fade as well. But what is performing today? Consumer staples and real estate. And real estate is going to be more interest rate sensitive as those rates are coming to the downside here.
Okay, so CONL, Coinbase on the move.
It's more of a mission accomplished type of cut that they got inflation under control rather than a cut for economic downturn reasons, right? And if that is going to be the case, then maybe we'll actually see a weaker dollar because a lot of these other economies that have already experienced their recession or economic downturn might be coming out of one.
What time is it? It's 12 o'clock.
That might be a reason for that weaker dollar, the break of this market here. But right now, I think it's just that inflation phase.
All right, so Carnival at the high, back up to the highs, Carnival. Meta trying to take out the highs as well. Meta.
Downward revisions over the last week and a half. It's remarkable to say the least.
Yeah, let's see if they can actually be right, because that's a pretty choppy number on a weekly basis that when that comes out. But to Kevin's point, Europe is supposed to, the ECB is supposed to cut rates Thursday. Bank of Canada.
All right, let's see what these guys have to say on
Is this for them to prop up their economies, which happen?
CNBC. See what Jimmy's talking about.
Inflation for May. It's an indirect look with average hourly earnings, but it's an important one. I'm going to say something, Scott. You're going to maybe raise your eyebrow at this, but this is an economy and a stock market that now needs rate cuts to come into focus. You haven't heard me say that before. Anyone obviously can disagree with me. I got that. That's my opinion. I feel it kind of strongly. I'm not sure why you're laughing at me.
It's the way you said it.
It's the way you said it, man. I mean, it's not like we're hanging on and waiting. When is Dean going to say this? But I appreciate the heads up.
Okay, look, I'll take the teasing and the joking, but I think you'll agree I've been fairly optimistic for quite some time. I'm telling you, I'm getting an uneasy feeling.
Yeah.
Okay.
All right. So it speaks to, especially if we're going to get a softer macro backdrop.
Coinbase pushing a bit higher. Now it's starting to see a little profit taking.
Become larger, they can get filled. We'll see. It is why some suggest that you should stay with the mega cap trade, like Tony Pasquarello, who I've said has suggested these stocks offer you sword and shield, offense and protection. This is the kind of market where some are going to look at these stocks and say, I want the protection that the mega caps provide. CapEx, buybacks, dividends, balance sheets, going where the puck is going towards AI. Wolf today, moats, Wolf today, or at least if not, moats, first mover advantage. NVIDIA, too early to say. Do they have a full moat? I don't know. They have such a significant first mover advantage.
Netflix off 3, just sitting here. Nvidia's off 6.5. Tesla's off $1. Google's off 65 cents. Looking for Meta to do something.
I think there's always.
But what you thought last week may not be what you think today. So I don't necessarily know, because
for like 6
if the market is changing a little bit and the backdrop is changing a little bit, maybe Jenny Harrington's changing a little bit. So tell us.
Yeah, Jenny Harrington doesn't change. So I think that there's always more to do. Look, if you're like a big, hyperscaler, mega cap, blah, 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 that kind of investor, fine, you're going to find your opportunity there. I'm not that kind of investor, and I think that this kind of market actually creates more interesting opportunities for people like
Chewy trying to push a bit higher. Chewy had good earnings last week or so ago.
This morning I had an
Apple's trying to do something. Apple's trying to go.
And the first meeting I went to was Digital Realty Trust, right? So this is data warehousing. I've seen this company present for like 18 years. The room was overflowing. Everyone was in there. All people wanted to know and talk about was, what does the power need look like? What does the demand look like? When will AI start to really promote this business? They gave this amazing example.
SPY with a bearish signal for now.
That they've been sitting on as unprofitable for like since 2018. Once it actually goes into operation, it'll start to produce $1 billion.
So I think you don't have to stay in that large tech play. And what's happening in this market is you got really kind of like superficially nothing, right? We're kind of at up 10% on the year. We're kind of trading at 21 times $250 earnings. But beneath the surface, there's all sorts of opportunities being created. And so I thought that was interesting on Digital Realty. You know, I've been talking about buying UPS for a while. I'm not quite there, but UPS has traded down from like 155 or 160 to under $140. I'm finally close. I think.
All right, SPY still moving lower. SPY.
I don't think you have to be there. If you are there, you're going to make money. But I think that this market is just creating opportunity beneath the surface.
Josh, B of A reports client flows near record tech outflows last week. You've had net sellers of U.S. equities for a fifth week. That's the largest outflow since last July and the fourth largest outflow in the history of their data. And that goes back to 2008. What do you make of that?
Rivian looking for a higher high on Rivian.
Part of me feels like there's really no signal there. That data changes on a dime as the market
They also
changes
say,
course.
though, that the fragility of the stock market, that's the word that they use, the stock fragility has reached a 30-year high led by tech because you have these extremes, such a highly dominated area. Obviously, in many cases, you've had multiples expand. Now, multiples have come in on NVIDIA, and people are going to debate whether the stock's expensive, too expensive or not. That's neither here nor there for this conversation. But how about that? So the market looks a little more fragile. It's led by tech. You've had some outflows. What do you think?
I think the data suggests that most stocks in the market are extremely sensitive to interest rates. And I think if the mega cap technology names don't.
All right, VIX is starting to fade a little bit. It's at the high. This time of day, B and C is when you should be looking for B and C pivots. Would be an area to look for B and C pivots. A better entry if you're bullish something like, say, Dell. Looking for B and C pivots for entries rather than a high of the day. Microsoft. You're looking at Microsoft? Okay. Microsoft had a strong close yesterday.
The good news is all of the data is now pointing to a confirmation of one rate hike, and now we're back to debating if there's going to be two. And I think that's warranted. I think you're seeing the consumer cool off. I think you're seeing signals from the labor market. I think you're seeing industrial production numbers cool off. So if we're back to that world where slowing data is actually positive and interest rate cuts are going to have an impact on psychology, I think that augurs well for a decent second half.
That's your cut. That's your so-called. Hold on, I'm sorry to interrupt you, but that's your so-called cut-on environment, right? You talked about cut on, cut off.
Yeah,
that's cut on.
Judge, the Atlanta Fed's GDP now just massively ratcheted down expectations for Q2, and it's a very noisy enterprise. GDP now, it's not something that you want to get married to because of how quickly that changes. But to go from like 4% to 1% and change almost overnight is for me, it's telling. And what it's telling is that the Fed is largely getting its way, and we can begin to focus on
AMD still sitting here at the low of the day. Meta trying to get back above VWAP. NVIDIA near the lows of the session. Let's see. Google fading. Netflix above VWAP. Tesla flat.
I don't see the same fragility.
You know, let me just embellish that point a little bit. And I know the point you were making with the flow show and the outflow and the most fragile. It's been 30 years. But if you go back 30 years,
It doesn't mean anything.
Exactly. On a long-term time frame, this is why you don't sell your tech stocks. The NASDAQ is up tenfold in the last 30 years, but the S&P is up tenfold. NASDAQ is up more than 20-fold in the last 30 years. So if you have permanent compounders that I keep mentioning, and companies that have the great models that Meta has, that Amazon has, et cetera, you hold on to it. Now, if you're a trader, and those statistics are for traders only, they're not for the average institutional investor, like sitting right here, or Josh, and they're not for the average retail investors. So that's why I'd say. Now, however, your gains are defined by your point of entry. And I just don't believe this is the right point of entry. I'm very troubled by the bond market rates continuing to decline. Because as we talked about, normally that's a sign for equities to move higher.
Well, not necessarily. Not if it's because of the old growth scare.
Right, and that's my point. That's what I was going to get
That's
to.
like where we're at. And we've been there before. And we've come off of that and we said, oh, it was just a scare.
Right, but take a look at what's happening.
SPY, just watching.
Algos are much more
Kind of lethargic price action. A little fade today. It's off 260, 0.5%.
The portfolios that are the mixed portfolios with portion of equities and portion of bonds, we've not seen them show up in this market at this point. So that clearly, to me, underscores that this is a growth scare, to your point, and nothing that's predicting that we'll see rates cut soon. The Fed's not ready to cut rates because you're seeing some cracks in the economy, which I agree with 100%, Jim. They still want to get inflation under control. We're so far away from their target, even what might be their new target of 3%, which will be whispered and not
UBS today, UBS says stick with it when they talk about the market. Okay, they say 6% upside to equities by year end. They're looking at the all world. They're talking about global equities, but they're pointing to all of the reasons why, some would suggest it's hard to become bearish. Productivity increases because of AI. Okay, all of the spending to AI. Earnings better than expected, going to continue to hold up.
All right, SPY starting to turn. SPY shorts covering.
And the next move is going to be a cut.
I'm sorry, Josh said something. We can't. Oil prices falling, Josh, is not good. I'm not sure how you're seeing it. Oil prices. Let's just say that I'm wrong. Just listen for a second. Oil prices
Demand
are down.
is not falling. Supply is increasing.
Well, OPEC just held supply constant, and I would tell you that factually, demand is not coming in anywhere near as expected globally. I mean, that's just factual. And that's why crude oil is down 15% over 2 months. It's not the last week. It's not the last month with bad retail sales. It's 2 months. This is in the downslide.
This supports consumer spending.
Yeah, Josh, I hear you. I'm not gonna argue too strongly, but you cannot ignore the demand signal and what falling oil implies about demand. Look, let me say this. I said this earlier. I'm not buyer's stretch. I'm not selling anything.
Okay.
But, look, I need the data to start.
Yeah. SPY is a little short covering, but the trend is down. We're below VWAP. We need to see that crossover to the upside.
I love Josh, okay? And on this, just on Amazon, we're disagreeing on whether I should buy more today. But here's the point.
Dell, flat VWAP. Dell still more than likely will base for the next week or so.
Inflation is coming down and the economy is still growing nicely.
Core Scientific looking for a break higher. Core.
That's not a good number. It's not. So it's too close to stall speed,
Josh.
And we need inflation to keep coming down.
These other moves that I see on my sheet, let's do those now. Because it wasn't just Amazon in which you doubled down on. You bought Keurig Dr. Pepper, KDP. Tell me about that new position.
Dead. So one of my research guys, Sean Russo, and I keep a list of the best stocks in the market, and there are a lot of variables that go into this list, and of course the list changes, but every once in a while a new name will pop up that really forces you to pay attention. And the first thing I'm looking at is the technicals. Let's go ahead and throw up a chart of KDP. Let's do a 3-year chart, Patty, if you could.
Breaking out of a base, KDP.
So basically now you have this
Dr. Pepper
where you have a
getting a move on Josh's comments.
You've got a bullish moving average crossover, 50-day crosses above the 200-day, and the stock is challenging long-time resistance at just about 34.35. I think she's going to punch through here. But this is the type of setup that I absolutely love because the technical improvement here, which is a long time coming, is coinciding with a fundamental change in terms of what's happening at the company. They have a new CEO who took over in April. His name is Tim Cofer. Just to give you a basic idea here, this is a 17 forward PE. Pepsi is 20. This company just unseated Pepsi as the #2 soda brand in the United States. We are now looking at a situation where the new CEO, who has been the COO for a little while, prior was the CEO of another publicly traded company called Central Garden and Pet. Don't ask. I don't even know what the ticker symbol is. But earnings per share growth, gains on the share price, et cetera, were just absolutely stellar. Prior to that, Tim Cofer spent 25 years.
Keurig Dr. Pepper, a little pop on Josh's commentary.
The consumer packaged goods companies, and the truth is, this is a
Carnival.
doesn't need that much. Just needed some.
Okay,
some
SPY.
news. I think you're starting to see people get excited about the company again. This is the company that does the Keurig Green Mountain pods, but then it's also Dr. Pepper, it's Snapple, etc. And it's a defensive stock, which I really don't have a lot of exposure to right now. So I like ADP both fundamentally and I like the technical setup. I think it breaks out.
Jenny?
Josh, it's interesting that you brought that. I've been looking at a lot of consumer staples too, and what's giving me pause is concern over the GLP-1 inhibitor drugs and how those change that kind of behavior. So for things like Kraft Heinz, Hershey's, Smucker's, Pepsi, Keurig Dr.
SPY
Pepper,
just
I'm
fading.
holding off because if we think people are going to consume fewer calories, or if the GLP-1s actually decrease kind of addictive behavior towards coffee, I think they're under pressure. And that gives me pause on that like 17 times multiple, and it even gives me pause on Pepsi's 20 times multiple. So curious if you work that into your analysis along the way.
So my attitude about those types of things, Jenny, is that the market prices them in relatively quickly, and then attitudes about those things change relatively quickly. I don't think that it's a mystery to the market that there are these drugs out there that are changing consumer behavior. Like, I don't think that's like a shock. And I think if you look at the share price,
More shorts covering
this has
SPY.
been plaguing many of the stocks in this group for a really long time. But when they start to break out of that, my attitude is price is telling you that there's more to the story. So that might be like a really long-term issue where these companies have to adjust what they're selling, how they're selling it, et cetera. But companies figure it out. We've seen situations like this in the past where McDonald's has had to make menu changes. So I don't think that it's like not an issue. I think the market is very focused on it already.
Okay.
And that's probably incorporated into the current valuation.
You sleep too much, Kat.
You sold Toast.
You sleep too much.
Stopped out. It was down
Yeah, you do.
5% yesterday.
All right, watching more shorts covering on SPY for now.
Story on this show, many occasions. Why this happened?
The dollar is at 104. 10 years at 4.34%. Just came off the bottom.
I raised the stock to around what my average cost was.
Crude oil's bouncing at 73. TTM down by fade, still in control. Bollinger Band starting to come together on the 0-day setup. Not much to do at the moment. Bitcoin. Oh, Bitcoin going again. Bitcoin popping again. Bitcoin.
Because of the ARR possibilities with Toast software. But so if it's going to get caught up in that and I get stopped out, it does force me to reevaluate.
Bitty's popping again. Big candle. All right, let's look at Bitcoin. All right, so SPY is rolling over a little bit. Bitcoin. All right, so Bitcoin. Look at the daily over on the right. About to take 72,000.
I bought the stock in the 70s. It had gone up as high as over 100. I sold half my position here in the mid 90s, and I just basically could see a situation.
Bitcoin's on the move.
Dead money until we get closer to some sort of a resolution. The other thing that gave me pause on Live Nation with seeing all the concert cancellations, I don't know if these are idiosyncratic situations where J-Lo cancels her entire tour and people kind of point to, well, there's some stuff going on with her relationship with Ben Affleck, blah, blah, blah. There also was almost no demand in some cities for that tour. Okay.
Josh has been doing a lot of defending of Live Nation.
That's an entirely different genre of music.
He doesn't really defend stocks as much as he has. LVN.
Because it was too ambitious. The tickets are too expensive and the venues are too large. The Blackies are awesome.
Live
Everybody
Nation.
understands that. So what that tells me is that the consumer is being choosier about live entertainment, and this coincides with some of the things
Choosier
from other areas
or
of
more
travel and
choosy?
leisure. So I just looked at the picture and I said, you know what? I don't need to be as
Yeah,
greedy
it's sideways.
I'm probably not going to miss anything. I still want to be a long-term investor in Live Nation, but cutting the position in half enabled me to do other things and just made
Okay.
too much sense.
All right, good stuff. So we're going to take a quick break, and we do have more committee moves on the other side of that. Bill Baruch's going to join us next. We've got 2 new buys. We've got 3 new sells, and I know you want to hear what they are, and you will next.
GameStop back above VWAP. GameStop still off $1, 3.68%. AMC doesn't seem like there's much interest in these stocks today at the moment. That could change. Carnival pushing higher off of VWAP, trying to push higher anyway. Chewy, flat VWAP. Coinbase and the Bitcoin stocks on the move. You're so pretty. You're a pretty cat. You know that? Yeah, you're pretty. Somebody wants attention. Bitcoin still going. Bitcoin. That's a risk on signal. 1 of 7. Junk bonds also need to be pushing higher. Junk bonds. Looks like a gravestone doji on the junk bonds. Long-legged doji. Wick up high. Prices down low on the day. So junk bonds not giving us a confirmation signal. Bitcoin, though. Bitcoin looks like buyers keep coming in. So we've got some expanding price. What? What do you want? What's wrong? You got to stop eating. Yeah, you have to stop eating. Don't bite me. This cat will bite me if I don't feed her soon. Not hard, just nibble. I've never been a cat guy, and these cats have worked on me because they're always giving you attention. Animals in general, if you feed them. All right, SPY, more shorts. I got you. Okay, here. Damn, she's just persistent. Let me give her a few things to eat. Here. Now leave me alone. There. Okay. All right. So more short covering on SPY. I still don't like the price action at the moment. Need to see more blocks. We only have a dozen blocks across 3 indices, SPY, Q, and IWM. We only have a dozen blocks. I mean, that's not much. Maybe 14. Looks like 14 blocks. Most of them are on IWM. Let's take a look at IWM. There goes starting to see some short covering. Russell was looking for a reversal around 11 a.m. Eastern. It's 11:30 now.
A busy day of committee moves. Bill Baruch, I said he's going to join us. He does now.
IWM turning.
Nice to have you.
All right, so if you like dips.
Mastech, number 1. Why? This is a name we owned and we loved last year, and it set a record high into August, the day of its earnings.
Dell still basing.
Hugely, it was last August. It's down big. They had problems with visibility in their billing, and there was delays in billing, so their guidance was very, very poor. We ended up getting out of that. Stock
Tesla still flat. Tesla.
For quite a while. Put that money elsewhere in industrials. Now you're starting to see their EPS guidance lift up. I like the diversity in the infrastructure business where they put a lot of cash and spent on different ventures. Like IEA was a company they purchased.
VIX rolling over.
A lot of money integrated. There's less integration costs down the road. I like the infrastructure and the natural.
Down volume still leading.
I like the name I always have. And I think now we
All right, Carnival higher low with a buy signal. Carnival on another buy signal, higher low. Why'd you leave all that there? Why didn't you eat that? I thought you were hungry. You're not going to eat that? Okay. All right, so IWM turning, Q's turning a bit, and SPY. Looks like short covering for now. Okay, we're about to get a crossover. Looking for a crossover now. If you checked out that 10-100 period moving average crossover, it's intended to be used on the 1-minute chart. We're about to get a signal right here. Shorts covering.
question now on where
10-100's about to give a long signal.
is going to lead. And then on top of that, it's run up, but it's also been a little bit of underperforming behind a name like Goldman Sachs. Compared to Chubb, that's broken out within the financial space. Morgan Stanley's running into a lot of overhead supply from its 2022 high. So I want to get out of the way and watch a little bit as I kind of rotate in something where I feel there's a
Okay, want to see the FANG stocks moving higher too?
Weiss, so he's out of Morgan Stanley. You're in, I think, only Goldman or is
Apple
Goldman
rising,
BAC,
Nvidia rising.
Much bigger position. That's a real core position.
What do you think about the financials, though? It's interesting, rising rates said to be.
All right, Netflix too. All right, we got the FANG stocks with a bid. Tesla bid. Okay, looks like the FANG stocks are catching a bid. Amazon, Apple looks good. Broadcom turning the corner. Meta, squeeze. Could go. All right, SPY. All right, we're about to get a crossover on the 1 minute.
Not be the case. I mean, if the Fed starts easing sooner, which not just one or two, but really easing, then you can see the equity market open up sooner.
Well, I mean the capital markets for IPOs and stuff. I mean, I think even the leading VCs think 25.
Yeah, and that's
story. So maybe got a little ahead.
But what's going to be most interesting then is you've got such a flood of new supply coming on. Can the market handle it?
Yeah.
There's huge pipeline.
So, Bill, Weiss sold CAT yesterday. You sold it now too.
I sold it last week.
Oh, you sold it last week. Sorry. Weiss sold it last week.
All right, about to get a crossover on the 10-100.
On the open yesterday. I mean, look at the trajectory of PMIs right now, and that is worrisome. Yesterday's manufacturing PMI, which we sold at,
Futures following through.
was for some of the backlog that was sort of appraised coming into the year is starting to erode, and it shows
Grover's 1 minute chart giving you the same look. We're looking for a crossover, bullish crossover. Well, shorts covering. It looks like could be a bear flag. Need to see a follow through.
I feel like a little too much exposure with that direct, reliance on some of the infrastructure spending, the Inflation Reduction Act that's coming out this summer. So taking away a more global name and reducing Caterpillar and focusing, again, some of that money went to Mass Tech. We also own United Rentals. The idea here is we're
All right, so it looks like it's just a bit of short covering there. Apple's starting to go a bit more. All right, so here we go. We're about to get a crossover. We'll get a buy signal when this crosses over.
But overall, this is a bounce back. I think Friday's move was a gift back to where the earnings breakdown was. So again, overall, just stepping out of that. I mean, if I get back into more staples, some of the discretionary staples, I think there's better places to be than Target. So I am worried about that. And again, overall, these moves, selling 3 and adding 2, and even going back to some moves I made last week, I've netted about 3% cash. We also own the SPY put spreads, which I highlighted 2 weeks ago. So taking a cautious approach here as we work through the data this week, as well as the Fed next week. And I'm really worried whether bad news is going to be bad news. So that's where I am right now. Good stuff. All right, I appreciate you joining us. Thank you, Bill Baruch.
Core
Begin soon. You said
Scientific needs to get above.
Personal buyer strike for a little bit, but you are looking at Chubb.
I'm looking at, because PNC Insurance has done great. Bill's absolutely right. That's the creme de la creme. And I was listening to both Bill and to you, Steve. And here's my thoughts, man. I look at Caterpillar and United Rentals and all these things, and even Morgan Stanley, which he sold. I can see the value there as long as the cracks don't get worse. So, look, I'll be on with you Friday. We'll make
All right, we got a buy signal.
See me selling Friday. You may see
I'd give it a little bit more, see if this bounces off of that rising moving average. Futures look good too.
All right, let's get the headlines now.
A lot of stocks are following through.
President Biden is set to announce this afternoon a new set of executive actions on immigration at the U.S.-Mexico border.
Oh, he's going to start. I'm not going to talk.
The orders will bar migrants who unlawfully cross the southern border from receiving asylum and will go into effect temporarily when there are 7 consecutive calendar days with encounters exceeding 2,500. The official says that threshold has been met and the policy would begin immediately. An aide and 2 lawyers for the 2020 Trump campaign have been charged with forgery in Wisconsin for the so-called fake elector scheme. That's according to court records.
The charges are the latest in a series of criminal prosecutions related to Trump's attempt to overturn the 2020 election results. And tennis star Novak Djokovic has pulled out of the French Open ahead of the quarterfinals. Tournament officials say it's due to an injured right knee. The withdrawal ends Djokovic's bid for back-to-back titles at Roland Garros. Scott, back to you.
He just played a couple of marathon five-setters back-to-back, too, and that helped take a toll, I think, on that knee. Pippa, thank you. It's Pippa Stevens. Coming up, calls the day. Got a price target hike for one credit card stock that Jenny owns. We'll get her take on that because shares are up more than 25% this year. Debate it. Find out if she thinks it has more room to run when we come back.
All right, we're starting to see the markets mush higher. All right, we're looking for a mush. All right, NVIDIA looking good. NVIDIA looks like it's going to rip here. NVIDIA target is still 1,200 for the week. NVIDIA is about to go. Watch NVIDIA. It's trying to go here. Okay. Got to get above this pivot, 1150, and then we could see 1152, 1155, maybe 1170 by tomorrow. I don't know. Look like a little bit of short covering. Now we're starting to fade again. All right. So be careful. No follow through yet. Okay. No follow through yet. So it's more chop. So what I'm seeing is more chop. Look how many times this we get in these crossovers. 1, 2, 1, 2, 1, 2. So we need to see a sustained move in the SPY. Looking for a sustained move in SPY. Okay, maybe we get a follow through now. Okay. SPY's on a buy signal. 1 minute buy. Looking at the futures too. Grover's futures chart, giving us crossovers, bullish crossovers. Meta looks good. Meta looks like it wants to do something. It's that VWAP. Tesla trying to do something. NVIDIA, Netflix, Apple, Amazon. All right, so they're looking like they might hold a bid a little bit more. I don't like the edge in the market right now. You can see on the far right, the Doji spinning top, inside day.
Okay, good. I'm glad you don't know. Weiss, do you know what it is? No, you don't know either. I won't even go there with you, but I know the answer before I asked it. That was kind of the point of the question. Jenny knows. You know why Jenny knows? Because she owns American Express. And that's what it is. And the target was raised to 275 from 260.
American Express on the watch list again this week. It pulled back
I think that's true. And so what you have
a little bit yesterday. Looking for a bounce. Pull back again today.
Right. There is a wide range of consumers out there.
All right, so I need to make some lunch.
And so when you look at American Express and their delinquencies versus, say, Discover, they have far fewer. So what you have right now is a company trading at 17 times earnings with earnings growth for the next 3 years.
Stochastics turning, MACD turning.
Phenomenal, right? That matches up nicely. I think
Google, Chewy trying to go. Watch Chewy. Coinbase, the Bitcoin still moving higher. Bitcoin still moving higher. Coin, CONL.
Break me down.
Bring it back down.
That's
Keep everything
okay,
in check,
I'm
like
used
life
to it.
itself, right
Yeah.
here, okay? Stanley Black & Decker, downgraded to equal weight from overweight. That's also yours. Price target goes to 86 from 100. Sluggish sales, muted growth. Wah, wah,
Okay.
wah.
I'm going to take a 5-minute break, maybe a little bit longer. I just want to make the kids, they're both out of school now. I just want to make them lunch, and I'll be right back.
Industry companies are characterized, and this is exactly right, by excess volume stocking up and price inflation. And what they thought that correction was going to happen a lot faster. So last fall, they upgraded a lot of price targets, and they're saying, whoa, that's happening at a glacial pace. Well, interestingly, when we bought Stanley Black & Decker last May, exact same thesis. Now, what I did smartly last May was I bought it with what I thought was a significant margin of safety. So I was right. So fast forward a year later, I'm up 11% on the stock. I've collected 4.5% of dividend income. And I think you can keep holding it from here, but you're not going to have a home run. It kind of goes to the beginning when I was saying here are different kinds of stocks that you can buy. I think it's slow and steady. So they've got an $86 price target on that now. It would suggest like 3 or 4% upside from where the shares are right now. I think that's a little low.
Can we ask?
No, Josh.
Josh,
This was,
Can we ask? Sorry, go ahead. I was just.
are you going to apologize, Josh?
Josh, go ahead.
What?
Yeah. Okay, this
Josh,
was the
go ahead.
stock
I
that you
wanted to ask you a
proclaimed to be the
question.
worst the worst chart
No, I
you've
was
ever
gonna-
seen
I
in
was-
history, and we had a major fight over it. And yes, I was right. I have a 15% return
All right.
here. Thank you. What were you going to say,
All right,
Josh?
Jenny,
Sorry.
you were wrong. You were wrong
Sorry?
on things, and so was I. Let's
No,
agree
this
to
I
disagree.
was
I want
right
to
on,
ask you
and you were
about.
wrong.
Stanley Black & Decker?
Yeah. When I bought it at 78,
This
you
stock-
had a
this stock is
conviction fit
selling-
and proclaimed it to be the worst chart you'd ever seen. I have 11%
It still
return in a
is.
year, plus a 4.5. Don't even, Joshy.
You're bragging about 11%. Do you understand that the Nasdaq went up 50% last year, and the
Josh,
S&P
I
went up
don't invest for the
25%?
NASDAQ.
Why
I
are
run
you
a dividend
gaslighting
income
us?
strategy. If you want me to pick on your
Congratulations.
missteps, I'm happy to.
I don't. I want to ask you
I wouldn't either.
why you think this stock is selling below where it was trading in 2018. What do you think is going to change here? Because I agree with you on the valuation here, but like this literally
Okay,
is the worst chart I've ever seen.
Oh my God. Okay, so the reason it picks up is because once interest rate cuts start to come, you see a recovery in housing, and that directly benefits the bottom line there. That's it. Like volumes go up, sales go up, earnings go up, it regains its old earnings growth trajectory, and then it is afforded a bigger multiple than it has now. It's pretty straightforward.
I think you both should dial it back a little bit. You know, I'm the voice of reason.
You are
on
the
this
voice
show.
of reason. Look at you.
Yeah.
For this moment.
Yeah, with a real Steve Weiss, please stand up. Speaking of Weiss, Netflix.
Yeah.
Overweight JPM, price target 650.
Yeah, look, I think Netflix could really be a recession-resistant play here as the consumer continues to atrophy somewhat. Netflix now offers a separate pricing plan, which is their ad-supported plan, which gives you the option of cutting your costs and cutting other streaming services to go with them at what really is discount price for great content and the most content out there. So I think it's kind of positive for Netflix what's happening with the economy. So for them, unusually, it's a win-win situation if the economy does well or not so well.
Jenny, really quick, and I mean quick. Kinder and Williams both upgraded to overweight at Wells. Okay, you own both.
Yeah, this is going to be hard to do quick. So 2 weeks ago, I was at a midstream energy conference. Williams' CEO was talking. What he's saying is, he said the physics have outrun the politics, which means that like politics want solar and wind. The reality is the demand for energy needs really reliable energy. That comes from natural gas. with all the data centers that win, the companies that win have access to power. That means they need to bring in natural gas. They are selling hand over fist, Williams and Kinder, selling hand over fist, or rather supplying natural gas hand over fist to utilities, direct consumers like the data centers who are building up their own utilities in-house because utilities can't get there fast enough. There is enormous demand for natural gas. Sorry, that's my version of fast.
That's okay. You did well. You did well. Thank you. Mike Santoli's next. Mike Santoli, our senior markets commentator, is here at Post 9. What do you make of the trade?
You know, 24 hours ago, we talked about how maybe we were on alert for a little bit of a change of character in this market. Bonds rallying, meaning yields coming down, not filtering through into stocks the way we got used to. Same type of thing today. You see yields come in, a little bit of a soft labor market indicator, and you have banks underperforming, small caps underperforming, a really high sensitivity to bonds rallying because of slowdown fears as opposed to better inflation. Don't know if we should make more of it than that over 2 days at the beginning of a month when maybe you're seeing a lot of sort of global unwind of this reflation trade that was in the market. But just noting it that, it has persisted. Very modest moves at the index level. We're still just kind of chopping around a very familiar zone here. The S&P between 5250 and 5300. But it is interesting how it's staying there.
And if it's funny, when we come off of the worst levels, no matter what the day is, it's now NVIDIA's green.
Yeah.
Apple's green. Now, albeit slightly, but Apple's almost back at 195. Yeah, that's ahead of next week. You know,
And I
this
think it's-
WWDC deal.
And again, I always say, like, the way this market these days plays defense is to reach for the highest conviction or most, financially bulletproof.
Yeah,
companies.
Amazon's green.
We'll see again if it's more than just kind of sloshing around and noise right here. But the bank's inability to rally with bonds is something that's a little bit different right here.
Interesting midday moves, though. You know, if you look at these intraday charts on the Amazons and the Apples and the Nvidias, and we'll follow it, and I'll see you on closing bell. Take you through the final hour of trade. Coming up here, we'll give you the setup first on CrowdStrike ahead of its earnings. Josh, obviously, as you know, is in that name. We'll give you the trade next.
Okay, nice little pop on that buy signal. All right, Coinbase still moving higher. Bitcoin a bit higher. Nvidia ripping here. Nvidia going. $11.55 next. That was nice. Nice little pop there.
Better outcomes.
All right, CrowdStrike reporting tonight in overtime. Josh Brown, this is the best performing cyber name year to date. It's up more than 20%. Guess that means the bar's pretty high tonight.
It is. I think the big question is CrowdStrike ready to join the $100 billion club? I'm a long-term investor here. My answer is probably not yet, but it's a $75 billion market cap, and I think at this point, it's become the acknowledged leader in cybersecurity. I don't think it's Palo Alto or any of the other names. I think everyone now realizes CrowdStrike is going to be like one of the most important names here. But the fundamentals just have not, in my opinion, have not come along far enough. It's a young company, but the results every quarter are just so outstanding that even though it's an expensive stock, you really don't want to not be in it. This is my opinion. So we're looking for earnings per share of 89 cents for this quarter. That's a 58% increase in earnings year over year if they can hit it. Revenue should be about 904 million. That's also up huge over last year. Lots of customer wins expected, etc. JP Morgan just put a $400 price target on it. So it was 350. Now it's down closer to 300. They have it on their like conviction list. They think it's a $100 billion company. So I'm staying long. I don't need it to have a huge post earnings move to continue to like it. If it does, I won't complain. But this is not a stock that's underperformed. So like people can calm down a little bit is my outlook.
Okay. All right. Good stuff. We will see in overtime. I look forward to that. We'll take a break. We'll come back. We'll do final trades next. Roughly about a $3.50 debit for basically nearly a 4-week wide call calendar to the upside. $3.50 debit, there's your risk, $350 per spread. But your break evens, Kev, about 175 on the downside, about 195 on the upside. So you can handle a little bit of volatility in there, Kevin, on this one.
Yeah, 3-week spread that should cover the investor meeting. So that'll be interesting. But, Tom, it's for a 3-week spread in Tesla, where the premiums are a bit chunky. $3.50 debit doesn't seem very expensive. It could be. Doesn't mean you're going to make money. You do need to move towards that 185 strike, but it doesn't seem
NVIDIA looking very strong. NVIDIA.
that you're getting in terms of opportunity.
Yeah, and even if it stays near this 175 level, it could potentially be profitable on that. You do have that ability to roll that short option as you get closer to expiration over the next 10 days. Also, that creates credits, that reduces risk, that increases potential profitability on that. Also, so you have some ways to manage this position. You have some assignment risk over the next week and a half, also going into expiration on those short June 14th weekly options. I said 4-week wide spread, it's a 3-week wide spread on this, but you've got some duration in it. You got 31 days until July 5th expiration also, so keep that in mind. So a good look at the call calendar to the upside with a nice range. All right, that's going to do it for Kevin and I today here on Fast Market, but make sure you download the Schwab Network app, available in the Apple App Store, and tune in 24/7 right here on schwabnetwork.com. Stick around. Schwab Network, or Next Gen Investing is coming up.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solution. Features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was hurt, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Missed out on today's market headlines? Get caught up and catch the wrap at schwabnetwork.com. Available anytime, anywhere, on any device for free.
Welcome to Next Trending Midnight. I'm Jenny Ford alongside Alex Coffey.
All right, 3 o'clock Eastern, closing bell. Take you through the final hour with Adam Parker, Malcolm Etheridge, Alicia Levine. I hope you will join me then. Jenny Harrington. At 12:48 p.m., Jim Cramer tweeted or emailed his investing club. Quote, we're buying more of a stock that should rally when the Fed starts cutting rates. That stock?
Stanley Black & Decker.
There
Love
you go.
you too, Jim.
All right.
Thank you.
Good
Well
company.
timed.
All right. What's your final trade?
Ventas. It's the largest healthcare REIT. They benefit from the senior population, 3.6% dividend yield.
All right, Jimmy.
In an uncertain time, I look at the stock that's the most steady in my portfolio. That's Alphabet.
Okay. What do you got?
ASML, if you think the market's going to bounce here, that's one that has a lot of juice. And if you don't, then don't buy it.
All right, Josh Brown, what you got?
Pfizer breaking above its 50-day moving average for the first time in 18 months. Pay attention.
All right, thank you for that. We will certainly pay attention to these markets, and I will take you through that last hour. The exchanges now.
Thank you very much, Scott, and welcome to The Exchange. I'm Kelly Evans, and here's what's ahead. ISM jolts this morning, Atlanta GDP. Look at yields and oil. They're all flashing slowdown signals as we're counting down to the big monthly jobs report this
Yeah. Whatever.
Multiple chart and trade, those up both names. But most
Nvidia pulling back a bit.
At Boeing, which landed a pretty sizable contract with Turkish Airlines, or reportedly so, which gave the stock a little bit of a lift today. Pretty much
SPY
now
also
unchanged
pulling
on the
back a
session,
bit.
But at least an initial pop on that news. We'll also be looking at some retailers selling off after earnings, designer brands, as well as Bath and Body Works. And last but not least, we'll preview HPE ahead of their earnings. Of course, not to be confused with HPQ, but this is the enterprise side of things.
There have been some very, very large sell-offs post-earnings lately in various names, yet the market doesn't seem to reflect that. So I'm looking forward to that conversation later as we look at some of those individual stories that are struggling. Boeing getting some love finally, a stock that needs it after what's been just the most up and down last half decade, let's say, for Boeing. There are going to be textbooks and chapters within those textbooks about Boeing. We've said that before, and that continues to be the case. So we'll talk that. But let's do upvote, downvote, not endorsements, not recommendations. Largely, the epicenter of the optimism of the market has been within this semiconductor world and those that are tied to artificial intelligence. Of course, NVIDIA is the flag bearer of that group.
It is, and I will say that NVIDIA today, impressively so. I mean, we're just hovering right around that all-time high here, and so making a modest but nice move to the upside after just rallying yesterday to kick off the week. I will say, as far as the Computex conference goes, which is underway right now in Taiwan, NVIDIA has received the most attention. I think rightfully so. They did unveil their next generation of GPUs to follow Blackwell. That will be known as the Rubin Ultra chips. Expected to be unveiled in 2026 with the Ultras coming in 2027, but the overall new chip will be coming in 2026, which I think signifies the fact that they're on an annual basis right now for their chip releases, which is seen as a huge win. But we also have some interesting news that Tesla CEO Elon Musk has diverted a significant shipment of NVIDIA AI processors reserved for the EV maker to his ex-social media company. And in doing so, Musk did push back.
So it looks like they keep selling into strength on Nvidia. Just be aware of it.
Which is likely added to the delays that are setting up the supercomputers that the EV maker has said it needs to produce autonomous vehicles and humanoid robots. So
that was actually first released back in February, that is described as a must mandate to make all 100,000 chips available to xAI by the end of the year. So I think that this whole debacle of like the Elon Musk NVIDIA orders is fascinating here, but obviously not enough to lift Tesla shares today, which are down about a half.
Looking at NVIDIA, we're like awkwardly close to that split. Of course, if you're a share investor, it's just going to multiply the number of shares you have by 10. The price of each share will be, 1/10, so it won't really economically make a difference, but it can make a difference if you're an options trader, just simply from a per contract fee standpoint. So if you did a one lot, $5 wide spread in NVIDIA, that's going to be 10 50-cent wide spreads after the split if you held it through. That's a lot more contracts than just the two that would be associated with the $5 wide spread right now. So for me, this is a situation, unless you really want to deal with that, you would have 10 times more contracts that are very, very small spreads. It's maybe just a wait until post-split if you're looking at the options.
I believe it's June 10th, correct?
Exactly, which is next week, right?
It's also the same day as Apple, I believe, WWDC, so that will actually be a surprisingly busy day that will be, I'm sure, keeping on our radar here. But next name today also fits into the similar conversation of Computex in Taiwan, that is Qualcomm, which did say that its new chips will allow customers to operate their laptops extensively without any concern of battery life. And music to my ears, but they're supplying these semiconductors for Microsoft's latest Copilot Plus PCs, which of course do incorporate these more advanced AI features. Both companies highlighted the importance of Qualcomm's hardware in enabling these specific AI enhancements, while also maintaining that very long battery life. Their CEO did say, with its collaboration, it's been groundbreaking compared to the significance of Windows 95. And they emphasized that Windows laptops powered by Qualcomm Snapdragon X Elite systems will boast, again, twice the battery life of the traditional models and can be over 100 times more power efficient and running certain AI features. So they've been working more than a decade, I'd say, to focus on reducing the PC sector's reliance on Intel by introducing these various key components, actually a lot of which are from ARM holdings. So everything is connected, and I always think it's important to differentiate these companies, especially when looking at a lot of these like keynote addresses we've gotten from these major companies in Taiwan.
So obviously this is not a log chart, so it's going to be, 100, 200 even linear chart. That's a 5% decline over there. So it's actually been kind of a decent sell-off, but it doesn't register because it's been such a strong performer when you look at Qualcomm. All things considered, though, a little bit of weakness today, but positive news again for the space. Let's talk some TSM, because TSMC, or just the ticker is TSM, this is the most important name. If you're associated with NVIDIA, AI, you want this train to keep rolling. It all flows through Taiwan Semi.
And like Apple, I mean, Taiwan is actually amazing.
They make the stuff for NVIDIA.
Right, and they're like,
they don't get the, I guess maybe they do get the love, but they don't get the mainstream love that maybe they should when you know that.
They don't, because I do think that their business model is actually one of the most fascinating, because they're a foundry. So they actually like outsource everything, but they also are in everything. So I think, yeah, Taiwan
they make it. They're the manufacturer of the actual chip.
Right, yeah. So they're like, but they're behind, like so many of the chips outside of even just like NVIDIA. I guess NVIDIA though would be the catalyst for, upside. And then not to discount, like that is a pretty good looking 1-year chart, no doubt about it. But they have pulled back about 5.5% from their also recent high. So we have seen some cooling here. Also some news that we saw C.C. Wee, who assumed the chairman and CEO roles on Tuesday, obviously today, marking the first time in years someone has held both positions. So he reiterated their expectations for AI advancements to fuel this recovery in the industry by 2024, he said. And interesting enough, he's very much looking to boost the price of his company's AI production services. He's already discussed this matter, he said, with NVIDIA CEO, of course, Jensen Huang. So he maintained earlier forecasts of around 10% chip market growth this year. That excludes the memory sector, though it was a more conservative outlook versus April, which they did say some challenges related to smartphones and PC market. But he also ruled out the possibility of migrating Taiwan's chip factories out of Taiwan, given the fact that 80 to 90% of the production is now on the island. The move reflects, I think, the ongoing geopolitical tensions we see right now with the U.S. as well as with China. But I also think that this shift in leadership...
About to get a bearish crossover on SPY. Notice how many times we've crossed over, how choppy price action is. Doji pattern.
Driving at least some of the initial optimism. I know we're down about 2.5% here, but but this is the leader of the foundry business. Revenue in the first quarter has represented around 62% of the overall market share in the world. So they do what they do very well. They're just, I think, in a bit of a different like business model space. Their growth hasn't been as astronomical as NVIDIA, but I guess no one has.
Well, it's limited, right? NVIDIA puts like the final touches on it, has the special NVIDIA things that it does to make these AI chips, but the actual devices, like the actual hardware of it, it all starts at TSMC. And so this is an important company. Like whether or not you're invested in it or not, I mean, few companies are a single point of failure for so many as this one. Something happens in Taiwan, hopefully never does, and this company can't operate. I mean, a lot of things shut down. So that's something really interesting. Speaking of shutting down, Intel. What has Intel been doing for years now? No better time to be involved in semiconductors than now, and it's doing nothing.
I know.
It's doing worse than nothing.
It is doing worse than nothing, and it's amazing to me because they made a flurry of chip announcements at this event. So we saw new technical details about their AI PC chip that's called Lunar Lake, expected to start shipping to PC makers in the third quarter. Their announcements obviously were momentous because we are lower on the session here. They also said their new chips will include this neural processing unit or NPUs capable of around 48 trillion operations per second. What I think is really interesting is Intel did say its AI PCs account for nearly 60%, or they expect it to account by 60% of the overall PC market by 2027. They also said that Lunar Lake can power more than 80 PC designs from around 20 PC makers. And they gave some pricing details. So on Gaudi 2 and Gaudi 3, which are their chips that are attempting to take on NVIDIA and AMD in the AI data center workload space, they mentioned that the Gaudi 2 accelerators will be offered at around $65,000. That's a third of their comparable competitive platforms. An 8-processor kit, which includes the Gaudi 3 processors, carries a list price of around $125,000, which they said is 2/3 that of their rival. So I was talking about this with Oliver Rennick today earlier, and I was like, this to me actually is maybe like the best part of the story. So they're not right now on par with NVIDIA or AMD as far as their data processing architecture, but they can do it cheaper. That's something.
Yeah, they got to get some faith, though. 70% of analysts I think I saw are thereabouts are in the hold camp. This stock's lost half its value in 3 years. In the best time ever to be involved in this business, it's not a good thing.
It's really not a good thing. I mean, it's amazing to me that even with all of this news, I heard from their keynote last evening, and then these shares lower this morning. It's just like, Intel, you're just so frustrated with this thing. But we'll be looking outside of the Intel world. We'll be looking at some of the strength we have seen undoubtedly in Taiwan as well as Qualcomm. As our upvotes today, we'll be diving into the technicals as well as some example trades in both of those names. Stick around, Next Gen Investing. We'll be right back.
All right, SPY, NVIDIA, stock's getting a bounce now. There was some selling in there. Interesting. Be careful. Be watchful of selling into strength because it looks like distribution into strength.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
I was born on the south side of Chicago. It's been a long road, but now I'm working for Schwab. I love to help people understand the world through their lens and invest accordingly. You can call us Christmas Eve at 4 o'clock in the morning. We're going to always make sure that you have all the financial tools and support to secure your financial future. That means a lot for my community and every community.
politics, no noise, from bell to bell and beyond, available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's time for our Chart Master segment. So joining me today is our Chart Master, Ben Lichtenstein, the host of Futures. We're talking Taiwan Semi as well as Qualcomm. We'll start off with Taiwan, though, which I think is one of my favorite names to look at in the semi space because it has hands and everything. And like Alex mentioned, it's like it is the supply chain. If anything happens in Taiwan, like any major earthquakes, which there was, it is a huge deal. But the chart has been, we pulled back, I mean, significantly. I don't look strong on a long-term basis, but we have pulled back from recent highs.
Yeah, I think that really sums it up in many ways. The chart has shown some short-term weakness, but I think long-term trend that we're seeing to the upside remains intact. Let's just start with some of that selling. Over the short term and the move lower, we've seen off the highs from just about a week ago. Stocks trading up around 163 to recently down as low as 147. As I look at this chart, my eyes just really drawn to these two areas that the market spent most of the time kind of consolidating around. First and foremost, that 159 level. You can see a breakdown into the middle end of last week and how, for the most part, throughout the beginning of this week, we've just been kind of hanging out right around 151, right? Traded down to 147, back up to this 157, 158 area. But you can see most of the activities occurred in this range. So again, we can see value, which is moving lower just over the last couple of days. As a 5-minute candle chart. Let's step back a little bit. And this is where you're going to, or a 30-minute candle chart, I should say. Let's step back a bit to an hourly. And this is where you're going to start to see some of the strength come into play here. Now, I think there's two ways of looking at this chart. One's a bit more bullish, kind of leaning, which feeds into that longer-term chart we'll look at in a minute. And then one does raise some concerns about TSM in terms of what we've seen as far as the most recent move, again, off that 163 level. So 60-minute candle chart. Let's look at the bearish scenario first and foremost, because we had been seeing value move higher. Again, we're going all the way back to when the stock was trading around 125. You can see a few areas where the market formed these consolidation areas at higher and higher levels. So basically trending higher, as you can see. Now, while we're balancing around 160, just off those highs of around 163, what are we looking at? The most recent area balance prior to the one that we're currently forming. So the bulls are expecting that kind of staircase pattern to continue to the upside, but look what happens. We've actually started to take out a key area that was established on the way up. That 154 zone has been broken now, and we worked our way lower back down to, again, 148-ish. But here's where I think if you want to, and I do give the benefit of the doubt to the bulls here still, lean on this longer-term trend to the upside. I think you could look at it along more lines of this being just kind of one large area that's forming, possibly a 156. Now, the bulls do not want to see that 148 level get taken out. That's for sure, no matter how you slice it, that prior example or the existing one right now. But let's take a step back. You're going to see why I'm giving the benefit of the doubt to the bulls here in this instance, because if you look, you've got a well-defined trend up off those fall 22 lows around $60, if you remember. I mean, again, recently up around 161, currently in a balance. It's forming around 140, and on this daily time frame, I mean, you got some wiggle room here still below 114.
All right, looking for SPY to continue holding above
So I guess here's what I have to say about this. Not what the bulls wanted to see in terms of that move off that 161
support.
level,
Looking
but
for a
it's not
follow through.
necessarily,
S&P 500.
really taken out anything significant at this point. It turned out to be just a false breakout, kind of hanging out in the middle to upper extreme of this range here, still well above 140, and then again well above that 114 level.
Yeah, so I mean, we recently saw things sort of falter, but again, we're making a 2.25% move to the downside today. Still a very, very strong stair-stepper trend to the upside, like you said. But as far as like big picture here, now we're sort of in this weird lull. We don't really have earnings anytime soon. I would have thought that this Computex would be more of a catalyst. I mean, maybe it has been, unfortunately, to the downside. But what are you watching big picture here?
Well, in this chart, again, that lull, you could see some random price activity continue to play out here around this 140 level. The one thing I would watch for that I've been kind of keeping a close eye on is price oftentimes works its way down to this level and then finds that as the potential catalyst to the upside. So something to watch if we get that broader market turnaround, because I do feel like some of that short-term weakness we've seen has been really more, again, related to the broader market rather than TSM name specific. Take a look where we are in terms of the 50-day, the 200-day moving average, because it's talking about if we saw some further price decay, how the bulls would get a little bit concerned, keeping an eye on the.
All right, starting to see a move higher. Potentially, if we get above 52.75, 52.80.
on the broader market, maybe. Again, not necessarily Taiwan semi-specific.
Blaming on the broader market, yeah, because as far as I could see, like the streets didn't really like this the same, and they had nothing but positive developments over the last 24 hours. So with that being said, now Alex, walk us through an example trade leading into, I mean, like the obvious optimism you see from especially a yearly chart.
Yeah, one of the levels that Ben talked about on the shorter time frame was 148. So if that acts as support, we would look for a neutral bullish trade below the support level. That would be around 147. So we did that for this one. Avoiding the earnings, so going to the week
Yesterday, towards the last hour or so, that's when Carnival Cruise Lines got a nice little follow through. Looking for a repeat. Carnival Cruise Lines consolidating above VWAP at the moment. Nice bullish candle today.
Pretty straightforward, Jenny. Stay above 147. You have a chance to make $100. Break down below 144. $200 at stake if you did go through assignment and exercise all the way through expiration for max loss.
And we have a little bit of time here also for this, obviously, to move here. Next thing today, though, is Qualcomm. And Qualcomm, I will say, actually looks very similar to Taiwan in the sense like it's lower today, it's pulled back from its highs, but has a different pattern to get there, per se.
Yeah, short-term weakness, but this one's a little bit more clear when you get into that hourly time frame. Still well-defined trend up, definitely when you step back and look at the bigger picture here. So let's do just that. Starting off in a similar fashion as we did with TSM and some of the selling that we've seen over the short term. Again, off the highs we saw middle of last week and at the end of last week from 217 all the way down to what looks like we bottomed out around that $200 level. But my eyes kind of just drawn to this area where we started to become a bit more overlapping rotational. You can see on the left side of the screen, you can see conviction lower. And
Looking for volume to pick up on the S&P.
We're hanging out around this 204 level. So well-defined upper extreme around 211, we'll call it. Lower extreme lows that we saw again recently around 199, 200. But as long as we're in this range here, it's very random and kind of limited in terms of real conviction one way or the other. So when in doubt, zoom out. Let's do just that. And take a step away from that 5-minute candle chart all the way into the 4-hour now. We're looking at the move lower here that we just saw. Again, short term relative to this longer term trend that continues to be the upside. So this is a somewhat counter trend retreat that we've seen here. This is a 4-hour candle chart. We're going all the way back to the price activity we've seen since the beginning of February. My eye was drawn to the consolidations that have formed along the way up because it helps us determine which way value is moving. It helps us determine trend in this instance. Look, I mean, you can see it's bottom left, top right, but also what these areas of value help us do is, again, determine the range that we're in, which is around 208 right now, and then helps us kind of draw that line in the sand because these consolidation areas help us establish this footprint, this path that the market's taking the upside. And when we start to reverse that, when we take out significant areas that were established on the way up, that's when, again, that working assumption that we're trending higher starts to come into question. But as of right now, it still appears to be a pretty valid one. Take a look, one more step back. I'm going to show you on a weekly candle chart a very well-defined trend up off the 2016 low around 40. Recently, the new 218. And this really I like because it's transitioning from that vertical to the horizontal phase right now. Look at this. It does sort of look like we've gone from that higher highs, higher lows, that real high conviction breakout type phase.
Looking for a follow through.
To something that's occurring and a bit more rotational right around this 210 level. So let's keep an eye on this. This is going to be something to watch, a fun one to watch as that transition occurs and maybe kind of lends itself to a little bit, something a bit more
S&P trying to go.
Yeah, and that's also a really good point. I will say to sort of, re-find our footing here. Although in real time, we're starting to see, I mean, some of these losses maybe ease on the session. I was just hoping, but not quite yet. But as far as big picture here, what are you watching in Qualcomm, which also had nothing but positive news in the last 24 hours, I will say.
Yeah, and bigger picture, the chart really reflects that as well. I mean, look at this, holding above the 50-day moving average, convincingly above. We saw a nice test thereof around that April time frame, and this has seen a couple of tests. Again, the most recent time we were below that. You have to go all the way back to October of last year. So a reflection, again, of some of the strength we've seen in the sector, for one, but also look at this, again, talking about that balance potentially forming at this higher level. You can see how we've transitioned from that kind of higher highs, those green candles that were stacking up into this a bit more sideways and rotational, overlapping, random type price activity. Basically, that momentum we saw to the upside is kind of losing steam, but again, hasn't reversed, doesn't appear at this point as of yet.
No, and still off of lows by like 94 to some change percent. So we are well off of lows, even though we pull back from highs. Great insight has always been like inside our chart same, Alex. I think considering that we've seen a pretty nice rally this year, 40%, but maybe you were still looking for further upside and you believe in Qualcomm in the way that it's right now partnering with some of the major players like a Microsoft in tech.
Yeah, the high was just under 218. Closest strike available to that in the July cycle was 220. Looked at a 220 call calendar, selling June, buying July. If the debit was $2, which is roughly where it was earlier on today, you have $200 in risk. And of course, you know the risk profile of the calendar spread well. It is a mountain-like peak here, Jenny, where you're looking to land it on that strike selected. Very customizable, but clearly a bullish strategy as you need the stock basically back to highs over the next month and a half.
Yeah, and I think that is the hope for a lot of these semiconductor names that have pulled back, but it's like we've got nothing but positive news. I know that hasn't been the case over the last 2 weeks, but definitely positive news for Qualcomm in the last several sessions. So we will leave it there now for our Chartmaster segment. Coming up next, it's time to talk about
Bitcoin still consolidating at the highs. Pretty decent bullish day on Bitcoin.
that is Boeing, but with some positive developments today, Turkish Airlines is a pretty major contract. We'll dive more into what that means for Boeing.
SPY pulling back a bit to VWAP. Got resistance overhead 52.75. Doji spinning top on the right. You can see price action just sideways. Consolidating.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm.
Dell still consolidating, building a base most likely over the next week. Next few trading days, watching Dell.
At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
All the need-to-know info from every trading day. I'm Renita Young. Earnings, data, the biggest headlines that move the market, all condensed into a few minutes. Download the Schwab Network app and join in on the latest market trends, available anytime, anywhere, on any device, for free. Recap your trading day with the wrap, right here on schwabnetwork.com.
Welcome back to Next Gen Investing. It's time for FOMO. So we are talking Boeing, and actually, FOMO feeling perhaps today is not so much to the downside as we are up around 0.75%. But here now joining me.
Looking for S&P to bounce off of VWAP. Maybe we get an end of day run. It's 1:30 on the East Coast, 1:30.
We've had enough bad PR, I think, for a lifetime in Boeing. Well, walk us through the story today. Hey there, Jenny. Yes, Boeing is bucking the downtrend, although the Dow just turned positive, but it's up about 0.75% today, adding to yesterday's gains. It's been a strong start to the month of June for Boeing, although we've only had 2 trading days. But this is linked to a report that Boeing is poised to land, or is landing, a 250 jet order from Turkish Airlines. The deal is a mix of Boeing 737 MAX jets and the larger 787 Dreamliner models. Discussions about pricing, commercial terms, and engine costs are ongoing, but the Turkish chairman did say in event today that they are in advanced stage in terms of those talks, but the definitive timeline for the agreement remains uncertain. The chairman was saying that the decision to order MAX planes will depend on the price of the CFM engines, which is the only supplier, so placing the order may take longer. This, of course, comes just a few months after Turkish Airlines struck a deal for 230 planes from Airbus back in December.
the airline aims to double its fleet in the next decade to 810 aircraft. It had previously said that it wanted to place this big Boeing order, but then back in April, amidst all of these issues with Boeing, the Turkish chairman said they were considering adding more Airbus orders instead. But at this event, he was saying that the order could go to Airbus, but he wants to mitigate risk and work with both manufacturers. So this is giving Boeing shares a nice pop, up about 0.8% right now. We know they've been facing intense scrutiny from lawmakers and regulators over that fuselage blowout earlier this year. There's been whistleblowers, there's production quality issues, but at this event there were quite a few votes of optimism from some of the airline executives.
All right.
So getting a nice pop today. There was also a Deutsche Bank note that signaled the possible resumption of Boeing 737 MAX jet deliveries to China, which could be boosting shares as well. The analyst said that there's a flight on the schedule out of Honolulu for June 7th.
Okay, S&P lifting a bit more. It's through this resistance level. Note the resistance levels below on your ticker, down below, 5270, 5300. So we're above 5275, maybe 5280. I would think there's some supply there where we bounced around this morning. 5280, then 5300.
Like they updated that note to Caroline, saying that while it does appear to be a delivery, they don't see it necessarily as a signal of broader delivery resumption. So that, I guess, is a supplement to that note. But I know you watch these analysts like a hawk. Are they losing faith in Boeing with all this negativity? Or are they still on board?
You know what? I was just checking Deutsche Bank's price target too. $225 price target, not $25. I knew that didn't seem right. I must have pressed the delete button. But thanks for clarifying that updated note. In terms of the actual analyst breakdown for Boeing, 61% of analysts are in the buy camp. Keep in mind, Boeing shares down almost 30% year to date, down about 11% over the past 1 year. But
okay, we're riding the upper bands. Up volume is starting to pick up a little bit. Tick is above zero. Price is above. VWAP continues to show some strength. 5-minute TTM has been bullish since about 12:30. Looking for more. It would be nice to see NVIDIA, these FANG stocks, to continue as well. Netflix still consolidating below 632. All right, Bitcoin fading from the high of the day. Had a pretty decent day today on Bitcoin.
Of negative press quite well, frankly. I know that we're down on the year, but relatively speaking, I think that's because it's just pretty much Airbus and Boeing.
Yeah, I think that it all really boils down to that. I mean, Boeing has taken a hit this year with being down 30% year to date. But you see some of the commentary like Qantas. I am confident when I speak to Boeing leadership team that they are very focused on what they need to do to address their quality issues. Everything we've heard from Boeing gives me the sense that they will get on top of it. It's just one of the positive commentary that I saw coming out of this conference. So I think that that's also important. We've seen other airline executives. I think the Ryanair executive who's been very tough on Boeing. So they don't have to.
GameStop looking for a pop. Bitcoin stocks, a little bit of a pullback. No follow through. VIX bouncing.
Boeing's sort of like Tesla. You can always count on a headline these days. Lately, they've been negative, but let's see if there's more positive commentary to come out for Boeing.
No kidding. It's like Boeing, Tesla, and NVIDIA that we can pretty much rely on every day, even when we're relatively news light in terms of earnings right now. But great insight as always, Caroline Woods, senior markets correspondent for
GameStop starting to move higher. GameStop.
I have to say, I'm sure that there was some more eyeballs on this name, just given the fact that it pulled back substantially.
potentially, if you're a believer in Boeing, I do think that you looked at it as perhaps an opportunity.
Yeah, I think it's a discussion, be it Boeing or just interchange it to XYZ. It doesn't really matter what the ticker is. If you're trading, you see a stock that at one point was trading at almost $450 a share just, 4 or 5 years ago, traded down to below 100, but it's now at the 186 level
GameStop.
at the beginning of the year near 270. So I guess in this
Starting to
case,
move a
it's
bit
asking
more.
the question of
GameStop.
risk to reward. How much downside is there versus upside? Well, if we just look at the kind of price of the last, decade or so, it's been well over $400, and it can only go to zero. So,
Okay, a lot of mixed signals. Doji Day is not surprising. Not trending. Low volume. Chopping people up. Longs and shorts.
It's down a lot in the last 6 months or so as well, over 20%. And it's had a really obviously tough start to the year. You mentioned the fact that it has this kind of firm relationship within the U.S. in this kind of duopoly state where, it does a lot of things defense-wise with the government. It's the American plane maker as well. So many of those major airlines worldwide, of course, based here in the U.S. It takes a lot to make these planes. So if you're looking at a trade here and you wanted to be optimistic, you've seen it maybe perhaps turn the corner. There's been fake outs before, but maybe you've been waiting for this to get a little bit off the lows before you finally enter that trade. It's not up a ton. It's off the lows.
GameStop starting to move.
I looked at a strategy that would benefit from a move higher. In this case,
Pretty low volume today, so be careful. I'm not taking a whole lot of risk on. Doji days are very difficult to trade. We go chop, chop, chop.
It's now over 186, so you may have to adjust the strikes accordingly. But the idea always being try to have a break even near the current share price, and then try to have those risk rewards fairly equal, as we talked about. They're going to be directional. It can go up or it can go down. It can be a coin flip at times. It can be 50-50. Even if you think you know something, there's always a chance for surprise. So equal risk reward, break even near the current share price, and then it's just selecting a duration.
You make a really good point. I mean, the same exact principles to be applied on anything, just depending on your overall conviction. It's just that, fortunately for Boeing, like Caroline didn't mention, there's always headlines. So for that reason, I think that there's always opportunity for volatility or just to see some movement overall.
Well, I think it's a good point, but the last thing I'll say is that's not a secret. If we're talking about that, if Caroline's talking about that, like
Bitcoin still fading. Bitcoin.
And that's a really good point. You're right. This is absolutely no secret.
Nvidia consolidating the morning gains.
But we will leave it there for our Boeing conversation. Now I'd like to welcome in Kevin Green, senior markets correspondent here for the network. And Kevin, you are looking at some of these overall global growth concerns, specifically when it comes to some of the metals like gold, copper. Tell me what's standing out to you today.
Yeah, we are seeing a little bit of a fade when it comes to the reflation trade, Jenny, and across the board, when you're looking at a lot of these commodities, we are seeing some selling that is occurring. Even if you're looking at the 2-month performance when it comes to crude oil down about 15%, we're seeing silver down about 9.5% from its recent highs, and even copper down about 13% from its recent highs. And we're kind of also seeing a little bit of a rotation when it comes to sector performance as well. Today, the leading sectors are real estate, which is going to be a little bit interest rate sensitive, as well as healthcare and consumer staples. And then some of the other sectors that manufacturing and production, like energy, industrial materials, are the ones that are lagging for today, while yields are going lower. So it's going to be an interesting dynamic as we get through the rest of this week. We have a lot of economic data, but if this is going to be the new regime, we might see a little bit of a break when it comes to yields going lower and the equity markets going higher. You're starting to see a little bit of a
Very slow day. Very slow.
just keep your eye out on that reflation trade. If we do see that fade, that could be a good thing when it comes to inflation, but that also could be a bad thing when it comes to economic growth, which I think is a concern that a lot of market participants have here in the United States, as well as around the globe right now.
I think there's 2 actionable lessons from what you just said. First off is sort of beware the crowded trade. It became market consensus that recession's off the table. Inflation's the only thing that can be concerned about. But what
Keurig Dr. Pepper continues higher.
Not saying inflation's going away, not saying there's going to be a recession, but both are a conversation to be had. And so whenever you hear consensus, that should be setting off some alarm bells to maybe think about, what are we missing perhaps in the market. And the second thing I think, Kevin, is
Keurig Dr. Pepper, that one mentioned by Josh Brown earlier today. During noon, note Bollinger Bands are starting to open up, prices pushing the upper bands. RSI is rising, MACD and stochastics turning. Volume of average looks good. Keurig, KDP.
Put on those positions or take them off in response to things. But when it's changing, now that textbook, that playbook doesn't necessarily work.
Yeah, I mean, you are exactly right. And right now we are seeing a little bit of a risk-off type of mode in the market. And that risk-off has also been flowing into positive flows when it comes to the treasury market, especially on the longer end of the curve. The 10-year and the 30-year are definitely seeing a fair amount of positive flows over the last couple of days. And we're kind of like normalizing 20 basis point moves when it comes to treasury yields, which is something that's just not normal. As I say, it was the new all right. I mean, we had some crowded trades that were out there. There's a lot of traders that were looking for $100 oil, a lot of traders that were looking for $7 copper, and sometimes we have that FOMO feeling, as you guys have that segment, and sometimes you got to just be a little bit measured for it. And I think that's what we're seeing right now. Going into second,
All right, Keurig looking for a follow through. We'd like to see up volume pick up a bit. It's still fairly bearish, even though we are grinding a bit higher. SPY probably going to stay in the doji day today. Not much of a follow through candidate at the moment.
I know in real time we're watching NVIDIA start to give up. I mean, it's pretty much now unchanged on the session, but it's like the only green name in our watch list. Hysterical yet again.
KDP looks good. Bollinger Bands opening up. Nice range up here at the highs. Let's look at the weekly. Weekly trend looks good. Turn in the corner above the 10 EMA. 10 EMA rising up and to the right. That's bullish. Price above. Expanding. You got a downtrend breaking.
As well as Bath and Body Works, which is also seeing some steep selling today. We're needing to have more on these retailers' earnings reports coming up next.
Weekly time frame looks good. Volume picking up.
Trading the trending names every day. I'm Tom White, host of Fast Market. Ready for you, ready to.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a window. Other guys were charging $400 or $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put people before money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network. Schwab Network's like no other financial media you've launched because it's all markets, all the time. It's 100% financing. We look at everything as traders and investors. Everything.
All right, let's see. Keurig Dr. Pepper. KDP. Let's see what the numbers look like. KDP.
We are following the numbers all the time relentlessly. We have the best CEO interviews, hands down. They're longer, more thorough.
Earnings growing.
Specifically to our audience. We never take our eye off the ball, which means we're always ahead of our peers.
Trading at Schwab is now powered by Ameritrade, unlocking the power of thinkorswim. With robust charting and analysis tools, nearly endless customization, and up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to Extra Investing. It's time for a look at some earnings. Joining us now here in studio, Rita Young, Senior Markets Correspondent for the Schwab Network. Beginning with designer brands, that stock ticker DBI, it is an ugly day for shareholders, down over 20% here in real time. This in reaction to earnings. I'm guessing they're bad.
Good guess. You know why? Because same-store sales dropped. And some analysts were expecting for it to rise, some were expecting for it not to drop the 2.5% that same-store sales did drop. But either way, it missed expectations across the board pretty much. So did earnings and revenue. Unfortunately, adjusted earnings came in at 8 cents a share, missing the 15-cent estimate. Revenue rose slightly year over year, but still fell short of expectations. It came in at $746.6 million. But it was pretty interesting when you look at same-store sales, because although it did drop year over year, it was better than last year's drop of 10%. This year, same-store sales again fell 2.5%. By the end of the quarter, cash and cash equivalents had fallen year over year to $43.4 million. And the company, good thing, managed to chip away at its inventories. Now it's down slightly from last year. It sits at just over $620 million. The company managed to also declare a 5-cent per share cash dividend. That'll be payable in a couple of weeks. But the CEO said this quarter, the company was pleased to deliver results in line with their expectations for the quarter as they gain more traction in the path to returning designer brands to grow. And what he's talking about is likely that past about 8 consecutive quarters, the company had declining same-store sales, and the company has seen some big drops. I mean, running up for the past year, however, the share price has been pretty strong. It's up over 20% over the past 12 months, I should say. But clearly that's falling now, and it has a lot to do with the stretched consumer. They're just not spending as much on these items anymore at designer brands, different companies.
Okay, this totally ruins my whole theory that these shoewear companies were doing well.
Yeah.
I mean, like we saw really nice results from On as well as Foot Locker.
All right, looking for SPY and the S&P to push a bit higher.
The shoe space, obviously not, because that is all of what designer brands frankly is. I mean, it is DSW, and that is ultimately majority shoes. If you've ever been in one, it is the ultimate like treasure sort of. Yeah, thank you, because it's like a little bit chaotic in there. It kind of gives me the same energy as Nordstrom Rack. But next name today here to look at another retailer selling off. Bath and Body Works. If I call this name best, I mean, I am so thrown with this ticker. Bath and Body Works, though, to get it right, they're the one that is seeing this selling today. We're down almost 13%.
Bath and Body Works selling off earnings, revenue, or actually earnings were okay, but the company had a guidance miss. Earnings did fall from last year, however. They came in at 36 cents, or pardon me, I'm looking at the expectations. Let's go back. Rewind. Earnings per share is expected to be between 31 cents and 36 cents a share in the second quarter. And analysts had expected 39 cents a share. That's a strong decline from last year's 40 cents, what it actually is expected to be. Now, the company is also guiding for sales to be between flat and down 2% in the second quarter. And analysts expected sales to fall no more than 1.3%. And the company did manage to slightly boost the low end of the full year earnings guidance, and that is at $3.05 all the way up to $3.35 a share. The analysts expected $3.31. But during the quarter, the company actually did okay. Clarity, the company did well for adjusted earnings and revenue. They both beat expectations. Adjusted earnings came in at 38 cents, revenue $1.38 billion. Operating income actually rose slightly during the quarter as well. And the number of stores increased, but it was after the company closed about 11 stores. It opened about 16 new ones. The CEO
All right, looking for a follow through.
is maintaining its focus on building brand awareness and engagement. And they say that is actually delivering that greater customer.
GameStop, looking for a push higher. GameStop. Okay, S&P looks like it wants to go. S&P. Pretty choppy today. Back and forth, back and forth. We need to take out 5275, 5280. Head towards 5300. Nvidia fading below. Got a sell signal now on the 10-100 crossover.
Even if you look at Foot Locker, the numbers weren't good. They were just better than feared. You look at what Kohl's, I think it was Kohl's who basically said we stopped discounting and the consumer stopped coming to the store. So the same thing I see here is we're seeing this K-shaped recovery. Those who are struggling a lot right now because they're not invested in NVIDIA. They're not invested in the stock market. So it's like, great, the stock market's at all-time highs, but I can barely, make ends meet. And so there is a theme happening. The stores that are reaching those struggling consumers are struggling right now. There is not, I guess, this perfect economy out there that we keep.
All right, Keurig looking for a follow through.
We saw this in Dollar General earnings as well. Just stores that are struggling more because people who are struggling in the first place were likely going to some of these, or in some areas, I should say, not all across the board. But we are seeing that K-shaped recovery. I remember hearing more about that during COVID. It seems like that's reemerging.
Gosh, and I feel like I've done my part, particularly for.
Okay, Keurig Dr. Pepper making a new high of the day. Keurig KDP. Keurig's making a new high. Starting to go. Breaking out on the daily. Weekly looks good. Earnings look good. Earnings are climbing. So whatever Josh said, I didn't catch everything he said, but it looks good. Keurig.
We'll have more on those expectations for us coming up next.
Keurig going. Nice bullish action. Breaking out of this sideways action we've seen for the past 3-4 weeks. See a volume will pick up. SPY just can't seem to get a follow through.
What's on your mind? Well, I think if you consider what's going on with AI and NVIDIA and even Dell,
Keurig trying to push a bit higher. Keurig.
One of the leaders, actually the second leader in terms of the server market. And we know Dell Technologies was pulled back after its report last week, but the HP actually hasn't performed all that well compared to Dell. And the other, of course, big one that we've seen in terms of price movement in the last year is Supermicro. With their sort of integrated high-performance server technologies with NVIDIA GPU chips. So I think the analysts and investors will be looking at HPE, which is essentially the infrastructure computing arm of what used to be, of course, Hewlett-Packard, which is split down to two different companies. HPQ, which is essentially their computer and printer and mainframe.
Bitcoin starting to turn. Bitcoin having a massive day today. Bitcoin having a big day today. Looking for the follow through. Big bullish candle. Need to get above 72,000. Bitcoin looking good.
Estimates of 38 cents. They're actually quite low compared to 52 cents last year. So they're expecting to show a decline of earnings about 25% compared to the same quarter last year, with revenues at $6.81 billion. That's also expected.
Tesla, nothing. Tesla just flat. Netflix is flat. Google's fading to a new low of the day. Google, no follow through there. NVIDIA trying to turn back up now after a little fade from about 12 o'clock. 12:57, 1 o'clock, we started to fade below. The moving averages now are turning back up. Bitcoin looks pretty strong. Okay, Keurig is still going here.
Hewlett Packard has actually been, underrepresented in the GPU and of course, our AI-based high-performance server market. So if they do announce some improvements in that area of their business, this actually might be a rewarding earnings call.
Yeah, and so I think that's a really interesting point because I was looking at like Dell, for example, which had a pretty
Okay, Coinbase turning back up. Coinbase turning back up. Very slow day. Very slow day. If you're looking for a bullish day, very choppy, low volume kind of chop.
Juniper Networks buys the network gear or hardware, and of course, cybersecurity is another area of their service provision. So they're more in line with Cisco Systems, but they do have, of course, their server division, which puts them a little bit more in line with Dell Technologies. So I think that portion of the business has really been underrepresentative of their performance in the past year. But nonetheless, I mean, looking at Cisco Systems, it hasn't been a great performer the last year because that business is more in line with traditional IT infrastructure, telco, and networking versus what's really hot right now, and that is the build out of AI infrastructure associated with, of course,
All right, nice little follow through. Bitcoin, giddy up. Bitcoin's about to go on another buy signal.
Servers, which are being sold by Dell Technologies and Supermicro.
Yeah, and that's also a very good point. I think it's always important to reiterate, like the various ways AI is not lifting all boats. There's definitely those hot spots like GPUs, CPUs, data center workloads. It's not like large language models are driving the whole overall AI trend, which I think was at one point sort of the narrative. But we will leave it there. Great insight as always.
Core Scientific looking for a follow through, pushing higher. Okay, so Core Scientific is one that Mondo mentioned this morning, mentioning specifically that this this set of moving averages specifically good for day trading. You can see the buy signal here at 11 o'clock. Okay, that was at 6:40. It's 50 cents. So, 50-cent scalp. It took all day. Not a big winner, but Core Scientific is up huge on the day. If you can see on the right side, that big bullish candle, big gap up, but it's holding its gains.
Plus, cash management solutions, all designed for investors like you, with no monthly service fees or account minimums, unlimited ATM fee rebates.
Okay, S&P is still not following through. All right, so all the FANG stocks are showing signs of some profit taking now.
Also, because your investor
Chop.
is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
I'm Nicole Petalini, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical specs. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Trading the trending names every day. Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was hurt, we were able to help her move forward. The client won't care
All right, so we're pressing up against the highs. We could pop here. Watch the S&P. Could pop at this point. We keep pressing up against the highs. Either we're going to get rejected and fall off. It's a doji spinning top. Not expecting much today. There's a lot of volume.
Insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern. Available anytime, anywhere.
But it's getting dragged higher.
Only on the Schwab Network.
Very choppy. I'm watching the FANG stocks. They're up, they're down, they're up, they're down. In a sideways formation pattern. Inside of tight Bollinger Bands. Most of these are squeezing at the moment. Bitcoin trying to give us another buy signal. Bitcoin. Whilst S&P grinds higher. BTC, USD, Bitcoin. Trying to give us a buy signal. Not there yet. 72,000 would be a nice break higher. Looking for the S&P to pop.
Yeah, we're going to get a steady flow of labor data the rest of the week, Nicole, as we're getting some type of labor market data each day from now until we get the jobs report on Friday. But today it was Jones. Job openings and labor turnover surveys.
All right, looking for S&P to do something here. We just keep bouncing up against the top of this range. Supply just around 5278 or so. Between 5277, 5278. Volume looks pretty steady, but lower than usual.
We've taken about 1.5 million, 1.4 million jobs off the market since last summer. So good progress in terms of job openings.
All right, looking for a pop. Watch the S&P. Maybe we get something. Maybe we get rejected again. We'll know pretty quickly. If we get above 5278, that should be a pretty good signal if it follows through.
After the bell today, and there's some issues here at Hewlett Packard. But case in point, the earnings per share they're expecting about 38 cents a share. Now, last quarter was 48 cents a share. A year ago it was 52 cents a share. So some deceleration there.
All right, Bitcoin looks like it's going to go. Watch Bitcoin. All right, we're starting to see some risk on activity. Risk on. Risk on. Nice, Patty. Because
a year ago, so slightly lower in year over year. They're looking for annual
Looks like we're going to break higher. Volume picking up.
stronger margins and an as-a-service offerings. However, their server revenue.
All right. Bitcoin.
So we'll see. Right now, the stock's down only a small amount, a little over 1.
Biddy trying to go. Futures right. There we go. Pop. Pop.
So their earnings coming out after the bell, Nicole.
There goes the S&P. All right. And get going here. S&P getting going. Gone. Okay, all the FANG stocks are showing some short covering, just a little. Nothing to write home about today. It's kind of a sideways sort of day. If you look at Tesla, for example, Tesla just moving sideways. Not much activity there. Keurig Dr. Pepper, we were looking at a little while ago. At the highs, Bitcoin, US dollar, Bitcoin trying to follow through, and S&P trying to go, faking us out, trying to fake us out. We're aware of the supply right here, so a decisive move to the upside on volume. We could get a breakout fade, a breakout reversal, trap some bulls up there, taking out some stops. Got to see 2 or 3 more bullish candles through this area. Half a dozen, my bet, would be good. All right, there goes Netflix. Netflix popping. Okay, Netflix is popping. Okay, Netflix. Choppy price action here as well. Look at the dojis and the wicks on these candles over here on the right. Google turning. Google's still off 80 cents. Tesla's off 90 cents. NVIDIA's up $1 now. NVIDIA, after dipping, had an early morning run up over here into noon. Nice little run up into noon. S&P still trying to go. S&P's trying to go.
I mean, you might see some additional guidance about where they might go, but I think they're likely to just leave rates where they are for now. And then maybe in November, there's some action that they sell off or, systemic issues coming through. I think that a lot of the issues
Meta starting to move here as well. Meta, watching Meta. Meta's running. Well, Netflix, okay, Meta's getting some giddy up here. Yesterday, end of day, we did something like this too. There's yesterday. All my dreams seemed far away yesterday. How about yours? Yesterday. There it is. Okay. Trying to go. Meta. Trying to go. S&P still trying to push through this area. Qs as well. Qs just got rejected right there. And IWM. Okay, IWM, no follow through. S&P. Trying to go at S&P. VIX is a bit lower. Okay, Core Scientific is above PMZ. Pushing above PMZ. Pre-market zone, PMZ. Cores. All right, Core Scientific is pushing above the PMZ zone. That's the pre-market zone.
The unemployment rate is still quite low at 3.9%. That's at sort of close to record levels. And inflation is still higher than the Fed's target, which is 2%. Whether you measure it by a CPI or the PCE price deflator, you're well above the
Core is starting to run the upper bands. There goes the S&P. S&P go time.
We're probably getting close to the tail end of their hiking cycle. But the bigger concern there is that rates came from 0% previously. 24 months ago, rates were effectively zero. And now, the short-term policy rate
is above 5%. So that's just a dramatic change. That impact on most borrowers is significant.
Right. So you're more in the camp of it's more
Okay, be aware there's a potential for a bear trap, a bull trap, a reversal, run up. It needs to see a half dozen or so candles above this. Watch that chart on the right. A move above yesterday's, well, 5,300 would definitely be good. There goes Meta. Okay, Netflix. All right, so we see some buying activity here on the FANG stocks. NVIDIA, Netflix, Apple, Amazon, Meta, Tesla still flat, Google. All right, watching closely. Broadcom trying to get a bid here as well, back above VWAP. All right, rejected again. Damn it, damn it, damn it. No follow through. Still got some supply here. People want to take profits. Jumia is going. JMIA. Yeah, it looks pretty good.
To benefit quite nicely, we think, from the Inflation Reduction Act, which created tax incentives for utilities.
Meta, just go already. Come on, Meta, get going. Giddy up, Meta. All right, most of the FANG stocks look pretty good right here, so that should help the S&P. There goes Meta. Meta pushing higher. Currently on a buy signal. Volume looking pretty strong there on Meta. Can we take out the high of the day? Need to get above 478 or so, 477. Apple starting to move. Apple looks good. Apple starting to move. On the move. Okay, Meta still looks good. Meta. Okay, S&P trying to go. S&P pushing the upper boundary of today. Would love to see this candle on the right take out yesterday's high, 5,300. We hit 5,300 yesterday and immediately reversed back below VWAP. Russell traded that nicely on the put side. Until about 12 o'clock, we had a reversal and a buy signal, looking for follow through and SPY. Okay, started to grind higher. There goes the S&P. All right, the volume picking up. S&P volume picking up. Volume's picking up. There goes S&P. All right, so a nice bullish signal most of the day. Right around 12:30 went higher. So the morning session was more of a fade. Evening session 12:30. Very simple indicator. A 10 EMA, a 10 period moving average, and a 100 period moving average crossovers. You don't catch the highs or the lows exactly, but you can use this for a confirmation signal. It works pretty well. I had ChatGPT do that for me last night. It was pretty interesting. I was watching a YouTube video of a guy using ChatGPT to code in PineScript, which I've always wanted to learn. I just didn't have the time. Well, this kind of alleviates that step. Okay, so you can see with this here, okay, so S&P continues higher. You can see very quickly, I just asked ChatGPT, went to chatgpt.com for the free version. In the very top, I asked it to create a PineScript code that's an indicator of two moving averages that are user defined. Start with a 10 period and a 100 period as default. Make sure, make labels for buy and sell signals at crossovers. Very simple, but ChatGPT responded and did all the coding. So really cool. I'm going to be experimenting with that with other indicators, other ideas, scans for stocks, all sorts of things that come to mind.
trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m.
Okay, still got a bid in the FANG stocks. You got 1, 2, 6, 7, 8 FANG stocks are bid at the moment. Continue higher. What's Microsoft doing? Microsoft. I didn't buy any Microsoft. Somebody, I think it was, who was it that mentioned Microsoft? Microsoft's starting to go green now. Okay, S&P is traveling, man. Okay, that's what's in my head right now, traveling, man.
Last week, another report from Wall Street Journal suggesting that Japanese whiskey company Suntory was also interested in acquiring Boston.
Ricky Nelson did a version, right? Traveling Man. Didn't Allman Brothers have Leonard Skinner? Leonard Skinner, Traveling Man. Yeah. So. Yep. Yep. You called it, Russell.
The driving force behind the very latest frenzy, and of course, many of the frenzy. And the platform, the E-Trade platform, this is all amid some potential alleged stock manipulation, right? There's concern about that. We'll continue to follow that.
All right, here we go. S&P on the move, looking good. All right, there you go. Just for the record, right around 12 o'clock, 11 Central, Russell was saying that he's going to take his profits and be done with it because he's looking for 11 a.m. reversal in the Dallas area, Central Time, and it's exactly when we started to get a crossover, and then a confirmation buy around 12:25. There goes SPY. Yeah, Bob Seger too. I like the Bob Seger version. The best. Okay, nice move. There we go. SPY.
Well, honestly, I'm looking back to Friday's action. Because Friday's action brought us a beautiful hammer candle. If you're a bullish trader, you're looking for these significant indications, these swing levels that we can get. And we had an excellent close on Friday, really strong push.
Tesla looks like it could get something going here. Watch Tesla.
New short-term high there on the close. So we actually finished higher than we had been on Thursday. We got a little continuation day yesterday.
Tesla with a bid.
Lower, about halfway down yesterday's candle. And I'm gonna
Okay, S&P. Wow, there goes the S&P. Big move there.
Price action. The level drawn in there, 51.65 up to 51.80 is the approximation of the 50-day moving average, and I think that's a green color there. And then, but beyond that, we're just waiting to see, can we actually get back that 52-week high at 53.42, potentially pushing through that. That's a very important level, though. Of course, Nicole. We dawdled there for about 2 weeks. We didn't really get any new highs. We retreated, tested the 50 days. So bullish traders are likely re-encouraged, maybe reinvigorated by that excellent candle on last Friday and the fact that we've maintained the 50-day and the uptrend line that's been working since middle of October. So there's a lot that remains relatively bullish here. I think very short-term traders are wondering, can we get through yesterday's high or yesterday's low? We're just waiting for the next short-term direction that can kind of give a hint as to how things may play the rest of this week.
Okay, so we'll watch for all of that. And Friday, of course, so busy, a lot of volatility, a lot of volume. It was the MSCI rebalance here at the New York Stock Exchange. It was very busy going into the close in particular. How about Duolingo? Why did you pick this one for today?
Well, I often hear from our viewers that they're looking for rangy securities that are stuck in ranges that provide.
Okay, there it goes.
Opportunities. Duolingo fits that bill as we look at it today. Now, recently, just yesterday.
A lot of good calls. Money Magic looking at options activity for his targets. Russell gave us a nice reversal around 11. We got a confirmation. On the reversal buy signal right around 12-ish.
To the 245 level. So this did make a really strong push in November of last year to create this new price range. It's not a shock that it's taken this lengthy window of time for consolidation. It's been about 6 months in length. But if you're simply looking at the range itself, bullish traders might have the edge.
All right, nice move there. Take some profits off. Nice move. You guys doing a great job. Doing a great job in the trading room.
Opportunities in the neighborhood of 235 to 245 for profit taking if they'd like. But, you know, we all know there's no guarantee these ranges hold. But when a range breaks one way or the other, it does become significant. So we are at least in an area where we have some opportunity for action eventually.
Word here and the potential as it could head higher. Let's look at Elf Beauty.
This one's a little different. So less range at this point because what we've had in the last 2 weeks has been an exceptional rally off of the most recent earnings report there right around May 22nd. The stock popped up beautifully. We've been trading it around that 150 zone, popped up all the way to 199, and then it flagged for about the last 5 sessions and not looking at today, yesterday. Well, yesterday's price action is what took it outside of that cloth portion of this flag, potential flag pattern. And so what traders might be looking for is, can we stay outside of that cloth portion bullishly, favorably, with potential to challenge the prior highs we've seen, Nicole? And that gets us back potentially to 222, but once more, when we're looking at these, there are
Good idea to take some. Wow, look at this freaking thing go. What's the Q's doing? The Q's looking good too. Q's ripping too.
Some traders might target an approximation over 235. Now we're just talking potential calculations that traders might incorporate. By no means can we say it's going to get there, but that's just a couple of levels that bullish traders might look at in ELF here, just based on perhaps what's gone on in the last 2-3 days as we've broken out of this flag pattern.
Yeah, and we've had the CFO on several times here on the network, so I'm glad you're speaking about the company. We'll keep an eye on it. That gap up on earnings certainly helps a name like Elf Beauty. We'll watch it. Thank you. Month to date up 2.8, 1 month of 20%. Kevin Horner, Senior Manager at Trading Services, Charles Schwab. Thank you. Coming up, we will turn our focus over to Insmed. This is a global biopharma company. The CEO saying that we want to discuss the latest positive results for the company's treatment for patients who are fighting lung disease. We'll be right back.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a window, and other guys were charging $400 to $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put people before. Be proud of offering a good product at fair price. I think he'd be extremely proud of me.
Kickstart your morning with a full dose of commodities, technical analysis, economic data, and live reaction in global markets. Available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Knock, knock. Number one broker here for the number one hit maker.
Thanks for swinging by, Carl.
No problem. So, those for
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full service wealth management, advice, invest on my own, and trade on Thinkorswim.
No, Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
All right, Keurig Dr. Pepper still going. Keurig.
You invest with Schwab.
Accelerate your market knowledge and shift your perspective.
Oh, look at Q's go. Holy smokes. Remember those 480s that you mentioned there, Lee Star? Those are doing really well.
Fast Market
Oh man, the pump before was it ISM?
There was a time when large cap tech and large cap mega cap plays, the proper PE was in the range of 10 to 12. And we're now at 30-ish on a lot of these names. And I am concerned about that overall because there's so much focus on the investing in these names that if there is a hiccup, this market's in a lot of trouble.
These people keep saying that. There's so much. Look at that volume. Wow. Pretty impressive volume. Front row. Now the Q's turn.
We're watching Insmed, a global biopharma company which focuses on treating rare diseases. Insmed recently announced positive results from an ASPEN study on treatment for patients with lung disease. Let's get some more details, hear more about the results and a capital raise too. Will Lewis is with us, CEO at Insmed. Thank you so much for being with us. When people think of Insmed, what should they be thinking of?
Well, in the last week, they'll be thinking of what's called the ASPEN study. The ASPEN study was a landmark study that examined the use of our drug, brensocatib, in the treatment of a pulmonary disease called bronchiectasis. This is a disease that numbers about 500,000 people in
All right.
the US.
Keurig Dr. Pepper still rising.
Treated, and it has a long history where drug development has been tried and failed. So this result last week is really a breakthrough for those patients that have this condition.
So this Aspen phase 3 study, obviously, when you get to phase 3, you've spent a lot of money, you've put a lot of research and development in there, but that's a good feeling, isn't it, to get to this point? What's the timeline going forward?
Well, the timeline going forward for bronchiectasis, we intend to file with the FDA in the fourth quarter of this year, and we will expect to launch about a year from now in the US, assuming things go as expected. We will also be filing in Europe and Japan, where we are.
Okay, nice QQQ move there. The Q's on the move. All right, nice.
What diseases are we talking about? I feel like
Core Scientific, Carnival. Looks good, Carnival. Dell.
As impactful as this is in bronchiectasis, it's really the underlying biology, the mechanism of action. This is a first in disease and a first in mechanism technology. I mean, this is why we invest in biotechnology, because moments like this come along rarely, but when they do, they're quite dramatic. And we've unlocked this so-called DPP1 mechanism, which gets involved in the inflammation that occurs within the body. And so by interrupting that inflammatory cascade, you can provide benefit not just to bronchiectasis, but to other diseases as well. And we've already started some work in those, and those fall outside of the pulmonary area.
I see a lot of overweight ratings, buy ratings.
Okay, Bitcoin.
The shares gained on all of this news and hit 23-year highs. Does that tell you it's a big deal?
Bitcoin going. Look at a candle. Viagra candle.
Very happy with that, and all of them had a buy going into the data. I think this was considered a very significant binary event. But for us, the most important thing is that we've been preparing for this for a long time. So as much as the starting gun went off for Wall Street last week, it went off for us years ago, and we've been building the commercial infrastructure and the needed capabilities to be able to launch this drug effectively around the world.
Anything related to COVID, post-COVID? I mean, I think of everybody with all those lung issues. Anything that any of this go with that or no?
Well, it doesn't impact COVID specifically, but certainly the challenge of executing a trial in the respiratory space during the COVID epidemic had its moments. But I was pleased to see such a clean result from these data. And when you look for clinical data to have a positive result, you obviously want to see the primary endpoint of the study, what you're testing for, be a clean win, and we had that for both doses we tested. But more importantly, because this is going to be a chronic medication that has a good safety profile.
Okay, Q's still going. Q's still going.
More rapid, and patients will be able to be on this chronically for the rest of their life, hopefully without significant side effects.
And it seems that there are more pros than cons to this capital raise, right? Tell us a little bit about it.
Yeah, the capital raise went very smoothly. There were a number of people out there that wanted to get involved in the name after the Aspen trial. And I think it's because of the Aspen trial as a kickoff.
Yeah.
It's because of the subsequent diseases we're going to be investigating with this compound.
Mhm,
But we also have two
mhm.
other programs at the company, one of which is already commercial and is looking to have a label expansion.
Dell.
And that's called
Okay, looking for
Vertex.
Dell
The
to
other
break.
one is
There
a
goes
program
Dell.
called
Dell,
CIP
bullish
for pulmonary
candle.
hypertension. All three of these combined represent really first order
Dell's
first
trying now.
products.
The Qs. Wow. Very nice on the Qs. Those 480 calls you mentioned, Lisa, are doing well.
It is sort of right in the center of that population you're referring to. And of course, we conducted this study on a global basis. So we have all the necessary clinical data to be able to secure regulatory approvals for those populations, not just here, but in Europe and Japan.
Qs on the move.
A fairly smooth approval process. We certainly hope that'll be the case. But we'll be anxious to turn our attention to the
You know what's interesting about this particular setup that I shared with you guys tonight, last night. Psychologically, it's, I won't say easier, but psychologically, it's more reassuring. It gives you more confidence when you see that buy signal on the chart. I mean, if I remove the buy signals and all you see was a crossover, maybe you take it, maybe you don't. But it's just psychologically, seeing that buy signal or sell signal, your behavior changes a little bit. And then you see the volume coming in, people taking profits into strength, not a bad idea. I was thinking about that during lunchtime. Yep.
And it's given only in a handful of cases. So
Yep.
it speaks to what people believe will be the impact of this medicine on this patient population.
A lot of folks love investing in healthcare or pharma or big pharma or biotech or biopharma. Tell me a little bit of something for the investors. I mean, a lot of times they're looking for either some groundbreaking story or dividends or good economy, bad economy, still need medications and such. A big picture thought.
Yeah, I think as we step back, the reason you invest in biotechnology are for moments like this. And to the audience that we're speaking to right now, this is what you call that moment of idiosyncratic alpha creation, because you have a data readout that resets the expectation and understanding of what is going on with a particular potential biology. And in so doing, you unlock the potential of a product to potentially address multiple diseases, the so-called pipeline in a product.
Right.
Those come along very rarely. And when they do, it usually heralds the beginning of a very long and positive run for the company that is behind them.
Will Lewis, CEO at Insmed, thank you so much. Great to see you. Appreciate it. Congratulations. Stocks at 23-year highs, folks. Groundbreaking developments in the phase 3 trials that we've been seeing, studies. Coming up, we will focus on the robotics sector, which is seeing slight year-over-year.
All right, nice follow through. Wow, look at this. Look at this pop. NVIDIA going.
Of this sector to improve the potential for robotics. We'll be right back.
Oh, by the way, NVIDIA. New highs. If I start whistling, that's not a good thing. Look at NVIDIA go. Boom. Nice. Just for the record, the chart I just posted of SPY in the room, that's a 60-minute crossover. That's one that Leastar coined with the 110, 120 crossover. Moving averages on the 60-minute, 110, 120. When you cross above, you're looking for 2 to 3 months out, a 40 delta call. When it drops below, you're looking at 40 delta put, 2 months out.
Trading
at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the Watch List. I'm Nicole Fedelides live at the New York Stock Exchange. Glad you're with us. Quick look here at the markets, 90 minutes left in the trading day. And we're seeing some up arrows in some of the areas that are more defensive, such as real estate, utilities, healthcare, and so on. But the market is turning over a little bit to the positive side. Tech is giving it a go, for example, as well as consumer staples. Ben Lichtenstein's with us, senior futures contributor. 90 minutes.
Okay, so Q's, SPY, looks like consolidation at the highs. I'll be taking some profits off into strength. 235, keeps them on. Maybe we get a little follow through. I'm got a feeling we're going to dip a little bit.
As well, we're seeing this pattern repeat itself. And I just wanted to start with some of the price activity we've seen off the lows from yesterday because we were just trading around 53, 52.34. If you remember, the high yesterday was up around 53.04, 53.05. So even this that we've seen today has a short.
Okay, Rivian starting to bounce. Rivian.
Unable to take out the lows from yesterday. Actually, I think on this chart I have it. There it is on the left side of your screen. Now you can see the high from yesterday. So all of today's price activity, Nicole, again, very much contained. But let's just kind of focus again on this rally we've seen off the lows from yesterday, because on this 1 minute candle chart, you're going to see almost a similar depiction. Bottom left to top right, trend up as we're seeing on a daily candle chart. So this little move right here, pretty representative of what we've seen basically since the October lows here. If you remember when the S&Ps were down around 4,100 all the way up to 53.41 recently, we're balancing up here, establishing a bit of a range near these all-time highs. So holding this upper level, Nicole, just off historic highs, but market that's in a bit of a digestive phase, it looks like to me.
All right. So as we digest that, let's talk about treasuries and yields in particular.
Yeah.
Some of your thoughts there.
Well, I think we're in a bit of a holding pattern because we're trying to figure out what's going on with treasuries, with yields. Is bad still good in terms of eco data? Because recently we've seen treasuries bid up amidst some of that selling we've seen in stocks. Yields have come off a little bit, but yet again, we've seen selling in stocks, not that typical inverse correlation that's been playing out recently. Taking a look at the 10-year here, though, you can see the move lower from 4.6% down to 4.3% recently, Nicole. And just want to point out that, again, with rates lower, you'd expect to see stocks getting a little bit of support, right? So well below that 4.5% level that we've been kind of keeping an eye on as that sort of psychological threshold.
All right, seeing some more profit taking in Qs and SPY at the highs. Not a bad idea.
Back around this time last year, we're talking 3.6 up to 5% the fall of last year. And here we are. Look at this, smack dab in the middle, 4.3. So market's comfortable here right now, that's for sure. Whether you're talking the S&Ps or yields at this point. It's also a market that's waiting for more information. We'll get a bit of a look at some of the jobs in between now and Friday. But that's, I think, the next big catalyst coming our way, Nicole.
Okay, thank you so much. Ben Lichtenstein, great to see you. Appreciate it. Time to turn our focus straight over to the robotics sector and learn more about that. Joining me, Zeno Mercer, Senior Research Analyst at Vetify. Thank you for being here.
Thanks for having me.
So when people think of Vetify, I mean, you're basically looking over, they have so much research under the umbrella there. You focus on the robotics part of things. How have things been looking?
Yeah, the last, I guess, 14 months have been pretty tough for the robotics space. I want people to think and separate in their minds kind of like the AI space and the robotics space. Robotics has a lot of traditional exposure to manufacturing, industrials, a lot of these kind of what many think is like traditional markets. These newer markets that we'll get into in a little bit haven't really started to take off yet. So exposure, we saw labor strikes and delays in the U.S. China was slower than expected last year, and we're starting to see kind of a bottom. So this earnings season saw some upside, some inventory leveling out, and really across the board we're seeing
excitement, if you will, a muted excitement for the second half of this year in the robotic space globally.
Where do we stand on, valuation? And we think about this group overall, AI, but robotics.
Qs are looking good.
For more growth?
Yeah, so kind of separating those two out again, the robotic space is valued up basically at all-time average levels right now. So
Bitcoin hanging out at the highs of the day.
So really, not many people are looking at robotics right now as an investment concept. It's kind of an overlooked area. You've got a lot of blue chip companies that are like John Deere, Teradyne, a lot of other players that are at compressed valuations and have exposure to kind of the energy transition, the semiconductor space, and the chip manufacturing in the U.S. So there's a lot of 5-10 year headwinds coming up ahead in those traditional markets that are misunderstood.
So at this point now, I mean, you are in charge of the whole index or ETF, right?
Yeah, we identify, we manage the index.
Okay.
Yes.
So tell me a little bit about, what goes in there, how often are there names changing and rebalancing and things like that?
Yeah, so our process is evaluating the companies and universe that are in robotics and AI, and we rebalance every quarter. So we have a scoring process. We work with our strategic advisors who are leading roboticists and AI professors and leaders across the globe, and that's incorporated into a process. So we're looking at technology leadership, market leadership, where companies are investing, and basically the outlooks for the end markets and where they're heading.
What would you like people to know about robotics? And then I won't say, instead of AI, sure there's something you want them to know about AI as well. So, because you obviously are differentiating the two in a big way. Tell me a little bit about what people should know about robotics, a little bit about what they need to know about AI.
Right. So robotics makes our modern world. Robotics has been around a lot longer than artificial intelligence has, without the help of AI. So you've got traditional manufacturing in China, but you also have, healthcare. So we've had surgical robots for decades now, like Da Vinci from Intuitive Surgical, right? So the applications are a lot more vast. Now, AI is going to benefit and impact robotics. It's going to improve capabilities, the dexterity.
All right, we're still consolidating at the highs.
Really going to raise the bar on what they're able to do, and also the way they work together and can coordinate. We're about to see a massive expansion in the applications in which robotics can be deployed. So that's physical world automation, where AI is kind of like this decision making and data, right? So they work together, but they're very different end markets.
And really, robotics, you said, is really showing us where we're heading, even more so than AI, right?
Well, I would say they're both pointing where the world's headed right now.
All right, consolidating. Looks like profit taking. Volume is starting to taper off a little bit, but pretty nice day so far. At the end of the day, the evening session, I should say, between noon and now, nice bullish action. Our Bitcoin trying to get something going. End of day.
GDP is, if you break down GDP worldwide, a bigger portion is in the physical world elements like making and moving.
So we're doing a lot of big picture talking, and we mentioned Robo. What are some of the names of companies that are the biggest, the ones with the most, the leaders? If people want to be sort of more proficient in the world of robotics, they need to know what companies.
Yeah. So the way we break it down in Robo is we have kind of the underlying technology. So companies that are involved in control systems and mechanics, like precision movement.
Right.
There's also tools like, okay, these robots can move. Are they doing anything? Are they touching anything? So you've got companies like Movanta with a division that focuses on precision control. So they actually go into a lot of surgical robots. But they also help with the actual tools at the end. So they help switch tools. So that's in automotive and battery manufacturing, solar manufacturing. But they also have kind of the end.
All right, it's starting to look like we're going to pop again. Looks like we're going to pop. S&P. Pretty extended. I wouldn't be buying anything up here. But it looks like we're going to go. We've got an hour and 15 to go. S&P, 0 day. Probably pretty cheap, right? 0 day. What are they going for right now? 5,300 for today. What are they going for? 5,300. All right, those are $4.80, $4.80.
And in addition to that, that NVIDIA hardware is about 2/3 of the cost. When you think about names like Tesla and NVIDIA and, you know, the Mag 7.
Do they run this? Do they run this?
Do you have an AI thought for us? I mean, it's interesting to hear that of the $10 billion in AI-related expenditures this year, about half will be internal.
Yeah, so right now, we're definitely seeing
S&P.
for quite some time this data center bull rush.
Looks like we're going to run one more time.
Edge compute and people trying to, and organizations trying to make AI operate more on the edge and the connectivity and cybersecurity around that. So not really anticipating a slowdown in chips anytime soon. Like we expect that to become a greater proportion again of world GDP, kind of is like the brain behind it. If you think about it, the human brain is 20% of energy consumption. So when you think about something that's controlling an operating system, it makes sense that there's going to be a control system that has energy consumption.
Right.
Yeah.
Good. I loved hearing all about this, and we'll watch for the rebalancings and any big news on.
All right, S&P going. 5,300. I didn't think we'd get there today, but hey, there we are. 5,300 just overhead. We tested it to start the week. Faded yesterday. Crossover signal in the evening session. Looks like we could go. All right, looks like we're going to go here, S&P. Starting to climb. Not a bad day. Not a bad day.
I remember when I first started flying, and we would experience turbulence. I would watch the flight attendants. They're not nervous, and I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
Let's go. LETSGO.
Cut the cord on the way you get market news. It's market on close.
5,300. Trying to test 5,300. Here we go. Pushing a bit higher.
From the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern. Available anytime, anywhere, on any device for free. Only on the Schwab Network.
Nice. Nice, nice, nice.
Ameritrade is now part of Schwab, bringing you an elevated experience.
AMC just grinding along. Still flat on the day, AMC. GameStop, what are you doing, GameStop? Where is GameStop? GameStop, 50 cents. All right, lack of interest in that. It looks like everybody's focused on Bitcoin for now.
Sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Power your portfolio with the Schwab Network. Schwab Network, available anytime, anywhere, on your device for free. Schwab Network.
Welcome back to the watch list. Focusing on those retailers, specialty retailers. Is the consumer going to shop so they drop or not? We've gotten in some of the data. We want to hear what our panel has to say. Greg Portell's with us, senior partner, global market lead at Commodity, and Sucharita Kodali.
Core Scientific, looking good.
Research. Thank you both for being with us. So, Greg,
Keurig Dr. Pepper at the high of the day.
Bath and Body Works. Some of your thoughts and your interpretation into what happened.
I think it illustrates the challenge that retailers have with innovation and innovation cycle. You know, we looked at some of the apparel retailers, they've been able to innovate because they have a breadth of opportunities around apparel. But a company like Bath and Body Works, their span for innovation is much narrower, so they run the risk of becoming too broad in their assortment, but yet can also still have to innovate. So that's the challenge for a company. How do they maintain consumer interest in a fairly narrow segment?
What do you think, Sucharita? I mean,
Still dealing with this session high that we're looking at right now.
I think that what we're really seeing
consumer is really just cutting back on a lot of discretionary spend. Now, there is the argument about the lipstick effect, and is this a little luxury that people would be able to afford?
All right, seeing a little profit taking, no follow through. Not a good idea to buy calls up here, even if you're looking for a breakout. Look for a dip and then a reversal.
They're going to Walmart and going to maybe the cosmetics department in those stores. That's really where we are seeing the spend. It's less at Bath and Body Works.
It's interesting because we talk about cosmetics. Can we have a little divergence between Ulta and e.l.f. a little bit, Teresa?
Well, I think that Ulta has been on a pretty strong run for a number of years. They had a lot of great strategic decisions that led to growth. It's everything from their expansion into the newer shopping developments that were being built and were developing newer cohorts and new audiences. They were able to pull in
Take some profits off in the strength. Looking for follow through tomorrow, perhaps.
able to get Estee Lauder brands. That was a big deal because the Lauder brands, for the most part, were only distributed either directly to consumers or through department stores. So those were some big reasons that
Still looking really strong. Rather surprised.
Right. You know, Greg, as you take a look at the big retail picture, I mean, how do we stand on these specialty retailers? I do want to ask you about Lululemon tomorrow, but first, just the big picture. How are these retailers, especially retailers in particular, doing for 2024? What do you expect?
Well, there's two parts to it.
Come on, push one more time.
Very strong. Units may be down, but consumers are spending. What we're seeing among the retail sector so far is that not every retailer is going to win. The retailers that have
Okay.
that have that ability
Chewy.
product through the stores
A little dip. Looking for a follow through in Chewy.
become the winners in this scenario.
Get back above VWAP. Dell. Still can't manage to get above 139, the high this morning. Facebook pushing a bit higher. Facebook looked pretty good there. Tight Bollinger Bands. It's in the upper Bollinger Bands. Looking for a follow through. SPY in the Qs giving us some nice signals. NVIDIA making new highs.
So you see these companies that are focusing and then executing ruthlessly, doing well in the market.
All right. And Sucharita, first, Greg, I wanted to ask you about Lululemon. That's tomorrow after the close. What are you expecting?
It's the same story. They have to be able to move product through those stores quickly. It's a category that can get very stale. If we think about the old sense of retailing, anything that was on the shelf for 90 days was good. Now, if it's there for 90 minutes, it's a drag on velocity.
S&P. All right, seeing a little bit more profit taking on the S&P. Bitcoin.
And Lulu is such a brand that it has brand loyalty. There's a certain element of this more higher socioeconomic bracket shopper. Tell me some of your thoughts, Sucharita, about this name. Had given some soft guidance, I believe.
Meta. Nice follow through on Meta.
Well, they are certainly one of the apparel companies that has outpaced the apparel industry. They're outpacing retail. So that suggests that it is both on target from a merchandise standpoint. So it's definitely speaking to the shopper. And it is also taking share from its competitive set, whether you are talking about other wholesale manufacturers like Nike, Adidas, Under Armour, and others. So
Meta and a nice little pop.
We seem to be seeing in numbers from Lulu. So
SPHD up 20 cents on the day. Big mover. SPHD, sarcasm aside. Okay, Bitcoin, a little bit of a fade. Bitcoin.
Driving the spend that is happening. They're not as affected by inflation. And inflation, for the most part, is less prevalent in physical goods retail anyway at this point in time. The inflation that we're still seeing is largely driven by services.
And Lulu's not really penetrated amongst the lower end consumer that is affected by inflation figures and higher prices.
Right, understood. There was an article that says retailers pin soft sales on three I's: inflation, interest rates, and IRS. Greg, I'll leave you with some final thoughts here in the big picture of the world of retailers.
Consumer demand continues to be strong, so to use any sort of market-based excuse for underperforming is a bit unrealistic. It's still on the retailers and their management teams to be able to deliver a quality product on time and as expected. And that's an important part of the story. There are winners to be had, and there's consumer money to be taken.
And then situation just about consumers' behaviors as they sort of have been changing the behavior a little bit.
Bitcoin still fading. Pretty good, decent day. Looking for a follow through tomorrow. 72,000 is a big level.
Yeah, what we are typically seeing is absolutely a flight to value for most essential goods. So what does that mean? That can be anything from selecting private label goods that are on a shelf to even purchasing in bulk, which is part of the reason that you'll see a company like Costco doing well. So you'll have these types of retail sectors.
Bitcoin looking for a bounce.
Dollar channel. Certainly grocers that do have fair pricing and are often able to offer those private label value goods like a Lidl or even a Trader Joe's. You should see strength in some of those numbers. Of course, Walmart. The only odd exception I have seen in this recent
All right, S&P 500. Let me just check the equal weight index. Number of stocks trading above their 50-day. Number of stocks trading above their 20-day. Okay, both of these turned up but sideways, right below 50-day right now. So we're inside of this triangle. Trying to get above the 50-day. Not much neutral signal here. A neutral signal. Okay, neutral signal. Okay, let's take a look at the New York FANG index. End of day, we're seeing a lot of these Bitcoin stocks with a. Okay, this is what we're looking for. Remember, yesterday I talked about we need a second bullish day. Okay, so it's a kind of a squeamish or a timid bullish candle, but it is a bullish candle. So maybe we'll wait until tomorrow. We should see better action out of New York FANG. If we do, yeah, look for a follow through. You got RSI rising, stochastics turning. Okay, stochastics is turning. MACD is trying to turn. Both of these are turning. Okay.
That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account.
Okay, no follow through in the S&P.
Binge watch the market with the Schwab Network.
RSI.
24 hours a day, 7 days a week at schwabnetwork.com.
Maybe tomorrow we'll get a follow through. Looking pretty good though. Second bullish day. As long as this doesn't turn into a selling candle.
Young lady who was mid-30s, couple of kids, recently went through a divorce. She had a lot of questions. I watched my mother go through being a single mom. At the end of the day, my mom.
Okay, NVIDIA fading, take some profits. NVIDIA fading. I would take some profits off if you're day trading it.
Your clients don't care how much you know until they know how much you care.
Bitcoin fading a bit more. Risk off. SPY.
Nathan, I'm my favorite client.
Great. I started using Schwab investing themes, so now I occasionally invest in trends, like wearable tech.
Trends. All that research sounds exhausting.
Nope. Schwab's technology does the work. So if I spot an opportunity in robotics or pets, well, I can buy those stocks in a few clicks.
Can't just be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes up to 25 stocks in just a few clicks.
All right, we're a bit extended up here at the highs, pulling back a bit.
Market on close is coming up.
Microcloud hologram moving hollow moving higher.
Early in the session, as we got green, pretty much forming into the bell as we get a pickup in some of the tech stuff that was lagging, and general little risk appetite building throughout the day here. Once again, we saw data this morning.
Let's see, what does Meta look like? Meta,
And the Russell's still down, which does kind of
a little fade from the high. Meta still squeezing. Meta. Keurig Dr. Pepper at the highs of the session. KDP looking good. Breaking out today. KDP to new highs. KDP breaking out the new highs. Keurig Dr. Pepper broke above 34.48. Bollinger Bands opening up, looking for a fast move. RSI shows that there's still potential for a follow through tomorrow. Strength of trend, we're not above 70 yet. Volume looks good. MACD and stochastics turning. So this looks like it could follow through tomorrow. Maybe wait until tomorrow. Don't buy it up here at the high of the day, whatever you do.
So that's kind of what we're dealing with. Bonds, at least, are pretty clearly a winner right now as treasuries are catching a bid again. About 40 bips. 10-year futures have been elevated and strong now all week. And the 10-year yield is making lower lows on the chart. So,
all right, NVIDIA pulling back pretty fast here. NVIDIA dropping pretty fast. So is SPY. Wow, big move there. Russell catching that. Mondo catching that move lower. Nice trade, guys.
We're really challenging it here as rates are trying to break down the low wick of the candle here in today's session for the 10-year. Pretty much
yeah, nice move.
At the lows from mid-May. So this is definitely a pretty big deal, as we were just talking about the opposite scenario where it looked like yields wanted to break out again and move higher. A very strong rejection of that.
Somebody took profits up there.
And we see the dollar softening up as well. That to be expected when yields are coming off where they are. Dollar a little bit more resilient today after getting really beat up yesterday. But I do think that there's a case that the dollar can kind of hang on here. That was what I was talking about yesterday. We're revisiting the bull case for the dollar, given the central bank differential still favor the greenback as a currency. The ECB set to cut this week, but the Fed, without any cuts in sight, still
got an hour left. We're probably going to get a bearish signal end of day. S&P.
There's been a ton of ups and downs over the year. The dollar has swung around quite a bit, but we're actually basically like right in the middle of where most of the trading has happened. So I do think you're going to be hard pressed to see any massive moves in the dollar right now, but range bound might just be the way to think about it, as there are some forces that could support it. The fact that other central banks are going to cut and we're not right now, and some things that might work against it. Fact those other central banks are going to cut might give the economies a bit of a boost.
Dropping off pretty fast. SPY.
Expectations might shift away here, especially if our data continue to come in shy of expectations. Now, where we are getting some volatility, and I think you can probably expect to see some more volatility, is in commodities generally. We saw that crude dropped off pretty hard here over the last couple of days, but copper as well after it. So really fast and intense spike has come back up. Commodity index DBC here cutting down. It's lower lows on the chart. A lot of volatility and kind of the opposite of the dollar volume profile. If you look over on the right panel there, the big volume node showing you that the commodity index doesn't spend a ton of time in the middle of this range. It's sort of at the top or at the bottom. So we look for a good bit of volatility in both directions. Personally, I don't have a bias on which way it's going to go or any particular strong thoughts. Commodities are a tough trade for a reason, but it does look like it is pretty prone to volatility in terms of asset classes. Think about stocks that have just been kind of sitting below the highs. Yes, we've had a good bit of swinginess in bonds too. The dollar sitting in the 1-year range. Commodities look more like the volatile asset class right now. And I think that speaks generally to the difficulty of pinning down the macro narrative right now. Just a couple weeks ago, it looked like the threat was going to be inflation still, higher rates, and pressure coming through that route. Now it's suddenly looking like with economic data and expectations, maybe there's too much slowness in the economy. So definitely a tough one to figure out as far as the macro goes, but we'll get some more clarity later this week with all the big jobs data. Lastly, just want to point out the semiconductors kind of missing again today. That limits your upside when NVIDIA and its ilk are not ramping up, given how important they've been. Just also maybe a little expected when Intel is your main news leader overnight from Taiwan, just not quite the same ability to stoke a broad rally like its peers. So it chips a little bit lower here today by about 0.75%. Jay Horn, Ken Hicks joining me here in the studio. The data, Ken, right now is seeming to drive most of the action. Given today's bond rally, it seems like that's our big move here on the week is generally Treasury strength.
They're buying bonds. Yeah, I think this is the first course of a 4-course meal we're going to get throughout the rest of the week. And we're going to try to figure out what it all means. And really, if you look at the overall stock environment, yeah, you're getting moves in bonds. That's the only place things are moving right now. Stocks are frozen here. They don't know if they should rally or if they should sell off. Is the weak economy or is the higher bonds, lower yields going to be good for stocks? I don't think they know yet.
Yeah.
So right now, the only thing moving, even the dollar's not moving. So really, right now, what we're getting, we're starting to get information, and we have no idea which way stocks are going to go by the end of the week. It's just not ready yet. You got to react.
Okay, we're still drifting a bit lower, SPY. So taking profits off into strength was wise.
Overall, stocks aren't moving very much. Earnings aren't doing much. They're doing what they normally do, but right now we're at the beginning of this, and it's going to play out over.
Okay, so SPY giving you a sell signal a little bit later, so you need to use a different strategy for reversal. But you got a confirmation sell on the 1 minute, so that's the 1 minute chart. So if you were using the 5 minute, you still got a pretty good sell. All right, so this 10-100 is meant to be used with the 1 minute chart. All right, so there you go. So we had a buy signal over here at 12:30, and it moved higher until 2:30, 2:40, 2:50. Not bad. Not a bad trade.
A little bit more of a defensive trade. I watched the anti-beta factor fund, BTAL, that's doing well today, but
We're right on VWAP right now. SPY at VWAP.
Cruise lines, maybe, Jenny. That's one group that's up. Like our winner today is Carnival.
I know, and who would have thought after the company that they're retiring their P&O Cruises Australia brand and they're combining their Australian operation. So I think what this signals is a company that is now like continuing to try to drive the capacity to Carnival. I mean, they did say that despite Carnival's capacity that rises by about 25% since 2018, including transferring these ships from Costa Cruises, guesstimate remains incredibly strong. So they said they're leveraging their scale at this point to absorb the entire brand into their most popular cruise line. I don't necessarily know if I think that this could be read as entirely a positive. I mean, I think that anytime there's this like merger, you kind of wonder then like.
Okay, look for bear flags and more downside potentially. We got a sell signal, so. I am picking up on the downside. Bear flag for now.
Royal though has been the exception. Royal's been doing great. I think it's kind of an interesting.
I think they're gonna do all time high today.
Yeah, Royal's been unstoppable. In the last 2 days, I mean, Carnival's week is just like going crazy. So, look, the consumer's still ready to travel. We kind of know that they're willing to shell out a bit, but some of these companies, from a financial sense, are like not the premier balance sheet out there.
It's got the high, yeah, they've got Silver Seas, they've got Celebrity. Those are two mid to high and extremely high end brands.
Sound like a cruising atmosphere.
I was going to say, this is like our resident expert of the cruise space. Yeah, hey.
You sounded like Silver Seas. That's like okay. That sounded like is that that's
I
the name
was
of it,
just,
right?
I
It's
was
not an
just, I
analogy.
did it a year ago.
Okay, I like them. It's a Viking. That's the new. They one that's for public. That's a nice. They do like river boats. And they have like a cruise in like the Nile and Egypt. You see, that's the one I can get on board with these like river cruise.
So you're not an icon of the seas guy, Kevin Hanks. You're not 15,000 people. That's cool.
But it's not Silver Seas.
Right. Okay.
So I'm gonna find Butler. I got.
So this tells us some, that's what I'm saying now. Like this gives us some morsel of information, even though we've seen some of the cooling of data. Like consumers, we're ready to spend if we get something out of it. Still, you know, we're flying, traveling. There are areas where still there's plenty of activity.
We just had our best travel day on record. They had 5 of the strongest travel days ever.
Right. So
That's
we can't be
crazy.
that concerned that the economy is going over a cliff.
There is no more loyal, consistent customer out there than Midway.
You did predict that during COVID, where I was like, all right, this industry's done as a non-cruiser. And they were like, they're gonna stay alive. They're gonna be there.
Because we're the anti-cruise trade, I think. Because I cannot imagine myself with 15,000 people, but I can now understand. We've talked about this. I'm educated. These are different kinds of cruise. Yes.
Do I recommend Carnival if that's where your price point is?
Sure.
You'll have fun, but if you're looking for a little higher end cruise,
Right, the cruise stand, as they say, like Kevin Hanks. Look, here's the thing, doesn't move the market. The stuff that does move the market, Jenny, I think we kind of knew this morning when Intel was the lead story out of Taiwan and the context that we weren't going to have a big semiconductor day. The market just like, doesn't matter what Hank Nelson
All right, starting to rise a bit back to VWAP.
They don't, and how disappointing that we're down 0.7%. I mean, like, you could have completely predicted. I could have basically told you we'd be down less than 1%, but not higher after this news from the Computex. And I think that, like, that's so disappointing because this should be like the next catalyst. I mean, what are we looking for here in Intel? They're trying to compete in the overall space with like, I mean, they basically unveiled the pricing for some of their models that will compete with an AMD or NVIDIA, and nothing, no love for this news.
at what point in his presentation did he go, is this on?
Right. They also kind of like
The market ignored him.
took a little stab at Jensen too. It didn't really work.
You're not in a place to be basically going after NVIDIA when you're down 40%.
Right. The things they're at the lows too. You would think if there were a time when maybe someone would take a shot at owning Intel after the presentation being $30. I mean, this is the 52-week low. So, all right, not going to do it though for the market. Nasdaq's still trying to eke out a small climb here.
Does the hyperscaler that is exposed to AI, you're talking about 3% of the market, where maybe the earnings model.
All right, so Bitcoin trying to hold a really bullish candle today, very bullish candle today. Need to be above 72,000 hopefully tomorrow.
Doesn't have to be stagflation. No, people afraid that the economy's slowing. What if we just have below trend growth at a time when the Fed's not ready to cut? Market's going lower. That's happened. That's if people were really afraid that's going to happen for 6 or 8 weeks. Market's going lower. Yeah, for sure. I think the story for the bull market has just been simple. Financial conditions have been easy and margins have been going up. And you want to fight a market. You want to fight the U.S. equity market when those two things, you go for it. And you're going to get your face ripped off when you get fired. Okay, it's that simple. We had easy conditions since last November, and margins were going up for most companies. Your loan got to be loan, right? So now I think the question is what we're all kind of trying to figure out is when will financial conditions tighten up? What's going to cause them to tighten? Is it
failed options on the 10-year yield? Is it, something else, some, rumblings in the real estate part, which we saw a little last week or two, and not much. I mean, it's got to make you afraid that conditions tighten, that lending tightens up again, that kind of stuff. I'm not really seeing any signs of that, but that would be something that would make me worried because then multiples would crack. And margins are still going up for a lot of businesses. We got to watch commodities. We got to watch productivity versus wages. But so far, I think 75% of the
All right, still looks like a bear flag. Looks like we could roll over.
that's the one thing the sell side is good at. They're good at knowing when the margin will be up or down. They're not very good at forecasting price targets and ratings and earnings, as you know. But they're pretty good about.
Well, you're painting a bullish case.
Right now,
there's no reason to get overly negative about it.
That's right. You shouldn't get over negative about anything. Subject to the fact that financial business start tightening, you have to change your mind. But what you described in your scenario is financial business tightening. In my mind. Okay.
Or the pocket where the Fed stays hawkish and the data continues to be weak and the Fed doesn't move fast enough to change its hawkish tone, because as we know, the institution itself is slow, right? So does the data move quicker than the Fed? That's her pocket for a volatile moment. But overall, we just think the base case is so positive. Look, rising margins, rising earnings, you can't fight it. You can't fight it. You'll find the weak areas for sure in a market like
Fight the margins.
Don't fight the margins. Look, in the end, look at small caps. Small caps telling you the story, which is high rates hurt some areas of businesses and some areas of the market, and it's going to continue to be that way. Either we have a slowdown in small caps fed, or we have a
Okay, lifting a little bit more, so a little profit taking. Starting to see a bit more bids come into the market. NVIDIA, seeing bids coming into the market. They're going to play this NVIDIA into the close, huh? 44 minutes to go. They are buying up NVIDIA now. These people got to be junkies, Goes down for 15 minutes and goes back up. They catch a bid. Wow, pretty impressive price action on NVIDIA.
And 1 month this year, the market's been down 2.5% or more. Every other month has been pretty good. I'm just saying, I don't know. I'm just saying maybe they're doing okay. And I don't want the Fed to cut a bunch of times, because if they do, that means the economy and everything got way worse. So what am I rooting for? Kind of like nothing. Pause. Maybe do one cut if things get a little worse. I don't need them to start freaking out. And I don't know why people had 7 cuts or whatever the hell they had in January. That never made any sense to me. I don't know who they interviewed for that, but it's got to be the most.
Well, we're going to get a look next week, Alicia, from the forecast.
Wednesday, right?
Right. We'll get it next week. I mean, so
Next market calendar. After you get back to Cole.
I'll be on a plane. Yeah.
I'll be on the screen.
Yeah, please.
Look, they're likely to, their target fundraise is probably going to go lower for they're not going to cut more this year. I think they're going to let the market know it's 2 this year, and that's it.
Okay, so then do I want to do what Tony Pascal?
All right, starting to see markets lift again.
His is, mega caps continue to play the mega caps, sword and shield. I keep saying that because that's what he says. Sword, offense, shield, protection.
It's both. It's not having to borrow. It's having free cash flow and having the businesses to invest $350 billion in AI and still not kill your margin. That is extraordinary. That's the most. That's why they're 30 times earnings and not 15 times earnings, and that's why they're still growing their multiple and their earnings forecast. So you have to see it in large cap.
Isn't it interesting too? Day like today, speaking of sort of large cap versus small cap, again, the yield's down, Russell down, small caps down. That tells you everything about growth scare, right? Otherwise, you'd have Russell up. But if you think that the most economically sensitive stocks are in the market, small caps.
I don't understand. There's a group of people who think small caps can outperform and down, flat to down, but I don't get that at all.
Pretty impressive price action. Starting to drift back up now. Shorts needing to cover. All right, so do we roll over? Okay, it's still a bear flag though. We just ran into the 100 period moving average, starting to roll over. Starting to sell.
Weeks ago, I don't think
they're going to benefit from AI in the first wave on the cost side, like maybe healthcare or other places will. Most financial businesses have to do things in duplicate. They have to predict their employee and customer behavior. They have a lot of spending up front before maybe they can realize the productivity. And as you know, at least depends what bank you go to, but the bank I go to, they invest in productivity. I just get worse and worse service every year. So I'm not sure it's great for the shareholder. We'll see. But I know it's not good for the customer. So we'll see what happens. I'm less optimistic than banks. That's what
I think on the financials, it's about the Basel III endgame here, and that's part of the reason we had the rally is the signaling that the endgame is not going to be as stringent as originally proposed, and part of that massive rally we saw because the capital needs are not going to be as high, so you return more to shareholders as part of what we saw. Okay. Ultimately bullish, some clouds out there. Go big.
Okay.
Go big and go
like
fast.
I'm bullish on air conditioning. Maybe show Carrier. We blast some of their products. You look like you need some more. Right? It is so hot in here. Carrier's my favorite stock. Ever since the Coles comment, been beaten up.
Okay, NVIDIA. Nice little reversal on NVIDIA. Making a new all-time high, NVIDIA. We make it to 1200 before the split. Oh, speaking of that, I got to call my dentist. Okay, got to do that tomorrow. All right.
This gold is part of the latest in a series of strategic moves aimed to increase capacity. Everybody wants to go on a cruise. Shares up 5%. Shares of betting for Flutter Entertainment are up over 1% right now after Oppenheimer analysts said the stock is outperformed. They raised their price target to $240. They say the company offers players the most.
Still a bear flag until it isn't.
And they believe the company could absorb higher taxes better than FanDuel as well as DraftKings. Shares are up, but still up only like 7% year to date.
All right. Christina, thank you. We'll see you in just a bit. We're just getting started. Up next, we have your earnings rundown. CrowdStrike reports in overtime. Shareholder Malcolm Etheridge, he is standing by. Tell us how he's playing that space and the overall software space, which Adam Barker does not like, as he just told you. We're live from the New York Stock Exchange. You're watching Closing Bell on CNBC.
Okay, doesn't look like a bear flag anymore. Let's see if we get above the 100 period right here. Grover set up very similar. He uses the 105 period moving average on the futures chart. And two moving averages. Looking for that crossover. A 9 period and a 21 period crossing back up through. Looking for it to cross back up through the 105.
Service wealth management, advice, invest on my
All right, not through yet.
Oh, I gotta take this call. Schwab. Have a choice.
Keurig, Dr. Pepper making new highs. Keurig making new highs.
Commodities action on Futures with Ben Lichtenstein weekdays, 8 a.m. Eastern on the Schwab Network. Available anytime, anywhere, on any device for free.
Keurig, Dr. Pepper making a new high. Continues higher. All right. Still going. Keurig, Dr. Pepper, KDP. Haven't had a Dr. Pepper in eons. Corn syrup's not good for you. All right, looks good. All right, so keeping an eye on S&P. Keurig, Dr. Pepper moving higher.
I'm Tom White. I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
do a little trading here with Tony Zhang and joining us. So from Options Player, the chief strategist, looking at Home Depot today after a couple busy weeks for retail earnings. We're talking
Carnival about to break higher. Carnival.
for cruise lines and travel, Tony, but what about fixing up the home?
Yeah, the story is quite different when you look at.
All right, Carnival. D pivot right here. It looks like we might go. Carnival Cruise Lines. Okay, let's go to the 5-minute chart. 5-minute. Okay, so you can see the A pivot, B pivot, C pivot. Looking for D now. Moving above VWAP. S&P still trying to push a bit higher. Still a bear flag.
Recently, now on track for their worst quarter in some 2 years. The sector faces another critical test later today in overtime when CrowdStrike reports. Joining me now, CrowdStrike shareholder and CNBC contributor Malcolm Etheridge of CIC Wealth. It's good to see you. I mean, we kind of can separate some of these software stocks from the pack. This stock has done it, right? CrowdStrike has had the best performance of any of the cyber names year to date.
Okay, CCL having a good day today. CCL. Here's Carnival. Bollinger Bands opening up top and bottom. We look for a fast move when that happens. RSI is showing you strength of trend. Volume shows institutions have been picking up shares. No doubt the whole group looking good. NCLH, Norwegian Cruise Lines, having a nice reversal. And Royal Caribbean, of course, which has been trending. Most of this year. This continuation. But yeah, CCL looks good. CCL. S&P bouncing. S&P with the bounce. Cash above VWAP. Looking forward to push higher. Nice bounce at VWAP. Coinbase also looking pretty strong. Coinbase, COIN, Coinbase. Nice bullish candle on the daily. CONL. Core Scientific. Pulling back right now. Core looks like profit takers.
For a whole host of reasons, right? PwC did a survey of about 4,000 global leaders, and the enterprise spend on cybersecurity is expected to increase in 2024 for these guys above 2023.
Core Scientific pulling back. S&P Cash. S&P Cash, a little bounce above VWAP.
So this is, again, like I said, a non-discretionary line item for a lot of these companies. So if there are shareholders that don't like what they hear today, decide to dump those shares, and we start to trend toward, I think 270 is the support level for this name, I will definitely be a buyer of those shares because long term, this is the sector that I want to be in.
What about Palo Alto, though? Because again, all cyber security software stocks say that 10 times. Are not created equal.
So I think it's interesting that Palo Alto was once upon a time the leader and the dominant name in this space. They still are by market cap, but CrowdStrike is gaining on them. I think it definitely is something to be said that they have receded, but I also think it was an overreaction by the market to sell off Palo Alto shares when the word platformization was used and came out, right? Yes, they definitely have quite a bit of legacy on-premise technology that's going to need to be moved to the cloud, but the opportunity in this space, the number of dollars that are going to have to be spent in this space, because just as good as the cyber defenses are becoming, the attacks are getting even better with the use of AI and everything else that we've talked about countless times in this network. And so I just think it's short-sighted for shareholders to look at Palo Alto, for example, who's going to benefit from the $10 billion plus that's in the Biden administration's budget for cyber defense this year alone, because they have the highest level of federal contracts in the cyberspace. I just think it's short-sighted for investors who are considering selling off either of these names, but specifically CrowdStrike, because their model, the whole land and expand model that they offer,
it's just easy for me as an investor to understand. You got five of our modules that you really love. Well, here's another five that you'll love more. And you like those 10? Well, here's another five that you'll love more. And they just incrementally weave their way through your organization to the point that they're the only provider that you have in a very fragmented, otherwise sector. There's a lot of opportunity for consolidation here in this industry. And I think CrowdStrike being the leader shouldn't be very much of a surprise.
What about tech at large? You know, roared back from the April lows. It's up 7.5% in a month. What now?
Well, you know, I love software. I love tech primarily because of this little thing called operating leverage, right? Anytime these companies build a product, it costs them almost nothing to push that product to the very next customer once it's built, right? So the operating leverage for them being able to sell one more seat on that software is what makes these companies so attractive. And unfortunately, I look at a company like Tesla, where Elon Musk has proven just how easy it is to keep things coming. So Twitter's still alive after he bought it and let go about 80% of the workforce. And so that right there proves the thesis that once the software is up and running, it doesn't really cost them very much to get it in the hands of the next customer.
Well, I mean, that's the greatest example. To be honest with you, I mean, the value is a lot less than what you paid for it.
Yeah, no, I don't mean necessarily that is a great investment. I just mean that it proves the thesis that you don't need.
All right, so still looks like a bear flag if it doesn't continue higher. We got some sellers coming in, so with no follow through on this bounce. So people will be reluctant to hold these. Probably will take profits, and that could turn into more selling. Hard to say right now. We're staying above 42.75, 42.80, 52. Sorry, 52.75, 52.80 support at the moment. So we'll see how this goes.
You think we're higher or lower by the end of the year on the S&P from where we are now? Let's call it 5,300. What seems reasonable to you?
I think we end the year higher than where we are today. I think investors are showing an interest.
It is a tough day to trade. So I have to say, when there's a lack of volume or lower volume, we get these whippy moves in the price action. Okay, we got a nice bunch of buy and sell signals. All of these buy and sell signals telling you that there's very choppy price action. Zooming out to the 15-minute, a little bit easier to see, but still very choppy on the 15-minute for today. Today's Tuesday, the 4th of June. We started off the day with a sideways price action, dipped briefly, and then took off to the upside, back down to VWAP, 52.75 support. If we get above 5,300, that would be major. That would be a major move. It's possible that we could see that. 528 was what Money Magic called earlier. So we made it above 528, hit 529, and reversed. A little profit taking. Okay, seeing a little bit more action here. A little bit more. Lifting a bit more. Core Scientific starting to bounce. So it looks like a little profit taking in Core Scientific the last few minutes.
stocks are struggling to find their footing as we head towards the close today. Here to share his market playbook right now is Chris Harvey. He is the head of equity strategy of Wells Fargo Securities. Welcome back. It's good to see you. Good to see you too, Scott. How's this market look and feel to you right now? Feels a little choppy. Feels like we're looking for a catalyst. There's no real catalyst out there. And I think this chop lasts until we have earnings season because there's really nothing to hang your hat on. That long? Bonds are up, yields are up one day? Yeah, I think so. I mean, anything can change on a dime, obviously, but I don't see a ton of catalysts out there. What we need is earnings to get things higher until we have another earnings.
All right, so going to resume a little fade now, looks like.
For the power of the earnings cycle. And so I think we have to wait till the summertime, probably second week of July before we start making substantial headway. Wow. So substantial upside. So Fed meetings are and data is somewhat irrelevant. Yeah, I don't think the Fed's going to tell you anything that you don't know at this point in time. Fed's going to say, hey, we're following the data. We can follow the data too. The data's okay. The economy looks like maybe it's not as strong as people expect. It looks like people are getting very nervous about the consumer. And inflation looks like it's tame is not the right word, but it's not hot at this point in time. So what is the Fed going to tell you that you don't already know? Okay. I don't see that as a catalyst. I just see that we have to digest more of the information. We have to get the earnings season, and then we can start making some more substantial moves. You do have a big call, though, about some moves that you think viewers should make. Last time, you liked some of the reflation trades, right? And energy, industrials, and things like that. Now it's time to fade those? Or what? Talk to me. So what we liked, and maybe there's a misquote here, what we liked is we think the industrial space is a great place for stock picking. You have a lot of companies that are AI adjacent. You have a lot of companies that are tied to the super cycle, but for the most part, we haven't liked the inflation trade.
Okay, no follow through. NVIDIA dropping a little bit more. NVIDIA. Hopefully you took some profits off on NVIDIA. That's pulling back. Doji on the daily looks fine. The 1 minute, 2 minute charts look a little bit more ominous. They're not really. Been a pretty good day. We had a fade in the morning and a bounce afternoon. So that's not too bad.
What about tech, which is, back away? You've got some tech with communication. We just like the valuation in the communication space. We like the technicals in the communication space. And if you look at the fundamentals continue to power higher. Tech is really just a couple names. And if you look, what's driving tech year to date? It's NVIDIA. And most everything else is a secondary or tertiary trade. So I can't get behind tech right now. We're neutral in the space. We think that software is a little bit better than hardware, but we don't have real strong conviction with tech at this juncture. We're looking at utilities, and I think there's a debate in the market as to why they had the move that they did recently. Obviously, over a longer period of time, they haven't had nearly as great a move relative to the equal weight S&P 500. So just saying the move, I guess, isn't the most accurate. The recent move that we've seen those stocks really go off to the races to some degree. Does that continue? Should it? I think it does continue. It'll be a little bit of a bumpy ride. We upgraded the space at the end of the year. It was really washed out. It was oversold. We thought it could work for multiple reasons. We thought if rates go down, it works. We thought that just you could get an oversold bounce. We didn't really appreciate the issue around the electrification or the power trade. That has been moving it. A lot of people are asking us, hey,
Fake out.
looking at utilities that really outperform year to date. Do you want to take profits? We don't want to take profits at this point in time. We think the valuation is still compelling. We think the opportunity set is still compelling. And we think that the technical picture is still very positive. Overall, for the market, you think we can hit 5,500 and then maybe all bets are off?
Costco.
We think you can get over 5,500 this year.
we'll think about as we go through this pace, and what we're looking for is we're looking for the winners to keep winning. We're looking for the more profitable companies.
Costco, what do they have? Earnings? Costco.
That's what we're seeing. There's a massive, as you know, there's a massive secular trend. It's continuing to play out. We don't particularly like the economy. We don't think the economy.
Costco had earnings.
But if you're tied to that secular trade,
Okay.
we think there's still a tremendous amount of upside. If you're tied to the consumer, selectively can make money, but overall, I'm not sure why you'd want to be real aggressive on the consumer at this point in time. All right, it's good talking to you. I apologize for tripping you up there at the beginning. We'll do this again soon. All right, it's good talking to you. Wells joining us once again. Up next, we're tracking the biggest movers into the close. Christina's back with that. Tell us.
We got too many sales promotions hurting one retailer. Well, a freight company is moving in the opposite.
All right, AAOI. I see a bunch of trades on AAOI. Let's see what that looks like. AAOI. That's at the lows. PLCE. Nothing there. Cannabis. CGC. Nothing there. Okay. What's that? Dow Jones Transports. What's DJT? DJT. Trump. Oh, Trump Media. Okay. So Trump Media. Lots of Dow Jones Transports. DJT. Got a lot of speculation in this one. Off of the 50-day test. Tesla, CVS. Somebody's selling the 7250, 75 puts. I don't know if you're listening, Tony, but there's some trades on CVS that you might be interested in. Buying puts. Yeah, I don't know. Not really crazy about CVS. It's been trending higher, CVS. We have 17 minutes to go, and SPY is starting to get some legs now into the close. Bitcoin bouncing near VWAP. I don't know how effective VWAP is on Bitcoin, being it trades 24 hours. But it is above VWAP, just bouncing right now.
We're 15 from the bell. Let's get back to Christina Partsinevelos now. For the stocks that she is watching, what do you see?
Bath and Body Works, because that's one of the worst performers. Actually, worst performing stock.
So Scott's back. It looks like Scott Redler is back.
The Q1 earnings beat was really no match for its disappointing earnings guidance. Executives said on the earnings call this morning that they did have to issue more promotions.
Looks like Redler.
However, promised they've cut back on those sales.
Okay.
Demand has grown. Saya shares are up.
Day 4, 75% chance he goes home today. Then Red Dog 3.0 born. Huh.
They also posted a 16% year-over-year increase in shipments in Q1. The stronger results, I should say Saya is up about 6%, but the stronger results helping other freight firms like Old Dominion and XPO. You can see both up a little bit over 1%.
Thank you, Christina.
All right, nice little pop there. So more than likely some shorts. Looking forward to rollover out of a bear flag. Had to cover. Not much more. We've got about 13 minutes to go. 13 minutes to go. Pretty decent day. Pretty decent day. Volume has been pretty low, so not a big P&L day, but we got Carnival at the highs of the day, a D pivot. Let's see what we have anything on Carnival. CCL today. All right, this is CCL. Carnival looking pretty good, folks. Carnival, CCL. Carnival at the high of the day. Okay, the 17 call for Friday and January 2026, $1 million trade to buy the 20 call. The 20 call. Let's see what that looks like. January 2026, end of day with it at the highs. I wouldn't buy it, but January 2026. Is that 2026? That's what 2026, right? That I just post. Yeah, January 2026. All right, there's $3 chart, $3 at the highs. Looks like it's going to keep going. Those leaps look pretty good. If you're looking at them, those leaps look pretty good. Okay, Carnival at the high of the day, looking good. Carnival. Keurig Dr. Pepper, still going. KDP still going. KDP still going. Nice. KDP is still going. Keurig Dr. Pepper. Haven't drank a Dr. Pepper in months. I was going to say years. In months. All that corn syrup. But it does look good, though. Nice follow through. Big breakout. S&P is pushing a bit higher. CrowdStrike with earnings tonight, right?
And a friend of many of us, Ben White, has died at the age of 52. He was an accomplished journalist holding positions.
Oh, wow. Ben Weiss.
The New York Times and the
Ben White, rather.
Ben's partner Sarah posted on X earlier this afternoon that he passed away Saturday, June 1st, after a brief illness. Our condolences go out to
Wow, that sucks.
and his entire family.
Wow. Just shows you never know. What if it gets down to the 200 day? CrowdStrike, what if it gets down to the 200 day? I'd be interested on a bounce similar to what we saw with, what was it, a MongoDB? MongoDB, that one gapped down on Friday. Bounce in and out on that trade on Monday. Let's see. CRM also gapped down. That bounced pretty hard. That was a pretty good trade. I think there was a few of you that took that trade. CRM gapped down on Thursday, bounced Friday. Okay, S&P pushing a bit higher into the close. Keurig Dr. Pepper is just going vertical. Nice move. It's not a big move, but it is higher. Keurig Dr. Pepper. What are we going to do tomorrow? We're going to follow through, or probably an inside day. Just my guess. It is breaking out to new highs. Keurig Dr. Pepper. Let's look at the weekly. Okay, we got 7 minutes to go. 7 minutes to go. Weekly looks good for a round trip. Probably over the next 6 to 8 months, it probably could see 34. If you, I'm sorry, 39, 40, 39 to 40. It's already 34. 35 looks good. Keurig. Core Scientific at the highs, fading a little bit. Dell is back above 136, just above VWAP. Dell probably going to Dell's probably going to base a few more days, I would think. A better setup if it does base right here at the 50-day for another week, because then it'll be very clear when we break to the upside or downside. RSI has moved lower.
Closing bell market zone, CNBC senior markets commentator Mike Santoli here to break down the crucial moments of this trading day. Plus Kate Rooney on what's behind the Bitcoin rally, and Crippa Stevens looking ahead to PVH earnings. They are out in overtime as well today. Mike, I'll turn it back to you. So we have falling yields, falling stocks, and a little late day move here.
3 days in a row, we've had a low of the day between like 12 and 1 p.m. Eastern time. It seems as if now we definitely have this split market still. You have twice as many stocks down as up today. It's definitely more attention being paid by the market to hints of some economic slowdown beyond what we prefer. And so yields are down, but the sector makeup's not really following along the script, as we've mentioned. You know, banks down, small caps underperforming. But it seems as if the moves are mild enough.
Keurig at the highs. S&P trying to get back to the highs. 5,300 is a major level. Maybe we get up to that level. If we do get up to that level, I would expect puts to monetize to help lift us. Vanna, that Vanna trade kicks in when puts are monetizing and the dealers turn around and cover their short puts.
I think so. I mean, that's my takeaway from it. It's been a couple of days now where the script hasn't been followed on that front. And I guess that would be the
the way to interpret it. I don't know how else you want to withhold a little bit of judgment in terms of whether this is a new trend or whether it's a little bit of noise after you had a weird month-end move, and now that you have you kind of this quiet, apprehensive trading in the new month.
All right, Kay Rooney, pretty good rally in Bitcoin, both Bitcoin, Coinbase. I mean, the things that have rallied a lot week to date. Coinbase, I mean, is up, on the week, 8%.
Yeah, it's having a really good week. You've seen Bitcoin this week back above 70K, and it really had been trading in this tight range of at the high $60,000 level. It's been really sensitive to rates and the macroeconomic data as well. Anything that could affect the Fed's path, kind of similar to what you see in tech and high growth names. It did first cross 70K.
Okay, we got 4 minutes to go. 4 minutes to go. Bitcoin rallying. They're finally talking about Bitcoin today.
These riskier pockets of the asset class. If you look at the crypto proxy stocks, as they're often known, one of these mining companies called Core Scientific is up to more than 40% today. It announced a deal to expand into AI data center. That headline may have grabbed some attention and sparked the rally, but this looks like a short squeeze. It's a really highly shorted stock. About 88% of the available shares out there are shorted. The average stock, by comparison, is closer to 5%. And then you got MicroStrategy.
Looking for a pop end of day. S&P looks like it wants to pop a bit more. Oh, nice, nice, nice. Okay.
Bitcoin, for example, is an indicator or barometer of risk. Well, it's not like a ton of risk taking in the market.
It doesn't feel like it is running. It doesn't feel like it. Although maybe the closest correlation with Bitcoin since the middle of last year has been NVIDIA. Literally one for one. And NVIDIA is another one of these things where, it trades in a $26 range there, like a 2.5% range for no particular reason. And you also had the intraday rally in NVIDIA. That helps out the indexes. So I don't really think that's necessarily causal, but it just shows you that there's a little bit of a scramble setup right here with some of the weird macro moves overnight too, in terms of Mexican markets and currency and Indian money. Yeah, I just would point that out as a way of saying people are a little bit on the defensive. If you have conviction about where you're going in terms of macro and in terms of sectors correlations, it got a little bit upended this week.
I like the word you use, scrambled. I think that's perfect to describe what we've seen. BIPA, PVH. So, yes, CrowdStrike gets a lot of the play today, but don't forget about this one.
That's right, Scott. And PVH is moving lower ahead of its report. And what's been a pretty choppy earnings season for retailers, the Calvin Klein and Tommy Hilfiger parent warned in April about the softening consumer backdrop and conservative wholesale environment it saw at the start of the year, saying it led to a cautious approach to planning for 2024. Now, PVH previously guided to an 11% decline in revenue for Q1.
All right, starting to rally into the close. All right, we got less than a minute. There goes, all right, nice little move there. Carnival, high of the day, Carnival.
Stevens, Mike, we'll turn back to you. I mean, we're going to be looking forward to a jobs report. JOLTS today gives us a clue on how tight or is not the labor market. Yeah, you look at it.
Nice volume end of day on Carnival.
This is the more balanced labor market that the Fed's been playing for and pushing for. It's kind of here, and it does sort of.
All right, that's a wrap. Hope everyone had a good evening and a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Tuesday, the 4th of June. We'll be back tomorrow, June the 5th. I hope you're here with us. Hope you had a good day. Take care. Have a great evening, everyone. Be safe. We'll see you in the morning. Ciao.